So we're getting those earnings coming up this week,
Yeah.
and you own shares of UNH. What are you going to do with either of those stocks?
Yeah, I mean, Home Depot, look, I think it's just a challenging time for housing, but I do think that Home Depot has done a really good job in a challenging environment. We've had 8 straight negative same-store sales numbers. They've never seen that ever in the company's history. I think at the very least, you have easy comparisons, but I think they're doing a really good job with the pro business, and that's over 50% of their revenues. So that's a good mix there, as opposed to Lowe's, which actually has more do-it-yourself. So I think Home Depot should do better than Lowe's, but we're all waiting for the housing environment to get better, and you need lower interest rates for that to occur. I still think, though, that housing is a great long-term theme because we are 5 million homes short in this country, and the home builders, if you talk to them, they've been underproducing for 15 consecutive years. So I do think that housing, when rates come down, housing will actually recover. And in the meantime, you need to renovate, you need to replenish some of the things in your home if you're not buying a new home. And I think that sets up well for Home Depot. On United Healthcare, it's a challenge, certainly. There's a big overhang. First and foremost, the company hasn't even confirmed that there is a new launch, if you will, by the DOJ. It looks like it's civil versus criminal. That means likely more of a monetary settlement versus changing of the business. And they've got $20.7 billion in free cash flow, so they can afford to have a monetary settlement. Obviously, this is not good news, but coding has been an issue for years and years in this industry, and they actually now have new plans in place, new rules in place that they're phasing in between 2024 to 2026 that should help with this situation. So
The
I
stock's
just
down
think
almost
it's 6.5 times
12% in 5
EBITDA.
days. Yeah, what do you do with
I
that
know.
stuff?
I'm gonna buy it when I can. I'm restricted just because I've been talking about it for a couple of days now, but I will buy it. 6.5 times EBITDA, Becky, for the best-in-class company in the managed care space. Historically, that number has been 12 times EBITDA, so you've really cut the multiple in half as well.
Best in class is measured how?
Market share, execution, management. I know the industry is under a lot of stress right now, but within the industry, these guys are the best at what they do.
All right, Stephanie Link, thank you.
Thanks.
Coming up next, New York Congressman Richie Torres endorsing Andrew Cuomo for New York City mayor. Even though he hasn't officially entered the race, he's going to join us after the break. He's been taking on Kathy Hochul, making some fascinating comments about what's happening in the state of New York and the city. And then small caps in a rut, the Russell 2000 trading below its 200-day moving average. A closer look at the move lower and what it could mean for your portfolio. Squawk Box, we'll be right back. Have a good experience.
New York Congressman Richie Torres endorsing Andrew Cuomo to be the New York City's next mayor. Congressman,
Cuomo?
Torres
God.
joins us this morning to talk about this and much more. I think that we have pointed out many people are able to have pretty solid comebacks in politics. The further we get removed from, I remember some of what it was, but I also remember as a governor, he was pretty well thought of in terms of just being, of operations, of being, there's, I think, a little bit of nostalgia for how he was as a governor versus the current governor. Why are you doing it? He's definitely like a centrist in terms of immigration and Israel and other issues like that. Much more centrist than some parts of the Democratic Party right now.
Well, look, I mean, Andrew Cuomo is a common sense Democrat who represents.
That's an oxymoron.
Well, no, it's not, because most Democrats do have common sense, and for me, the
Most.
most important virtues in politics are competence and courage. And Andrew Cuomo has the competence to run New York City in a moment of crisis, and he has the courage to stand up to the extremes of American politics, whether it's the far right or the far left. There's a mayoral candidate who openly identifies with the Democratic Socialist of America, which celebrated the mass murder of Jews on October 7th. And so when it comes to confronting political extremism in New York, when it comes to confronting the crisis of crime, we need not a nice guy, but a tough guy like Andrew Cuomo.
Is this an endorsement of Governor Cuomo?
Who is
or
this guy?
Of Mayor Adams, in your view?
Look, it's both. New York City's in crisis. 4 deputy mayors have resigned. The city is less safe than it should be. In the subway system, the murder rate is at the highest level in 25 years.
Because you got a Democrat
What we
running
need
it.
now more than ever is the kind of stable and strong and steady leadership that Governor Cuomo can provide. And the effectiveness of Andrew Cuomo as an executive need not be taken on faith. Right? It is a fact. Right? The redevelopment of Moynihan Train Hall is a fact. The redevelopment of LaGuardia Airport is a fact. The redevelopment of Javits Center is a fact. And so
A lot
we
of
as
facts there,
New Yorkers,
buddy.
Every day we live and see the legacy of Andrew Cuomo as a great builder of New York City.
Can I ask you just about Adams right now,
Sure.
and how you think about him? I have made the comment that our mayor is being held hostage by the White House. I mean, it's sort of a remarkable situation.
Yeah, you have, because you're an idiot.
Prosecuted at any moment if he does something that this White House doesn't
But
want.
the congressman is probably in favor of you call it a quid pro quo. The quo that Trump wants from Adams, you want as well, and that's tightening up immigration and crime.
Well, I want a mayor who could govern independently of the far right, and Donald Trump represents the far right. And what I found
No, he
striking
doesn't.
is that Donald Trump made the decision not
He
to
represents
pardon
80% of the Americans, you
Adams,
dick.
or to permanently drop the charges, but only to do so temporarily. And so the fear of a re-indictment keeps Mayor Adams permanently under the thumb
So
of Donald Trump.
I've also made the argument, I think politically, at least in this city, it hurts Adams rather than helps him, insofar as the citizenry of the city says to themselves, we can't have somebody who is directly under the thumb of somebody else. But I understand, there's part of me that can rationalize why Adams would accept a deal.
But I'll
like
come
this.
back to this. The reason you left the Progressive Caucus was because the far left of your party is soft on immigration, not as pro-Israel as it should be, soft on crime. So the things that Trump is demanding from Mayor Adams are the same things that you want, and the reason that you call it far right. What is immigration far right? Is crime far right? Why are those far right things?
Well, I would argue the attempt to defund Medicaid in the tune of $880 billion
or
is
defunding the
excessive.
police. I don't know.
But I would say
They
the issue
defunded Medicaid,
is
you
not
dumbass.
his cooperation with the Trump administration, which is a policy disagreement. The issue is the quid pro quo. Like, that to me is profoundly unethical. And we have a mayor who's lobbying not for the interest of New York,
Are you running for
but
governor?
for his self-preservation.
Are you running for governor?
Considering running for governor.
Considering, and what would you continue to distance yourself from that flank of from the AOC? I don't know, what do you want to call it? From the Progressive Caucus?
I'm not,
You blame them for losing the
I don't think
election?
anyone connects him to the
Well,
progressive
no, he already
side.
left, because he left. Yeah, you left the Progressive Caucus, right?
Particularly on the issue of Israel after October 7th. Yeah.
Well, that among other things, all right? Immigration or not so much?
Look, for me, no state saw a greater swing toward Donald Trump than New York. And that to me is not a coincidence. That's a consequence of failing governance on the part of Kathy Hochul. Like the majority of New Yorkers feel we're heading in the wrong direction.
Right.
We feel our
Who
quality
is
of
this
life, our
guy?
public safety, our affordability are declining, our cost of taxes are rising. We're paying more and more for less and less. In 2014, the state budget was $142 billion. Today, the governor proposed a $252 billion budget. There's not a single New Yorker who has seen a $110 billion improvement in the delivery of government services.
I got maybe a complicated one for you, especially if you want to run for governor. What do you think of congestion pricing?
Look, it's a necessity because congestion pricing would generate about $1 billion of revenues, which is a bondable funding stream for a $15 billion capital investment in the MTA. And for me, the preservation of our public transit
Right.
system is one of the most important
I
responsibilities.
say
of the
complicated
government.
because obviously
It's unpopular, yeah.
you're going to require votes from folks upstate and in Westchester and Long Island and other places. She's in New Jersey.
People, no, even people who are in the boroughs here who and now have to pay a toll and a tax where they never did before. I mean, it feels like it hits pretty hard on the heads of blue-collar workers in particular who have to come into Manhattan for their jobs.
Look, I would never downplay or deny the cost, but the future of our city depends on a fully funded, functioning public transit system. Our public transit system has over $100 billion in capital needs, and I feel it's irresponsible for Donald Trump to create a $15 billion hole in the MTA's capital budget without an alternative that fills the
Do you think
gap.
it's going to have any economic impact on the city? That's negative. I mean, some people would argue that it could create a negative impact if you feel like there's less people that can get into the city. Other people would argue that if you can create the productivity gains as a result of cars being able to move in and around and actually the public transport system working better, that unto itself should make the city a lot better.
It's hard, it's too early to tell. I mean, we know that there's been, congestion has been radically reduced in the central business district.
I'm glad I don't live in New York.
Emergency times have improved, but it's too early to tell. But ultimately, preserving the public transit system should be foremost among the responsibilities of a government.
Why don't you get people who are using it to actually pay instead of jumping over the turnstiles and not paying on the buses?
It's not either or. I think it's all of the above. But I agree, we need to crack down on fare evasion.
Congressman, thank you.
Always a pleasure.
It's
Come on
good,
back.
good to have you
Lots
in,
to
and
talk about.
you're nearby. Yeah, you could be here easily most times, right?
Monday mornings on your way to DC.
Yeah.
What'd you do last week? Can you send me a list of what you were doing last week? Was there? Did you get a lot done?
I did. I was in the district
Okay, go on.
and just advocating.
Top
Are
five.
you going to
things.
have to send an email to Elon or no?
No, because I do not report to.
What about
Elon
What about your
Musk.
staff?
No, my staff reports to me, and I report to the people of the Bronx.
What do you think of these emails?
What do you think he thinks?
Elon Musk is out of control. Look, I'm all for removing fraud, waste, and abuse from the government, but that means applying a scalpel. He's applying a machete. I mean, he's shutting down agencies, even at the cost of violating an act of Congress. So I strongly disapprove of what he's doing.
Okay, come on back. We'll
Of course.
debate it more. You bet.
Thank you, Congressman. When we come back, small caps in focus as the sector enters correction territory. We've got a breakdown of what's driving that move next.
Yeah, what's driving
Then
it, baby?
President Trump's idea
You
of
look rough
adding
today.
Bitcoin to the sovereign wealth fund. Why Anthony Pompliano says it is the single most important thing for crypto assets at crisis. Squawk Box. We'll be right back.
Becky looks rough today. The market's up this morning. Today's pivot point is 597.56. Low support 592.13 to 594.90. And a strong buy at 589.01 to 592.13. In my opinion. We should consolidate today and then have a nice bounce if the market's bullish. And appreciated the Friday dip, which was unnecessary, but not really. I still think we're a little overbought. Stephanie Link's sad that we don't have government giving her money. They call it stimulus. I call it debt. Why would you need stimulus if you have such a strong economy? I would ask her that question. Why do you got to keep printing money to make you happy?
A rough patch. The Russell 2000 had its worst session on Friday since December 18th, falling 3%. Frank Holland joins us now with more on all of it. Good morning.
Good morning to you, Andrew. So small caps, like the rest of the market, looks set for a rebound.
Frankie,
today.
baby.
Russell 2000 futures moving higher, up over 3/4
You're
of
eating
1%.
good, buddy.
But of course, on Friday, as you mentioned, the Russell had its worst day of the year, moving at 10% below its 52-week high that happened back in November after a big post-election pop as part of a Trump trade. You can see here, worst performing indices since it hit its 52-week high. Also worst performer since the inauguration, down more than 3% since the inauguration again. Worst performer of the major indexes.
Nailed Oxy last week.
So that 5-year inflation rate of 3.5%, the highest since 1995, that's the 5-year outlook from the Michigan Consumer Sentiment Read, was one of the reasons for the decline. Tariff concerns also another reason, both of them very troubling for the interest rate sensitive small caps. It's really a trade that's dominated by cyclical sectors. The concentration of financials, industrials, and materials in the Russell is considerably higher than both the S&P 500 and the NASDAQ 100. Probably not a surprise there. That inflation rate has only added to the lack of clarity about when or even if we can get rate cuts. One of the reasons we have seen a major shift in investor sentiment. State Street says small caps have seen net outflows of nearly $1.5 billion year to date after seeing inflows of over $11 billion following the election. You see the numbers right here. So again, big shift when it comes to sentiment. Coming up this week, we have a number of notable small cap names reporting earnings that have seen their shares under pressure in recent weeks. They include chipmaker Ambarella. You can see, we don't see it right here, but those shares about 8% off their 52-week high. Meme stock AMC and Beyond Meat, all of them well below their 52-week high.
Okay. Frank, appreciate it. Transport's also moved into correction territory, and that leads, I think, a bit to the question of, do we think that the sector is ultimately rebounding?
Well, you know, that's a great question. So if you look here on Friday, you see a lot of big-time transport names under pressure. FedEx, a key Dow transport component, also Expeditors down here trading lower. But then if you look at today, you are seeing a rebound. Now, one of the reasons for the declines on Friday was kind of the Amazon effect, at least on FedEx, Old Dominion, Cyan, XPO. These are all less than truckload truckers. Amazon posted a job for an Amazon Freight LTL manager, leading to a lot of concerns about these stocks. But you can see if you look at the pre-market today, we are seeing a rebound when it comes to these names. FedEx really the exception, but some rebounds when it comes to these names. A lot of analysts putting out notes believing that that risk is overblown, and every couple of years we see sell-offs in transports related to Amazon risk. Important to note, though, Expeditors kind of a different story. Allianz raising their stake in Expeditors this morning. That news crossed the wire this morning. Those shares up just about 3.5%, one of the leaders in the S&P 500. But the Amazon effect hitting transports, a lot of analysts saying it was actually overblown and expecting a rebound, actually an upgrade from Stifel when it comes to a number of these same names.
Okay. Frank Holland, thank you, sir.
Thank you.
Appreciate it.
Coming up, we're going to talk crypto with Anthony Pompliano. Up next, though, the CNBC Changemakers list without Julia Borston as a preview. Hey, Julia.
Joe, good morning, Joe. 50 women driving change across everything from AI to education, healthcare to entertainment. We'll reveal the list. That's coming up after the break.
Oh, okay, I got the wrong one on. Oh, what the fudge? There it is.
And restrictions apply.
Today, we reveal the 2025 CNBC Changemakers list. Our Julia Borston joins us right now with more. Hi, Julia.
Hi, Becky. We are spotlighting 50 leaders transforming business and society. Our list includes CEOs, founders, and executives selected from hundreds of nominations based on their reach, impact, and signature achievements in the past year, driving change in their organizations and beyond. The 2025 Changemakers span 14 sectors, including 12 startup founders leading companies with a total valuation of more than $11 billion. They've raised more than $2 billion. 9 public company CEOs oversee a combined market cap of about $385 billion. 3 women are leading nonprofits. 2 women are leading tech innovation through government, and 3 women are shaking up sports. This year's list includes 4 founders taking aim at women's health and menopause, and 5 women are shaping artificial intelligence technology. Each has driven meaningful change in the past year, aligning purpose and profits.
No way.
And this group is leading the way for other female changemakers. A majority of women on our list say that at least half of their direct reports are women. You can find out more about our CNBC Changemakers at cnbc.com/changemakers. Becky?
Julia, what are some of the key trends this year?
One thing we saw consistently across all of the different industries represented on this list is this idea of doing good.
Oh, please. Why do you have to be so political? No.
Who runs a company called City Block Health.
We don't care what gender you are, what race you are.
By really making sure that their whole health is addressed, including mental health. And then you have people like Jennifer Garner, who, yes, she's famous as an actor, but she also co-founded a company called Once Upon a Farm that is creating healthy food options for kids. They did over $100 million in revenue. And what she's figured out is in the success of this company, she could also have a huge positive impact as well.
Julia, thank you, congratulations, and we look forward to seeing the rest of the list.
Coming up, lots of news in the crypto world to discuss, including one of the biggest ever crypto heists. Anthony Pompliano is going to join us next. And then later, former Treasury Secretary under President Obama, Jack Lew, is going to join us to talk inflation, Doge, and much more. Squawk Box.
Assurance.
Connection.
Welcome back to Squawk Box. Cryptocurrency exchange Bybit disclosing on Friday that it was hacked in what could be the largest crypto heist ever. Join us right now to discuss the crypto market and what's just happened. Anthony Pompliano is the founder and CEO of Professional Capital Management and author of How to Live an Extraordinary Life this week. Anthony is hosting New York Bitcoin Investor Week, which we'll get to as well. Good morning. So how much should we worry about the safety or security, if you will, of crypto after this situation?
Well, look, anytime that you have a hack, people obviously get worried about this, but the way that I describe it, the Treasury and the Fed has never been hacked. The further you get away from the creation of the money point, then you get less secure. Banks have been hacked, armored cars have been hacked, or people have had money stolen from their wallet. Same thing in crypto. The blockchain itself, the Bitcoin blockchain has never been hacked, but if you go and you take that and you put it in an exchange or you put it in some sort of custody solution, those can get hacked. And so I think it's important to pay attention to. The most impressive part to me, though, was this was a $1.4, $1.5 billion hack. Customers obviously were worried. They ran to the exchange. They withdrew $4 billion, no problem. And so obviously the exchange had the money.
Right.
Usually what we've seen is when these things happen, the exchange gets caught, not having the money or there's some sort of issue. But I think that really the system kind of worked how it was supposed to, and now they're going to work to try to recover that $1.4 billion that was taken from them.
What are you thinking right now, just in terms of price of Bitcoin? We keep looking at it. It's off the highs. Some people have talked about it going to $250,000, $500,000, $1 million. Where are we on that journey, if that journey is right? We've had other people come on and say there's a floor at 70,000, and we still have these big debates about strategic reserves being built, but we also have big questions about what the Federal Reserve is going to do.
So I think if you look trend, not specifics, right? Everyone's going to come out with these price targets. I have no clue where the price is going to go in terms of exact number. But what I do know is that in these bull markets historically, we've seen very big drawdowns. In 2017, Bitcoin went up about 20x, but there were 6 different drawdowns of 30% on the way to that 20x in a single year. What we've seen lately is actually those drawdowns are much more muted. So you're getting about 15% drawdowns. And so what that tells me is, one, there's a persistent bid for people who want Bitcoin. But second is that there likely is going to be less volatility to the upside as well.
Right.
Now, the beauty of Bitcoin is that less volatility to the upside means that maybe we go up 10x off the bottom.
We just talked about it last week, Anthony, that finally it's acting like something that almost could be used as a currency because it's been 95,000 basically for 8 weeks. Do you think if the Fed doesn't cut this year, is there any reason for Bitcoin to go up? It's so, I mean, it just, to me, it looks like every time it looks like an easing cycle is coming, that's when it goes. And when it looks like it isn't, even though it's counterintuitive because you get a hot inflation number. That's why you supposedly own things like gold and Bitcoin because of inflation. But a hot inflation number means the Fed doesn't cut. So,
Yeah.
and then Bitcoin goes down.
Yeah, there was this great study done by this guy, Sam Callahan, and what he basically said was Bitcoin is the most sensitive asset to global liquidity. So global liquidity is really, really important to pay attention to.
Well, that's just a risk-on thing.
To a point. Now, the other thing I'm paying attention to is this idea that's being popularized by Jim Bianco, which is the Mar-a-Lago Accord. And basically the idea is that the dollar's too strong, and instead what we're going to use is we're going to use tariffs, we're going to go and we're going to use the sovereign wealth fund, and then we're also going to get payment for security. Those 3 things, the general idea is to reduce the debt, get interest rates down, and weaken the dollar. If you're able to do that, I think that would be very good for Bitcoin and for stocks. And so the question is, how successful are they going to be in implementing this plan? We know the sovereign wealth fund is coming. We know that they're implementing the tariffs. Can they get the payment for security in Europe is another question. But I think that these are all things that they're trying to do, and that would be good for asset prices.
The SEC dropping its case against Coinbase. How significant is that in terms of what you think is a relatively, I imagine, hands-off policy at minimum for the crypto industry, at least for the next 3.5 years?
Yeah, so Coinbase specifically, I don't think many people were not buying Coinbase stock because they had this lawsuit going on, this regulatory issue. And when the lawsuit was dismissed, you didn't see a big pop in the price or anything. So I don't think that from a company perspective, people were really worried about it. It was kind of par for the course. If you were a public company in crypto, you likely had a tussle with the regulators. But what I do think it does is it signifies a changing of the guard, right? You're going to drop this and they're saying, hey, moving forward, we're going to create clear rules and regulations. We want to actually encourage this innovation. We want to be supportive of the industry. And so the dropping of that case is
And that's
pretty
in
big.
large part because the industry decided to support Trump and put a lot of money into this administration.
Look, one of the weird
behind this administration.
Yeah, one of the weird things about, I think, business and finance is people have become much more political. And when I get asked why did people become more political, I always say that I don't think business and finance people were more interested in politics all of a sudden. I think what happened is that politics and regulators started to meddle in business and finance, and those people realized either we start to participate here or we're going to get steamrolled.
What do you make, though, of just a broader conversation about money and politics? Because clearly the money is what's had a huge impact, right? There was not a lot of money going into, the Biden administration, and they had whatever their view was of crypto. Now there's an administration that had a lot of money put behind it.
Yeah, money in politics is a really interesting thing because on one hand you have the person who actually raised less money and spent less money became the president in this election, but on the other hand, definitely money is something that is going to change people's mind. But I think that the more important thing for Trump and his administration is that they all actually own these assets. If you go through the cabinet, if you go through a lot of the nominations, they own Bitcoin. And so
is that not trouble you, though? Because I think that you and others have come out quite publicly and said, there have been questions about Nancy Pelosi and her husband, and questions about all sorts of folks in Congress who have owned different stocks or assets, and people have said this is totally wrong and totally conflicted. Now this administration owns all of these assets, and everyone's like, it's fine. And actually, it's a good thing because they understand it better now.
So that's the double-edged sword, right? Is I actually don't think people have a problem with politicians owning stocks. One of my favorite stats is Ken Langone once gave an interview, and he said that his average holding period is 42 years. People aren't really worried about what decisions he's making on a day-to-day basis. I think the problem that people have is when you're actually actively trading around certain events that are occurring. So it's the action of trading versus just holding for a long term. Same thing with Bitcoin is if we have people who are actively trading Bitcoin based on different things that politicians are doing, I think that would be a problem. But if people are just buying, holding, dollar cost averaging into...
How do you feel about meme coins then? President and the president's wife.
Yeah, I think that meme coins are a pretty big distraction from what actually is going to end up being the work that people need to focus on. And you see that, Strategic Bitcoin Reserve, I don't see anyone talking about putting meme coins in there. I think that there is an understanding that there's kind of an entertainment angle to a lot of this industry, but the really serious people, the people who want to go and actually have a positive impact on the country and on the economy, they're focused on Bitcoin.
You gotta go. What you got this week, though? Just give 30 seconds.
Bitcoin Investor Week. We've got a great lineup of folks all week long. It is the largest collection of sophisticated investors trying to learn about Bitcoin, and hopefully we'll figure out some banks and stuff that are doing more things with Bitcoin.
Great. Thank you. Appreciate it. Good to see you.
When we come back, the Department of Justice opening a probe of United Health's Medicare Advantage billing practices last week. The Cleveland Clinic's Toby Cosgrove will join us next. And former Treasury Secretary Jack Lew joins us for a wide-ranging interview. Squawk Box will be right back.
Wall Street rate NVIDIA a strong buy today. Yet why then are so many legendary investors quietly ignoring that advice and instead selling the stock hand over fist? Every billionaire on your screen has recently sold NVIDIA. Some have offloaded millions of shares. And mark my words, this is bigger than NVIDIA. Hedge funds are quietly selling all of their tech stocks at the fastest rate we've seen since 2016. It begs the question, what do they know that you don't? My name is Mark Chaikin. I helped build 3 indices for the NASDAQ during my 50 years on Wall Street. That means I know how to recognize these signals from the tech market and exactly what they mean for you and your money. I explain everything in my new market briefing, including the truth of what's going on with NVIDIA today, and the specific stock I recommend you buy instead. I'll give you its name and ticker when you visit the website below. NVIDIA has been the most talked about stock in the market, and for good reason. It's led the AI revolution that has taken the US stock market by storm. Since they announced their AI-powered computer chip in 2023, NVIDIA's stock has been on a history-making tear, officially surpassing Microsoft to become the world's most valuable company. Today, however, many investors are worried the tide is changing. NVIDIA's day in the sun may soon be coming to a dramatic end. And as a result, I predict a different under-the-radar stock is primed for big potential gains from this moment on. To get its name and ticker 100% free, simply visit the website below.
why you started your business, your goal is to keep on growing. And with the help of financing from Capitus, you can meet all of your business goals. Because at Capitus, we finance the legacy builders, the creators, the freedom chasers, the opportunity seekers. At Capitus, we finance small businesses.
Get invested. Join the club.
The value you're going to get from making better investments more than outweighs whatever the cost of a membership is.
Join the club. Last day for new member savings. Go to cnbc.com/joinjim now. Terms and restrictions apply.
Welcome back, everybody. Shares of United Health moving in the pre-market once again today. That comes after serious allegations last Friday that the Department of Justice is investigating the company's billing practices in relation to Medicare Advantage. Stock, if you're looking over the week, was down by 10.5%. According to the Wall Street Journal, at issue is a practice by private insurers like United Health that's called upcoding. That's where the insurer overbills the government and therefore the taxpayer by adding diagnoses to the patient that are designed to trigger additional payments to the insurance company. For insights on this complex issue and possible ramifications for the wider industry, we want to bring in Dr. Toby Cosgrove. He's former CEO and current executive advisor to the Cleveland Clinic. And Toby, it's great to see you here today.
Nice to be here, Mike. Thank you.
This is pretty complicated. You start wondering what it's all about. This was not just UNH that sold off last week, but also companies like Humana and CVS, other insurers. A lot of questions about Medicare Advantage program. What's happening here? What can you tell us?
Well, I think it's really interesting what we've got here. A lot of people, I don't think, understand the origins of it and the differences between just Medicare and Medicare Advantage.
I don't.
It turns out that back in 1965, Kennedy was the guy who signed, brought Medicare around. And at that point, the people who were over 65 didn't have any insurance at all to cover them. Now, 2% of the people in the United States don't have any insurance to cover them. Things went along well, but they were realizing that it was costing a lot of money. And so 30 years later, the Clintons brought around what they called Medicare Advantage. The idea was to improve the quality and to bring the private sector in to make it more efficient than the government could do. Now, several interesting things happened out of that. First of all, there was some efficiencies brought. The number of hospital admissions for Medicare Advantage dropped 50% compared with just straight Medicare. There was a 20% reduction in the number of people going to the emergency room. There was much more wellness brought in, but and people flocked to it. In the last decade, the number of people who have Medicare Advantage has gone up, doubled in that amount of time, and now 54% of people over 65 have Medicare Advantage. Now, the reason that they're interested in this is because the co-pays for Medicare Advantage were substantially less for the individual than they were for just straight Medicare. There's bigger co-pays there. But the disadvantage is that it's costing more. It's costing the government more. So what they did is they brought in the government to essentially administrate the Medicare and all the insurance companies.
We brought in the government to
The
take care
government brought in, I'm sorry.
Okay, the government originally brought in private industry to try and make it more efficient.
Exactly, and that's where all
became
the,
more efficient on some places, but then the cost ballooned there too. So what happened?
exactly. And so what you look at now is that it's costs about $100 billion more, or 30% more than it would if you were in straight Medicare to the government.
Why is that, and what is this practice of upcoding?
And part of that is what has been, people are upcoding, and the risk scores are going up, as you explained at the beginning here. And that is widely used throughout the industry. Some companies more than others, but there has to be a solution to this.
Is it fraud? Like these companies, these insurance companies saying, okay, we're going to add these diagnoses on because we get paid more for that, even if you don't have the diagnosis. That sounds like straight out fraud.
Well, I'm not sure you call it straight out fraud, but I think everybody has done it, and it is something that does benefit the insurance companies, and
How is it not straight up fraud? I mean, I'm giving you a diagnosis that you don't have because I'm gonna make more money from the government.
well, maybe you don't have, but maybe you do have, and it's not treated. I mean, for example, you might have obesity.
Diabetes, and they argue that a sort of an early diagnosis of all these chronic conditions is exactly what you're trying to do to keep down costs long term. But then you throw in I don't remember the common one. It was hormonal something or other that you don't even need to test for, and it's very obscure, but it jacks up the rates that they can charge.
It just sounds like a game of whack-a-mole where the insurance
Yeah,
company, the government tries to say, okay, we're only gonna pay for these things because we think this leads to efficiencies. The insurance companies figure out, okay, here's how we game the system again.
So I think this is an abuse, and the question is really how you fix it. And it's interesting that MedCap, which is an independent government agency, came along and said, here is the approach that we'll do with this. And we will reduce the amount of upgrading, if you will, of Medicare patients. And we're going to do it in a two-pronged way such that people who are abusing this more will get more of a reduction. People who are using it less will
People
not.
meaning insurance companies, because it's not the patients who are doing the abuse.
That's exactly.
So if you are an insurance company that does a lot of this, and maybe this is the department, we still don't know, we're just guessing that the Department of Justice investigation into this will aim to put a chill through the rest of the industry and keep insurance companies from doing this?
Yeah, but I mean, I think you have to have some sort of a way to do it, and I think MedCap has a very approachable, fair way to do it, so that people who are using it a lot are penalized, or companies that are using it a lot are penalized more and reduced more. So I think that there's been a lot of good that has come from Medicare Advantage, particularly for patients. But there's also been some abuses.
Yeah. Dr. Cosgrove, we're almost out of town, which is crazy. Come and explain the most complicated thing we can possibly think of and do it in 6 minutes. But is this something that's fairly common practice among hospitals, among doctors, among insurance companies? I mean, I can think of a few instances myself where, you can't get services, you can't get therapies for certain things unless you have a special diagnosis that maybe doctors give out freely because they understand that's the only way to get the system to pay for the services that are needed.
I frankly don't think that this is common amongst doctors and hospitals that do this. This is what we're looking at here has brought this to attention is insurance companies.
Do you think that Medicare itself, by definition, because it's not, I mean, you said bringing in Medicare Advantage at least puts a profit incentive on, or a private sector concerns on a government program. I mean, it's big, it's bulky, you go over budget and you just tax people more. It by definition is something that is probably ripe for abuse, waste, and fraud.
Yeah, I think that the profit motivation came in here.
And that can backfire,
and that has potential for problems.
But there's also the situation where the government won't pay what it costs to fix people on some issues.
That's a different issue. That's denials that I think you're talking about here.
No, I mean just pricing in terms of what it costs for the doctor's time, what it costs for the hospital, what it costs for those things.
Well, clearly Medicare and Medicaid pay less than it costs the hospital.
Should Medicare be keeping every 90-year-old alive for another 6 months?
That's an ethical issue, and on a personal basis.
Zeke Emanuel.
Right, it's the death penalty.
75. You're out of here.
I hope not.
They're complicated questions.
This is a complicated issue.
Yeah.
But there is a solution for it. There has been good things that have come from it, and I hope it gets remedied.
Who's got to fix it? And can you do it?
Can I do it?
Yeah.
No, I don't.
No interest in going to Washington to fix all this?
It'd be nice if the pharmaceutical industry could fix it.
No, I don't think I'm going to be going to Washington at this stage of my life.
It'd be nice if
we got to get the right guy in there.
It'd be nice if we had the right pill for everything, wouldn't it? That's why we do not want to uninnovate. But they got to stop advertising constantly and spend the money on innovation. If I hear a Jardiance, if I see one more group of full-figured people dancing around following each other. What the hell is that? Why do I need to watch that? Why do they have to advertise that? Why can't the doctor just tell them they need it?
Well, I think that the people, the pharmaceutical company clearly recognizes that they can create demand.
It's the wrong way to spend the money.
So you know where I'm on that. We agree, but I thought you'd be in like some kind of free speech land where corporations should be allowed to do whatever they want to spend all the money.
They should be, but they should hear about it from us. And we don't like hearing and, every song that's ever been written is now in your those worm songs.
But I think there is an issue.
Earworm.
Go ahead.
There is an issue here that even $100 billion in the greater scheme of almost $5 trillion in healthcare is a small potatoes, really. And you have to begin to look at the bigger picture. And the bigger picture is going to be, can we embrace AI to help in a major way reduce the cost of healthcare, improve the quality, democratize knowledge, and get people's and get more efficient care to more people. And I think that is the bigger issue that we're dealing with in healthcare right now.
Agree completely. Dr. Cosgrove, thank you. We really appreciate your time. Hope to see you again soon.
My pleasure. Thank you.
Meantime, we've got some breaking news right now from Robinhood. Want to get straight over to Kate Rooney, who joins us this morning. What's going on?
Andrew, good morning. So the SEC is now dropping its investigation into Robinhood over its cryptocurrency business. The brokerage firm just saying that the agency sent a letter last week explaining that it had concluded its investigation and does not intend to move forward with an enforcement action. This does follow a Wells notice that was sent to the trading firm in May of last year. Those typically inform a company or a person that they are under investigation, and they tend to come before a lawsuit. Robinhood's chief legal officer, Dan Gallagher, who was also a former SEC commissioner, stated in his statement this morning that, quote, "We applaud the staff's decision to close this investigation with no action." And he says this investigation never should have been opened. Robinhood Crypto, he says, always has, always will respect federal securities laws and never allowed transactions in securities. He also goes on to say, as we explained to the SEC, any case against Robinhood Crypto would have failed. He says, we appreciate the formal closing of this investigation and we are happy to see a return to the rule of law and commitment to fairness at the SEC. This is, guys, the latest win for major cryptocurrency companies in this new administration. Many backed Trump's campaigns, and you're seeing a lighter regulatory touch here. Companies had a pretty tense relationship, to put it lightly, with the former SEC chair under Biden, Gary Gensler. Many complained of what they called regulation by enforcement instead of the agency setting any type of clear rules or guidelines. It does follow the big news, guys. Last week, with the SEC dropping its lawsuit against Coinbase. And Brian Armstrong talked about that with you guys. Crypto, it's becoming a bigger part of Robinhood's business as well. Crypto transactions were up about 700% when they last reported for the fourth quarter at least. It was a huge driver of revenue in that quarter. Stock, last I checked, was up slightly, almost 3% pre-market, guys. Back to you.
Kate, so here's the complication, and I'm curious how you think about it. On one side, it may very well be that these enforcement cases and investigations were wrong-headed to begin with. That may be. I have no idea, right? And then on the other side, we're seeing that most of the crypto industry spent an extraordinary amount of money to get this new administration into office, which is now dropping these cases. And so there's sort of this very interesting question about the credibility, both of the initial decisions and what drove those, but also these decisions and what is driving them.
That's key context here. I mean, it's Coinbase especially. I think Robinhood was less active on the lobbying side, but Coinbase led this charge really against the former SEC. I mean, Gary Gensler really became an enemy of this entire industry. So I think there was also sort of this grassroots individual investor animosity towards the agency, which I think the Trump White House has sort of picked up on, not only from a fundraising perspective. You could see it as pay to play, and I think that would sort of raise eyebrows. But at the same time, I think there was this sentiment among individual retail investors that, call them securities or not, want access to these more speculative assets, meme coins in some cases, and they want their brokerage platform, Robinhood in this case, to be able to list them. So I think there is also the big picture political stuff, but a little bit of a grassroots sentiment side of this that is also worth taking a look at. Their big thing was, are these securities or not? And that rule goes back almost 100 years. So they were sort of fighting over this SEC rule that none of us ever think that much about, the Howey test. But it's a big win for this industry, regardless of the political landscape. They spent the money, and you're seeing it pay off, a month or so into this new administration.
Kate, want to thank you. Appreciate it.
Thanks, guys.
Futures right now, take a quick look. They've been up for most of the morning, which would be a bounce back from those tough sessions on Thursday and Friday. 272 points now, 97 on the NASDAQ. Let's get to Mike Santoli, the New York Stock Exchange. Morning, Mike.
Yeah, morning, Joe. Yeah, another down Friday, but we do get that rebound so far in the pre-market, up about 0.5% in the S&P 500, and that was after about 2% downside on Thursday and Friday. We went right out on the 50-day moving average for the S&P 500 on Friday. So figure we're going to bounce about 0.5% from there. Still looks pretty routine in the context of like a 3-month trading range. Market kind of losing some momentum and not as much cyclical confidence behind the move. Also some crowded positioning and momentum stocks getting unwound. I would say that this 50-day average is starting to look pretty flat. So maybe that shorter-term trend, has to be rescued by the next rally. Take a look at some of the cyclical parts of this market that have really shown some growing concern about maybe some kind of a pause in economic growth or a little soft start to the year. This is the banks, that's industrials, and that's the small cap. And the key thing here is not that they're exactly the same shape, but all of them are basically either into their election day gap higher or a little bit below it in the case of small cap. So if you think the economy is just sort of on a stutter step here and is going to pick up, market's giving you an opportunity to actually play that and say they've unwound that sort of idea of an economic acceleration right out of the gate. Take a look at Bitcoin relative to NVIDIA going back to the middle of 2023. Been some strange synchronicity here, maybe not strange. A couple of things to note here. They've come back into line, but also both very range bound. So some people are kind of talking about how Bitcoin did not really confirm the new high in the NASDAQ 100 last week. Still looks fine on a longer term chart, but keep an eye on it for risk appetite intel, guys.
Okay, very good. Thanks, Mike. Well, we will do that. See you later.
Before we head to a break, take a look at shares of Strategy, formerly known as MicroStrategy, in a new regulatory filing. The company saying it has completed a $2 billion offering of 0% convertible senior notes. Those are due in 2030. Use those proceeds to buy $2 billion worth of Bitcoin at an average price of $97,500 of that stock. The stock up marginally, about $302 right now. And take a look at the price of Bitcoin. We're sitting just about $95,600. Coming up, we're going to talk about Warren Buffett's Berkshire Hathaway stacking more cash on the pile, a record $334 billion of it. We're going to get into his latest moves just ahead, and former Treasury Secretary Jack Lew on everything from Doge, taxes, and the state of the economy. Squawk returning after this. Take a look at the futures right now. We have some green on the screen nicely, actually. We've got about 269 points higher on the Dow. NASDAQ up about 93 points. The S&P 500 looking open about 32 points higher. Also, the Treasury yields right now, you're looking at the 10-year and the 2-year sitting just at about 4.4 on the 10-year, the 2-year at 4.2. And for some more insights right now on the capital markets, I want to bring in Oksana Arnova. I never get your last name properly, and
Aronov, you got it.
I apologize.
Sound it out.
Head of Market Strategy for Alternative Fixed Income at JP Morgan Asset Management. Good morning.
Good morning.
To you. Just help us understand what's going on here, because we've been on this sort of wild run. Things seem great, but then you sort of read these articles about just how confidence is disappearing, and you're sort of trying to make some sense of it.
Policy uncertainty is not a friend of animal spirits, right? And it's really that simple. And we have a lot going for this economy, and on balance, the data continues to come in strong, but certainly there are some softer data points coming out. We also have a lot of uncertainty, obviously, around what's coming out of Washington. What are these DOGE layoffs going to do? Will that eventually kind of put a dent in the cocktail that we currently have, which is a tremendous amount of deficit and debt, right, in an environment of full employment, which generally is a recipe for higher inflation, which is what we've seen. And of course, this administration is hoping to support and unleash animal spirits, but policy uncertainty is an enemy of that.
And therefore, you think what happens?
And so there are a few sort of competing things going on right now, but for the backbone of the market, so to speak, right, which is the 10-year Treasury, which is the level of yields, that is poised to stay elevated for longer and possibly move even higher, because all of the things that contributed to a move higher are still in place. We still have tremendous amount of AI data center spending. We still have tremendous amount of fiscal spending. We still have a resilient consumer that continues to spend. That all of that Treasury issuance coming out of Washington is going to create a floor, because it's unclear where is the demand going to come from for all of that issuance as our balance sheet doesn't look.
I don't know if you heard, Steve Cohen was down at this FII event where Trump was last week. And I don't know if it took bravery or whatnot, but he basically came out quite publicly and said that he was dumping stocks, that this was going to be a very tough environment, that actually things had run their course, and at least for the short term, that it was going to be a very hard place to play. Do you agree with that?
So I think that's frankly impossible for anyone to call at the top of the stock market. We do know that in the...
I don't think he was calling the top necessarily. I think he was saying right now is just, it's almost too difficult, and that we had this sort of remarkable run, and that maybe there's going to be a pause.
And it's certainly plausible. Remember, in 2018, we did have a 20% pullback, in 15 to 20% pullback in the stock market under the first Trump administration. So it's not unthinkable that an administration that comes in with a certain agenda, which is generally positive for the bottom line of the capital structure, can still create this kind of volatility. What really is very fascinating to me as a credit watcher is that all of this uncertainty is creating a lot of angst around stock valuations, but we're not seeing anything happening in credit valuations, which are absolutely, without a doubt, the richest we've seen possibly ever. The amount of light, or the tiny amount of light between high yield spreads, which are junk rated, and cash has never been smaller.
Why do you think that is?
I mean, that's really the perplexing thing, is that there's so much complacency around this credit risk in the lower rated part of the credit market, and yet we're all completely focused on the S&P. Of course, all eyes are on NVIDIA earnings on Wednesday, right? And there's all this sort of dissection. And yet I think where there is absolutely a top of the market right now is in credit, particularly lower rated credit, and we will most likely see a meaningful spread widening there, and I think that's going to be a greater opportunity in the short term.
Multiples are high, all right?
Multiples are high,
and we know that.
by any measure.
And I don't expect necessarily any help from the Fed to keep multiples.
And in some, the perverse thing about where we are today is that bad news is good news, right? So if we were to continue to see markedly slower, softer
that would
data,
be good, because
that may be good, because people are so used to mainlining this liquidity, right? And
that's
so
exactly
the
what we're
Fed's
saying.
foot will have been assumed to be alive and well.
Right now, we're down 2.5%. Do you think that the positive animal spirits from deregulation and even the prospect of cutting government spending is net offsetting some of the policy uncertainty about tariffs?
I think that's the question that no one can answer right now because there's so much policy uncertainty.
Yeah.
And year to date, we're still doing okay on the S&P. I think the consensus generally is it's going to be a single-digit year. But again, to me, where investors really should...
Single digit up?
Yeah, I mean, that's the consensus. I mean,
Right.
who knows? And generally, look, so earnings have come in okay. I think what's been lacking is the positive forward guidance, right? And that's what the market wants, and that's what it got throughout 2024, where initially companies set the bar lower, and then they came in and kind of had a lot of positive forward-looking guidance, and we're not getting that today. But to me, where investors really should get used to no meaningful price returns is fixed income, is credit. I think investors have gotten very used to that in the years leading to 22, and it's going to be a completely different ballgame, a much more tougher one and a choppier one.
Nice to see you. Thank you for
Thank
coming in.
you.
Appreciate it.
When we return, we've got a breakdown of Warren Buffett's annual letter to shareholders, everything from his advice for lawmakers on Capitol Hill to Berkshire Hathaway's $334 billion cash pile. And by the way, check out shares of Berkshire's Class A shares. They're up more than 200% just over the last 10 years. For the last year, they're up by better than 14%. Squawk Box will be right back.
And restrictions apply.
Check out the shares of Apple. The company says it's going to work with Foxconn to build an AI server factory in Texas by 2026 and will add about 20,000 research and development jobs across the U.S. Apple plans to spend $500 billion in the U.S. over the next 4 years. CEO Tim Cook met with President Trump at the White House on Thursday. The company is facing the prospect of higher tariffs on its goods that are made in China.
In his annual letter to shareholders, Warren Buffett discussed several topics, including the country's growing fiscal issues. He gave advice to the Trump administration, and he looked back on his 60 years at Berkshire Hathaway. Joining us right now to break down the letter is McCrae Sykes. He's Gabelli Fund's portfolio manager. And Mac, let's talk through maybe the results first, because they also released their quarterly earnings at the same time. There have been a lot of notes out on Wall Street this morning on it. Most of them point to the strong underwriting performance of the insurance companies, strong profits overall, and then UBS is actually raising its estimates and its price target on the B shares to $557 from $536. What are your thoughts just about the performance of the company?
Right, it was actually a pretty good earnings release. So there's 1.44 million of the A equivalent, trading over 720,000. So it's a $1 trillion company, as you know. Last year, the insurance between the income and the underwriting increased about $8 billion year over year. So that boosted results to $47 billion of operating earnings. You combine that with investment gains, book value rose $88 billion to $650 billion. Imagine these numbers. So that's 16%. It's pretty remarkable for a company of that size. And so on the operating side, doing well, obviously, with the investments, and then they're sitting on the cash. So the one thing that I think disappoints investors, but really shouldn't, is the buybacks, and he hasn't bought back stock since May. The last level there, about 627,000 per A share. So that's down 10% from the current price. So that's something to look forward to in the future as he puts the cash to work.
Okay, that cash, let's talk about it. $325 billion. Yeah. It's the largest cash pile that any company, any public company in history has ever had. It's greater than if you even add up today's numbers from Apple, Microsoft, and Alphabet, and they all have some pretty big cash hoards. Right. What do you think the plan is behind that? Why do you think he's doing it?
So I think there was a couple of idiosyncratic components to it. He's wound down a lot of the Apple position, Bank of America. So that's, those were two things, contributing to that cash. Plus, last year they generated $30 billion of operating cash flow, which was about $600 million per week that would end up on his desk to be allocated. So this is still a very strong cash-producing enterprise. But this is all a good thing. I think people do get impatient in the short term, and if you go back to a few of his letters a few years ago, he talks about really rare opportunities coming around every 5-10 years. And so look, we just have to have faith in the system. It's worked over those 60 years, and he has some great managers below him that'll keep that doctrine. And so this is a good problem to have. And if we look back at 08, 09. There was a time when they really accelerated capital. They went into Dow, Goldman Sachs, Mars, et cetera, and they actually reduced their cash balance below that 20 billion threshold. So there was a time when they put capital to work, and it certainly measured,
So basically, he's looking around thinking that prices are pretty expensive, including his own stock, which he's not buying back either.
Yeah, so it's trading at 1.5 times tangible book value. So, clearly it's a level, it's kind of the higher, but down 10% is not unrealistic in this market, which has been pretty volatile, as you know. And look, there could be other events that we don't know and have showed up in history. So I think he's well situated to take advantage of that.
One of the things that he pointed out in his annual letter was just this idea that Berkshire Hathaway paid 5% of all total corporate taxes last year. That's kind of an astounding number.
Right, that's a testament to what he's built and his team and all of the asset allocation over the years. And I think he's proud to be able to contribute to the corporate. And he's talked, in past letters about corporate responsibility for our overall budget of the U.S. and contributing that, and making sure there's opportunity for other people as well. So I think that's just a testament to the progress that the firm has made.
I guess the message he had to Washington was spend it wisely and make sure you protect the strong dollar, too.
Right. So he kind of snuck in some of his own, I would say, political views and fiscal views, and he does that very delicately and responsibly, and I think it's well heard by the world.
Yeah. What other takeaways did you have from the letter itself?
Well, what's great about this big hoard of cash, it's just advertising, everybody's debating it, but there's a lot of private companies out there, and I think the Forest River anecdote that he brought up about this owner-operator having done really well in the business, adopted this entrepreneurial philosophy in terms of his salary relative to Warren's and how that business is done very well. And that's, a sign to, hey, Berkshire has the capital, they have the doctrine to do all that stuff and execute for you, and also do well with the stock price as well.
You mentioned some of the management. He did say that it's not going to be long before Greg Abel is the CEO and is writing the shareholders letter for the company.
Right, and he talked about his health there a little bit too, as a reminder of kind of the physical limitations as well. But again, Greg Abel just, he brings that presence, he brings that entrepreneurial thinking, and I think could ultimately be a better potential operator than Warren in some ways, in terms of commanding the discipline and the accountability from the subsidiaries.
Mac, I want to thank you for coming in today.
Great, thank you for having me.
Good to see you.
Coming up, 5 former Treasury Secretaries recently penned an op-ed pushing back against DOGE. Former Treasury Secretary Jack Lew was one of those members. He joins us next to discuss the payment system and so much more. Take a look at shares of Microsoft before we head to a break, though. According to a research note by TD Cowen, the company canceled leases in the U.S. with at least 2 private AI data centers. The firm said the move could indicate oversupply of capacity, and the shift could be linked to OpenAI, which has pivoted towards SoftBank as a major financial backer. We'll discuss that and more when Squawk Box returns.
Set.com.
Welcome back to Squawk Box. In a recent New York Times op-ed titled "Our Democracy's Under Siege," 5 former Treasury Secretaries wrote about concerns over efforts to undermine the nation's financial commitments. We have one of the authors with us this morning. Jack Lew served as Treasury Secretary under President Obama. He's now a professor at Columbia University. And we welcome him to the broadcast. Good morning. It's nice to see you. Just take us behind the scenes in terms of your thinking to put this together, to contact all of these other Treasury Secretaries. Who said yes, who said no? Was there sort of a thought?
Did you call any Republicans at all to do it, Jack?
I think it's clear who said yes. The five of us signed.
Five Democrats.
And with a pretty broad range of views on a lot of topics. So bringing the five of us together is not a small thing. And it was rooted in a concern for the most basic core principle. I mean, as Secretary of the Treasury, as the piece says, each of us took an oath to uphold the laws and Constitution of the United States. Part of that is that Congress has the power of the purse, and there's a concern at the time, and I think still, that that is being challenged. There's also a concern that our payment systems are very complicated. They contain the most sensitive personal information about every one of us and every American. They contain national security information, and how they're handled has real consequences in terms of personal and national security.
Have you or anyone that signed that discussed any of this with Scott Bessent?
Personally, others have, and I should say I didn't organize the letter. There were a lot of conversations. I'm not sure who actually did organize it in the end. It was a shared concern that that we needed to speak out on something that might seem a little dry, but is pretty basic. And you know, the third point I would make in terms of why is the notion that the United States pays all its bills is pretty fundamental. It's why the full faith and credit of the United States is trusted all over the world, at home, in every household that depends on a Social Security check or any other payment from the U.S. government. Putting that into question in any way has consequences that none of us fully understand because it's never been challenged, but they're serious.
So how much is your concern about, and I don't think it is this, but looking for the efficiencies, if you will, versus how these efficiencies are being examined and then what happens or around the process?
I don't think there's any concern, at least on my part, challenging the government to be more efficient. I spent most of my professional life trying to make different parts of the federal government more efficient, work better, provide better service. Those are laudable goals. The question is how you do it. And if you break the system as you do it and put people and the nation at risk, that's not the way to do it. But is this the wrong, I mean, this is the first time that anybody's really gone in and decided to look at the sort of line items via the Treasury, right? Like historically, you would go to the different agencies and maybe you could look around and maybe you could figure it out, maybe you couldn't. This does seem to be the most efficient way to at least get at the underlying math. On the surface, I see the logic to that, but that's not how the system works.
How does it work? I'm totally confused by it because it sounds like it's an antiquated system. There's all these different payment systems. None of them work together.
It is an old system, and it's the largest payment system in the world, so it's a complicated system. But the responsibility for basic program decisions and integrity is not made at Treasury, except for the very limited number of programs that Treasury runs. It's made at each agency, the law is made by Congress, the agencies execute it. The only thing that happens in the payment system is matching up names to people who are on a no-pay list for some reason because they've been sanctioned or found criminally liable. That's a mechanical process. Treasury doesn't have the skill or the people to do the program work. It's not Treasury's job. For 80 years, this was run by non-political career professionals whose job was to make sure that the bills were paid, they were paid on time, they were paid based on the instructions given. There are things you can do in the agencies on program integrity. As OMB director, twice, I did a lot of work to try and improve program integrity. A lot of things we're hearing about program integrity are exaggerated and incorrect. I mean, you have to ask the question when we're seeing that a lot of the numbers that are tallied up confuse millions and billions. How much accuracy is going in to this kind of SWAT team that doesn't understand the complicated system and thinks you can approach it in the way that they're doing? I think that there's going to be more of that because I can tell you, having spent most of my professional life in the system, it's really complicated. Would it be good to simplify it? Yes. Can that be done in a week or a month? I don't believe so without breaking it.
Jack, the age-old question between Democrats and Republicans is, I guess, spending versus taxes. And I just have a really fundamental question. I saw some of your notes talking about if the Trump tax cuts were extended and how expensive that would be and how economically disastrous that would be, in your view? And I'm just back to wondering what the right method. I mean, I look at what happened with the Biden administration. We were at $3.5 trillion during the pandemic, and briefly he got down to 1.3 trillion for a deficit. Then we were right back up to 1.7, and in 2024 back to 2 trillion, basically. And that's just layering on more spending. Whether take your pick, the IRA, any of those things. Why is that better than trying to keep taxes for corporations lower, for individuals lower, keep it in the private sector, leave it there, and cut the spending? Why continue to ramp up the deficit why is that a better method?
So, Joe, I'm one of the few people who has been consistently saying we have to worry about our overall fiscal posture.
So the Biden administration did not do that.
In either a Democratic or a Republican administration. I'm the only OMB director who's had 3 balanced budgets and surpluses. So I respect fiscal discipline. What I don't respect is pretending the tax cuts don't cost money. You look at extending the Trump tax cut, the savings that are in these budgets would barely, under pretty strained assumptions, pay for them. And then they provide room for another $4 trillion of deficits where there's magic savings that would reduce it to, call it 2 or 2.5 trillion.
In 2017,
that is not a question.
Didn't corporate revenues, weren't they at an all-time high following the tax cuts of 2017? But aren't we?
The things that drive corporate revenues are a combination of things, macroeconomic conditions. I will say that this administration inherited a very strong economy, but when you look at what the cost of a tax cut is, it's projected by models that look at how the economy functions.
In my mind, that doesn't sound normal, that the cost of a tax cut. We should start with that I haven't paid the taxes yet.
Yeah.
You need to justify the spending to tax more.
But Joe, if you care about a deficit, $1 of spending and a lost $1 of revenue have the same effect. You have to borrow $1 to pay for it. So if your concern is the total debt and the annual deficit, you have to care about both.
But you see how Republicans and Democrats just talk at each other about this.
Believe me, I've spent 40 years working.
What do you make
in
of,
this.
of writing the taxpayer a check in the form of effectively a refund or a dividend or something? Obviously, you'd be borrowing to do that.
First of all, you haven't paid any of the bills to do the new tax cuts you're talking about. So how you decide to do that on top of other tax cuts?
But don't you think that
the
push to do that is to make this effort more popular? Isn't that what this is about?
Sure. Everybody likes to get a check in the mail. It's not hard to be popular saying we're going to send you some money. The question is, where does it leave you overall? If it leaves us deeper in debt with more borrowing, then it has the same effect as spending.
Can I ask you a different question, which is, here you are being very public about your concerns about what's going on inside the Treasury. There is an argument to be made, and I just don't know if you've availed yourself of this or have tried and it hasn't worked, but whether it's better to make have these types of conversations privately with the Treasury Secretary, with people inside the administration, or is your view that they are not taking your phone call or that they would otherwise not engage with you?
Look, I've always believed in having private conversations. I don't think it's to the exclusion of having public statements. We were very careful in that op-ed not to make any accusations about the current Secretary of the Treasury or what they're doing. What we've said is we were never in the position where we were asked to do these kinds of things.
Right.
So we actually tried to be very respectful, and I would be happy to have a conversation with anyone from this administration who called me for advice. I've reached out to people in some areas.
When Scott Bessent says that technically the payments have to go through the Fed, and that they're basically getting the Treasury sending instructions to the Fed is the one that's actually making the payments, and that therefore whatever's happening over here on the Treasury side can't actually have a demonstrable impact. I mean, that's what he's effectively trying to say. You're saying you think that's not true?
The Fed operates based on instructions that are sent from the Treasury.
Right.
So the instructions that go to the Treasury then get paid by the Fed. The Fed is a ministerial agent.
And so when we hear, for example, that the state of New York or the city of New York is not getting the $80 million that they had been pledged. In fact, somehow the money was taken back. That's the kind of thing.
Yeah, I think that there's many things going on at the same time. You know, the freeze on federal spending that has been on and off, the memo that went out. There's a lot of confusion, and I know that there's a lot of areas where money is not flowing normally, even though there have been courts that have said it should flow at least for a period of time. I think this is going to get sorted out in the courts. It's going to get sorted out as things settle down. But right now, there's a lot of confusion. The thing that I'm concerned about is if you reach in and decide to pick and choose what to pay, that is a whole different kind of way of running federal spending. That's not finding waste. I mean, you look at, for example, trying to stop funding for an agency, reaching in and saying that agency won't be paid. The Treasury doesn't play that function traditionally.
Is your broader concern that it leads to questioning of the full faith of the United States government and whether you can count on the...
I think we have a depth of trust and confidence that is not going to be drawn down quickly. So I don't want to be, kind of warning something is going to happen tomorrow. But it only has been as strong as it is because administration after administration, Democrat, Republican, have all done the things you do to say you can trust us. If you start doing things that cause that to come into question, that's a different world.
But your perspective that we need to get our fiscal house in order and that there is bloat, how much bloat do you think there is in the federal government?
I can't give you a pinpoint estimate, and bloat to one person is a priority to another person. So it has to be sorted out, in terms of what your priorities are.
What about just
Waste,
fraud, government employees who aren't showing up?
Yeah, I don't think that.
Office buildings that aren't even at 50% usage.
I don't know it would move the needle in terms of our macro fiscal position. Should we try to eliminate whatever waste there is? Absolutely.
What do you think about selling assets, real estate, for example? What do you think about, let's say there's an empty office building.
Yeah.
Are we better off selling the building? Are we better off trying to rent the building to somebody else?
Yeah.
What's the way you'd approach that? Because that is going to be a big thing when this is all...
Sure. Over the years, we've done a lot of asset sales. I've kind of presided over budgets where we sold spectrum rights. That's an asset sale. Buildings are a little bit harder to sell because they have to be emptied out. But we did it through base closings. There was a BRAC process where we...
But are we better off doing that, or are we better off renting? The reason I say that is some people would say there's a finite amount of real estate on the ground, and you may ultimately need it, and maybe you can make more from the rent long term than you can selling it. It may help to bring down the debt immediately, but maybe long term is actually a mistake, right? That's the question.
The thing about asset sales is they're one time. So if you're looking at your long-term fiscal trajectory, you have to treat a one-time asset sale as a kind of a blip, because you can't do it every year, or else you won't have any assets left. I don't think it's a long-term solution. It's a smoothing thing that has worked in many budgets. I can't tell you whether renting or selling. What I can tell you is that there will be a need for people to run programs, to answer telephones, to get people their checks when they're lost or something has gone wrong. Those people are going to have to work somewhere. So I would be careful about skinnying down so that if this process leaves us at a place where the public says service is not where it needs to be, we have some place to put people, and not to create a kind of fact on the ground that, well, we have nowhere for people to work. I understand in the modern economy you can have people work remotely, but that's not so popular now.
But you would let the tax cuts expire?
I didn't say that. I would be very careful about how I looked at which ones, if any, to extend. And I would ask the question, how are they paid?
Right.
I think the corporate tax was cut more deeply than it needed to be in 2017. When I was Treasury Secretary,
like 25.
I proposed a lower number, than current number. There could be a serious conversation about where you balance. Ultimately, to have a balanced fiscal policy that leaves the trajectory of the deficit and the debt going down instead of up, we're going to need to have a bipartisan conversation where people talk about everything.
You must have taken issue with spending a $2 trillion deficit last year. Why? When we were under $1 trillion until the pandemic, under Trump, under Obama, what was your deficit? You had 500 billion? You know what it was.
I have to tell you that last year I was worrying. I was.
Oh, don't pun.
Over.
Don't you pun.
In Israel, worrying about a war 24/7.
I was going to ask you about Gaza and what to do there too.
I'm going to take a.
Oh my God!
Pass
I can't believe you
commenting
punted on my
last
2024 question. Okay,
Yeah.
we'll let you do that. You did have bigger. What a mess! And I just, what we just saw last week just infuriates me. It's just.
Hey Jack, I know we got to go, but I have one Ukraine question, which is there's a big question about whether you think that when the U.S. has sent money to Ukraine, that should be considered a grant, as the president of that country says, or it should be considered the equivalent of some kind of loan, or that there should be some kind of payback when this is all over, and what you think that says about sort of this entire, I was going to say schism, but really war.
Look, I think it's a mistake to think about things like American assistance for Ukraine as something that we just do for others. We do that to defend our interests, to defend our allies in Europe. And I think that the terms of our assistance were clear at the time it was given. It is reasonable to talk about terms going forward, but I think the tone of that has to be respectful and mindful of the fact that we have very substantial benefits when we protect our interests in Europe.
All right. Jack Blue, thank you. Nice to see you, sir. We got a lot more coming up on Squawk Box right after this.
Changemakers. Coming up, we're getting ready for NVIDIA's quarterly results later this week. Squawk Box will be right back.
NVIDIA reporting results Wednesday after the bell. Joining us now is Sarah Kunst, Clio Capital Managing Director. As goes NVIDIA, overall tech goes, and as tech goes, so goes the market. Is it that important, Sarah, or not as much?
So I think NVIDIA is really important. I just don't think that its fundamentals have that much in common with the rest of the Mag 7 and the rest of the market right now. You know, I like NVIDIA. I think that despite the sort of DeepSeek hubbub, what was lost there is the fact that they were using NVIDIA chips, just slightly older ones. This is a company that has prevailed through it all over the last 30 odd years they've been public. And so the reality is that, you know, a little bit of a shakeup in who's using what chips is not going to derail them. Now, is that going to spook the street? Maybe, but I think long term, this is still just a really, really solid company that's not super tied to a lot of its Mag 7 peers.
How is the Mag 7? What kind of shape, ex NVIDIA, do you think it's in? Is it in just a sort of a consolidation period?
I mean, it's not a monolith, right? So you're asking about very different companies. I think on one hand, you have names like Alphabet, which personally I think is undervalued. I think that they're not getting enough credit for things like Waymo, their self-driving car unit. I think that there's just this huge disconnect between sort of what they're good at, where they're investing, AI, which is a space they've been a leader at for years and years and don't get credit for, and what the stock price is doing. And so I really like Alphabet, and I think that's probably undervalued. On the other hand, you have names like Tesla, where increasingly it looks like that sort of magic is fading, and you know, they're not sort of a super focused company right now. There's trade wars, inflation that aren't great for them. When you look at some of the electric cars coming out of China at better price points for rest of world, you know, there's a really compelling story there. And so I think that there are very different companies within the Mag 7 that some of which are super well priced and are things to look at as a buy, and others are maybe sort of past the peak of their hype cycle.
I wish we had more time, Sarah. I don't know. We have a former Treasury Secretary on, and we can talk forever, but what are we going to do? It was good to have you on. We'll have you on again. We'll keep it short today. Have you on hopefully soon. Again soon. Okay.
All right, that does it for us today. Make sure you join us right back here tomorrow. Right now, it's time for Squawk on the Street.
Good Monday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer, David Faber, all back at Post 9 of the New York Stock Exchange. The Bulls going to try to get something back after the worst day of the year Friday, cutting the S&P's year-to-date gain in half. Big week of earnings with NVIDIA and Salesforce, watching Ukraine, German elections, and the House budget. Our roadmap begins, though, with Apple's anti-tariff play, announcing plans to spend $500 billion to greatly expand domestic chip and server manufacturing in the U.S., echoing a similar move during the first Trump administration.
Plus, of course, on Friday, all the talk is the AI trade cooling. A note from TD Cowen later that day suggested Microsoft is cutting AI data center spending. That certainly helped that sell-off. But we've got the response in part from Microsoft's IR, which could change the view on AI. And a Doge pushback, Elon Musk demanding federal employees document their work or risk termination. Several agencies, though, now reportedly telling the workers, ignore the request, or at least wait to reply.
Let's begin, though, with the markets. Look at a bounce back from Friday's sell-off. The Dow and the NASDAQ now in negative territory since Inauguration Day. Jim, in fact, since Inauguration Day, the U.S. is the worst performing G7 ETF.
Yeah, look, I can't help but think the money that's being made in Europe overnight. You come in, it's like, holy cow, they're doing pretty good. Japan's good. Thank you, Warren Buffett, for verifying that. China, obviously, on fire, plus 20%. And us, well, if the first president cared about the Dow, I think if you looked at the averages, David, what you would say is people are very confused, particularly in the Russell 3000, which is small business. And they don't want, they're just certainly less happy about things. And they're taking out that lack of happiness on the market. Yes, Friday, I thought Friday was a really bad day. I mean,
Well,
I came home, I wanted a cocktail. It's been a long time.
You're not alone. I mean, last week was a rough week. Any number
Yes, it was.
of, you know, people I speak to.
Oh, just to say, you were in Miami Beach, it was rough. See, it was minus 20 here.
No, it was beautiful there. It was beautiful there.
So how could it be rough?
It was rough in the markets, my friend.
Okay.
It was a rough day in the markets. The
it was,
seas were angry.
But you know, candidly, no one could point to anything in particular.
Well, we're going to get to it in a moment.
Oh, well, yeah,
the Microsoft stuff, maybe the count, no, just this overall. We'll spend a lot of time on that. But I get it, and you know, oftentimes what you hear, Jim, is that you know all the guys I talked to, their hedges didn't really work, and everything you were short actually is what all the computer-driven, algorithmic-driven firms move to, and so you're losing on both sides. Just not good.
Yeah, but I mean, Carl, what you would look at is until last week. If interest rates were down, it's buy. Last week, interest rates were down. We sold housing really hard off the toll, which, by the way, Doug Gilliland would tell you, he didn't really mean that to happen, so to speak. We sold off retail. We sold off restaurants to the point where we started thinking weather, other than where David was. And I start thinking, you know what, we're making excuses for what is a period where people are saying, huh? I thought we were going to get tax cuts. Now we hear about his tariffs and Doge and emails that say you got to tell us what you did this week and what the heck is going on in our country versus Germany where they're rearming versus China where they turn pro-business. Is this new administration anti-business?
You, this morning, or actually last night, when you saw the futures open positive, said you'll believe it when you see it.
Yeah, well, I mean, look, you take NVIDIA, which we're going to talk about. The long knives are out for NVIDIA in the sense that no matter what they do, there are people, and the defenses that we're getting for NVIDIA, there's overwhelmingly a sense that, you know what, that was then and this is now, and NVIDIA is just okay, and give us something new. No one can find anything that they like. David?
Yeah.
I mean, no one likes anything.
No one likes anything?
Well, tell me what they like.
Kenvue?
Well, yeah, it was 24 to 27. By the way, that stock's not even any good. They like Robinhood.
Robinhood?
Yeah.
Got a headline like a Coinbase headline this morning.
Yeah, $84 trillion.
Although even Coinbase then on Friday had very positive news from the SEC dropping that investigation. And then you had the largest theft of crypto of all time.
No.
And everything turned around. What was that, $1.5 billion?
The Bybit hack? Yeah, 1.4.
Yeah. I just thought that the most telling thing was that the banks were terrible. The banks were really down.
And that's just a reflection overall of economic unease, or
yes,
what?
unease. Even though, frankly, we're not seeing a rise in delinquencies. The article in the Journal today about the idea that we're finally getting excess home inventory is what the Fed wants.
That's what you're right.
And then we have that key gauge at the end of the week. It's almost as if, the Fed, and what we really care about right now is the morass of Washington. Look, it's entirely possible that Paul Krugman's wrong when he said that Doge was Theranos. That's a comparison that I found.
Oh, I was not familiar with his writings on that.
But I don't know. He's still around.
Is he?
He's kicking around, Krugman. Yeah.
Where do you find him?
He's got a Substack.
Yeah.
Is that what it is? Substack?
He's with Saganegi. I don't know.
Right. But whether it's Paul or the Times or all the major outlets over the weekend, I think the Times said Doge, at least their metrics on savings, riddled with mistakes.
Yeah.
The 5 biggest cuts on their website, in the Times view, were all incorrect.
Well, the numbers, the disparity, 2.5 billion versus 55 billion.
Well, and I don't believe they had corrected the 8 billion versus the 8 million mistake.
Right.
That's.
Well, I'm still waiting for you to say they haven't tackled Social Security, they haven't tackled Medicare, they haven't tackled defense. Go ahead.
Okay. They haven't tackled the main thing, the things that contribute.
Well, it's true, right?
Right. Medicaid, Medicare, Social Security, defense.
USAID. I mean, what are they going to go after?
There's no doubt that is
where are we now with PBS? We got to get rid of that.
Jesse James.
It's the hack list.
It's where the money is.
The hack list. No, they're not challenging any of the entrenched interests.
No.
Right?
No.
Some of these town halls over the weekend might argue differently, but I get your point.
Well, I just think that we all know how to lower the deficit, but no one wants to do it.
Yeah, extend the retirement age.
Yes, you got to take it to, to 79?
Yeah, you got to take whatever you want for somebody who's 45 and lower now. I mean, come on, man, it's just that hard.
I agree. Tell me you can't take the money until 68. Medicare, we got to find out. What?
At least.
Right.
Average life expectancy is
79. 79. Now, Medicare, No, and I mean, we just presume that that's just riddled with waste, right? What happened to the attacks on the PBMs? Where are they?
I don't know. Well, this goes to your point. There's so much happening right now, but it's very much unclear on so many different fronts what any of the impact is truly going to be, and so it becomes a difficult time in which to measure many things.
Did you get David's email about how he did, what he did last week, and how he did?
David Faber?
Yeah. Well, yeah.
You said 110% of everything?
I did. I wrote my email as I always do.
Right.
You guys didn't get it? I thought I said
No, I mean, but like I said, well, I'm 115%. I mean, come on, I think there's a lot of infant, that seems like very infant.
The forum at the Faina. Guys, I think I want to move on to Microsoft because that was...
Because it's substantive?
Yes, thank you. And it was such an important component of the trading on Friday in particular, this note that we already have referenced and, about... The title of which was Channel Checks, and this was a TD Cowen note, indicate U.S. data center lease cancellations by Microsoft. There was also some tweeting going on or whatever, posting on X, and any number of things that really did contribute to concerns.
Oh, yes.
Because those concerns have been abundant for some time. Namely, we've talked about them so often here. Is there a possibility that many of the hyperscalers will start to look at the return on investment and say, maybe we've overdone it a bit? We all know how much money is already potentially in the pipeline. But when it comes to Microsoft in particular, remember, they chose not to continue to be the sole partner, for example, of OpenAI, the Stargate project, using new partners in order for them to expand enormously the number of data centers they have at their disposal. And so I guess Microsoft in particular, there would be those questions. So when you saw a note like that, it did spark at least a lot of it continued that concern at an even higher level that had already been there. But this morning, guys, we're really seeing a fairly significant refutation of the note itself. Yeah. Apparently, Jeffries was in Australia with Microsoft's IR, and they said to Jeffries, here, this is our response, you can use it. They basically said, we're refuting this, and the broker report, this is one of the parts of the note, had a misunderstanding about what we define as leasing, deals over 15 years in length, the underlying owner of the data center servers is not Microsoft, but the operator. What I've also heard from people in this area that I've been trying to learn from for now a year, 2 years, is a lot of it has to do with power, as we know. And if the power is not coming or not going to be available at given data center, then you're going to say, well, we're going to move somewhere else. Right. And so you're going to maybe terminate the lease there, but you're not giving up the overall. You're just moving somewhere else. And so you may consolidate. You may move to where the power is going to be delivered as was promised. But it doesn't mean that there's a diminution in the overall spend.
Yeah, totally.
That seems to be, guys, where we are right now.
I think that's right. Now, David, you are down there in Florida. I wanted to know, isn't there a sense that if Microsoft was doing all this, it would help its now what looks to be enemy of Microsoft, Sam Altman?
You think OpenAI is an enemy of Microsoft?
I'm starting to feel that way.
That's kind of strong language.
I'm starting to feel that way.
I mean, Nadella has been committed to at least $80 billion. Many of the analysts who follow the company expect more than $80 billion in capex spending this year, perhaps as much as 90 to 100. But again, this does play to those fears, the TD note. We saw the implications of that on Friday in terms of some of the sell-off in the related names.
Go ahead, NVIDIA, which was at 139, and when this leaked out, went to 135. Not everybody had the note.
Yes.
The note had tremendous impact because it was Friday afternoon, and we kept thinking, we were all searching, like, what's wrong, what's wrong, what's wrong? And it turned out to be a note that was then refuted, Carl, by Microsoft.
By IR, which again, to point out, Jeffries, they say that they're on the road in Australia with them. Now, it's interesting to think that they even go to Australia to begin with, but I don't know.
Because it's tiny?
No, it's just, I didn't know the capital markets were that great importance there, but great. But they simply say, listen, they make investments based on a 10-year view on demand for cloud and AI demand. They tweak their forecasts up and down on this over time on a regional basis, depending on which regions need to be prioritized. And again, it also may have to do with the availability of power. So, I don't know, Jim. Does everything now just come back and everybody says, all right, don't worry about it?
Man, I'm struggling with the idea that if NVIDIA goes from 140 to 135 and then bounces to 137, whether that really is something that makes you feel great ahead of the quarter. I'm looking forward to the quarter, and there's questions about Blackwell. Ben Rice just has a fantastic note out today from Elliott saying this is NVIDIA's time. It's entirely possible it's NVIDIA's time, but I get this ennui, Carl. There's an ennui about these names that is just so palpable. It's like they don't want to talk about Mag 7. It's just like we've moved on to another movie.
Right. Well, maybe it's best just to listen to what Nadella himself said last week, and that is, quote, there will be an overbuild. It's not just companies deploying, countries are going to deploy capital. I am thrilled that I'm going to be leasing a lot of capacity in 27 and 28. He's a renter.
Well, I mean, Snowflake's going up, and that's a renter. You can rent
That's
it that
all
way.
right. And we should point out many of the hyperscalers both commit this enormous number of capital, but then they also are doing that, the leasing, or the facilities are actually majority owned by private credit, whether it's Apollo, and they're paying lease payments in that way. So the fact is the numbers are even larger. Right. They can then pull back conceivably. Although they're signing long-term lease agreements, so it's not as easy to do.
Okay, here's what is missing that I think is like I mean, frankly, a lot of people who are really close to this are saying, what the heck is going on? And that's ANET. Arista. They reported a great quarter. Okay, I mean, they had huge demand, but they had a step down in Meta orders. Now, there's a lot of reasons. Meta had this gigantic order bump in year of efficiency, and I come back and say I had Jayshree Ullal, and I felt pretty good because she had Oracle business, but that chart is horrendous, and no matter what happens, that thing's from 133 down to 98. It is the gold standard of what goes into a data center, and that's chilling people because Jayshree Ullal is wonderful and fabulous and competitive, and people think that, well, she missed the quarter. I don't think she missed it. But I'm just a lonesome, I don't know, lone gunman.
When we come back, we'll cover a bunch of movers. We'll look at the Berkshire letter over the weekend. We got Starbucks and Domino's to watch. Talk some Palantir, Tesla, Apple, of course. With futures looking for a bounce back. Stay with us. Apple looking to avoid being impacted by tariffs. The company announcing it plans to spend and invest more than $500 billion on U.S. expansion over the next 4 years. That would result in about 20,000 jobs. Several states are slated to benefit, including Texas. Apple says it will build an AI server factory in Houston, and that all comes days after Tim Cook met with the president. Street's trying to plug some of these numbers into their models.
Right. I think that we had a couple of them. UBS was the first, and call us a skeptic. That's been the rap. Call us a skeptic. And when you look at the expanding, it's Texas, California, Arizona, Nevada, Iowa, Oregon, North Carolina, Washington. So you say to yourself, okay, all this is expanding. I actually want to go a little step further and say, you know what? These are commitments. We can dispute them, but they are hiring an additional 20,000 people at Apple, majority focused on R&D, silicon engineering, artificial intelligence, machine learning. David, if you commit to 20,000 in your Apple, you're going to do 20,000. This is Apple.
Right, 20,000 additional employees.
They got to find them.
Now, according to the UBS note, which we've just gotten a hold of, that would grow their employee base by roughly 12% over the next 5 years. They're trying to figure out the cost of that as well, of course. Incrementally open, OpEx per year would go up about $5 billion. But to your point, this note from UBS this morning, call us a skeptic.
Yeah.
I do feel like, Carl, we saw similar announcements in the first Trump administration from Apple, at least in terms of big numbers, and they did get exclusions on the tariffs.
Right. Look, I think that you have to play ball. This is a transactional administration. Look, I mean, Tim Cook's talking about innovation, sure, dollars from America, but there is a notion, and I think we're going to have to stop being shy about it and just say, look, the president wants this, we're going to give him this, and that's what the people voted for. They want expansion in Iowa and Oregon and North Carolina. I mean, we can't just keep saying, oh, well, so-and-so got browbeaten. What we have to say is, you elected a president. The president says we got to have more jobs. He goes to companies that hire a lot more people, and he says you got to hire even more people. And Apple's one of them. We can't think that what that is some sort of corrupt bargain. It's what you voted for and what
When you say you voted for,
well, the majority.
You mean the 49% of people who cast votes for Trump?
States. I mean, I know that as soon as this news came out, I was thinking maybe Apple's neutral on it. No, Apple's down $2 immediately because, well, wait a second, if you're skeptical, why don't you think you're just not spending as much money? But I come back and I just say, I am worn out by people who are shocked. What is shocking? I mean, I'm not talking about.
Well, we have talked for quite some time about the fact that Apple spends far less in capex than do Amazon. There's the note we're referring to. Meta,
right.
Microsoft. I mean, not even in the same ballpark as a percentage overall of revenues. You're talking about what? 3% of revenue a year compared to 20% at Amazon.
Well, that's why I like this. That's why I say
so they are increasing.
Apple. I mean,
they are increasing capex a bit as a result of this.
These people, they could put them elsewhere.
Well, this is the note in UBS. Apple would need to increase leverage materially or reduce the buyback cadence. I think that's what makes them skeptics. Yep.
Well, I think that what they're doing is you take a look at what Apple had committed to overseas, and they're shifting in here. Now, it's more expensive to make things here, but I am not buying into that rap. Look, I'm not buying into the rap that there's nothing happening. I am saying that this could be reshoring, David.
No doubt. Now, I mean, again, the half a trillion number is it gets your attention without a doubt. Now, don't forget, a lot of it has already been committed to.
And we don't know what they would have done under a different administration.
Exactly. No, I do think that the idea that Biden was ever talking to these guys about doing this stuff. I mean, we keep finding out from businesses. You say this offline. Well, did you ever speak to President Biden? It's like, huh? What I done? He didn't want to see me. He didn't want to see me. You keep hearing that. He didn't want to see me.
Yeah, no, it's different now.
Yeah, he wants to see it, but you have to pay the price.
Correct. You gotta. Right, exactly.
All right. We'll get Kramer's Mad Dash countdown to the opening bell. Futures continue to show a positive open as we get a new week underway. Don't go anywhere.
and restrictions apply.
Take a look at some S&P gainers to start the week. Oracle's in there. Interesting interview with David and Safra Katz last week, of course. Nike with an upgrade. We'll get to that. There's a few of them, actually, on the sell side today. And don't forget, you can catch us anytime, anywhere. Just listen to and follow the Squawk on the Street Opening Bell podcast.
All right, let's get to a mad dash starting the week here on this Monday. We'll get started with trading in just a moment. Smithfield Foods, huh?
Yeah, well, because it came public. It's another dud. I mean, at least it didn't get down. It's like up a little bit. It has some adherence. That comes on the heels of Venture Global, which is VG, which was a disaster.
Disaster.
LNG company that VG has just been the black eye. So I come back to you, David.
Although it didn't stop its founder from becoming a multi-billionaire.
No, that's okay.
Even now, I think VG.
What do you have a problem with oligarchs?
No, not at all.
New
But
position?
you're right. Disastrous IPO.
Right. So what I'm saying to you, David, is here we are near the end of February. We heard that there was going to be this bulge of IPOs. And I think, I don't know if I've ever seen so few. So what's happening?
By the way, where's the M&A? It's March in a few days.
No, I mean, I know that people feel that the FTC and Justice Department stuck with the rule of law. It doesn't mean how it's administrated, which has been prosecution by the old guys and now discussion.
Still
But,
think there's an expectation we're going to see.
But where
that
is
the
it?
environment is still better for M&A? It's a great question.
It is better. No one wants to do it, so you have to help me here.
I will help you.
If Smithfield Foods is the best we can do, which is like pork.
Yes.
Well, I mean, what's going on? Do they just want to stay private? I mean, look, Gensler's been defrocked. The government's not being so hard.
Certainly worth discussing.
David, we have to focus on this because it's the opposite of what we're supposed to have.
Let's get the opening bell here in the CNBC Real-Time Exchange. At the big board, it's Home Trust Bank Shares celebrating its transfer to the NYSE. At the NASDAQ, engine maker Power Solutions. There's a recent listing.
Cummins is a power solution, and that's been a power stock. I think when you talk about everything it says that the data center, which is the single greatest secular theme of our time, is weaker, doesn't make up by, a celebration. What's happened to me, Carl, is that we've lost, or apparently have lost housing, we've lost data center, we've lost the Russell, the small business, and we've gained Johnson & Johnson.
Well, some argue it's the year of generating income, Jim. One thing, you mentioned the home builders' worst 4-month relative performance since the housing crisis.
Incredible, and we finally have some excess homes. We know that the price of a total home has come down a lot, but they're very, very wealthy homes. I would say that these became great companies, and there was a belief that they have divorced themselves from cyclicality, and it just turned out to be untrue. And I think there are people saying, "Wow, I thought that I could hide in these because there's a shortage of housing."
Right.
Well, if you don't sell any houses, that many houses, there's no shortage.
Right, and here's a look at starts. I don't know if you know these red arrows here. Those are rollovers in starts, and you can see they precede a recession.
Good morning.
Every time in the last, what is that, 50 years?
Well, I mean, look, other than the price of a couple of things in the supermarket, there's a lot of weaker stuff. David, GDP has been
The housing market not doing too well, huh? We've consolidated this morning. Definitely the 200s, the resistance to break on the SPY. SPX is up. Three white soldiers, that's a bullish start for sure. I think 60.48. AMD is at support right now. We got Tesla at the 200 on the 1 minute. Options are high. Double bottom on PLTR Thursday morning low. Okay, we're coming down to support right here on the SPX. And 60-60 strikes. 370 for the 60-60 strike. We're on the 9 EMA. February 24th. If this doesn't hold, I'm going to get right out of it. Got the 200 right here. $330. That's my last entry right there. This is just a scalp for right now. Tight stop on this. I'm at 350 average. As long as we hold this here. So we got Baba down $11, Tesla up, Google's up, Nike's up, Nike's up big. Nike stock can make a comeback. Well, you say that every year. The Nike stock aggressively. The new CEO's playbook. They got a new CEO, that's why. How many have they had now? Jeffrey upgrades Nike to 115. Then we were looking at Hum. What happened to my supports? I thought I had supports on here. Oracle's up. JP Morgan, Disney. So far it's not working. Spies hovering at support. Baba can get down to the 200. I don't know if this thing's gonna hold up or not. Nope. PLTR is dropping more. I got an $84 support on it. A little bit above it, maybe. Penny stocks ain't doing good. Got a $3 average on SPX. I'm even right now. Flow inputs don't lie. No, they don't. Let's go ahead and sell them here. give me a bounce. I can get out of them at 3, I think. Meta's at 680. Microsoft's down. Baba triggered my alert. I'll wait for the 200 on it. Bitcoin's up. All the ETFs are. So watch Mara. I got 1320 for Mara. SPY pivot point today's 597.56. Coin, I was watching Coin this weekend. We got a double bottom on Coin. New low just now. So that ain't doing too good. China's really suffering right now. Maintains a buy on it, huh? Puts her on fire. I got stopped out of SPX. Not too bad of a loss. $40. Literally coming down. I got 599.35, 599.08, 597.56 for the SPY.
For 3-item value meal gets advertised a lot. They get people in the door.
Just keep dropping. I think I heard Becky say we're in bear market right now. I got 599.70 for my next support. Bob is at the second linear channel on the 1 minute. But I don't know about Baba. Tess is at a double bottom. So we probably see 326. AMD at 109.53. Eat. I don't think I've ever heard of that one before. Okay, we're getting close to my next support here. We'll see. Two more bucks. I don't know if I want to take another risk, try it or not. What do you think? You ain't touching nothing? I feel like this is it, but I'm not sure. It'd be the 60-30s. Oop. No, it didn't hold it. It's not a good day. 2 days in a row now it's been like this. It looked very brave at first. I like them soldiers, but that's a big but. I had 597.56 for the SPY. That's the pivot point. No holding. $59.80 puts are looking nice.
2.5%, dropping 700 points on Friday and having the worst week since October. We saw the S&P fall 1.66%, NASDAQ down just over 2.5% as well. A lot of earlier data in the week, we saw the S&P reach highs. That data didn't really seem to phase the market, but as we headed into the Fed minutes, that seemed to change things. The last 2 days were very different, likely due to the PMI and consumer confidence readouts. And again, if we look at the market this week, Treasury yields were higher earlier today at around 4.4% for the 10-year yield, having settled at 4.2% on Friday. Now it's trading closer to 4.41%. Oil futures were holding steady after that sell-off on Friday. To your point, they've been kind of moving around now, but there's also that specific story around oil, which is the outlook for global demand, especially as we see talks aimed at ending the Russia-Ukraine war. There's speculation on OPEC's production going into April, which has been quite volatile for oil. Gold, as you pointed out, also pulling back some. It was holding near flat earlier this morning. We've watched that hit highs as trading tensions have continued to push investors to try to hedge. If we look at last week, I think we could point to PMI. Certainly those results, we saw that number come in at 50.4 for February, down from 52.7 in January, indicating some stagnation in the private sector there. Services PMI was really to blame at a 25-month low at around 49.7. We're continuing to see that weakness in services. And then as we looked in the consumer sentiment index, the University of Michigan's index, that failed to impress as well, coming in at just 64.7. Near 10% decline and a much bigger drop than what many expected. Now I think we're prepping for the end of the week when we've got the PC index, which of course is the Fed's preferred measure of inflation. Expectations are about 0.3%. We look at the last reading, came in at 2.6% over the year in December, up from 2.4% in November, and in line with forecasts. Of course, still a ways off from that 2% goal that the Fed is looking for.
About oil and gold too. I mean, for example, gold's been up 8 weeks in a row and getting closer to 3,000. That's been an exciting trade for folks and a safe haven. And to your point about treasuries too. But let's talk about home builders. We have a big week. We'll watch also for Home Depot tomorrow, Lowe's on Wednesday. We have economic data and earnings. Some of your thoughts on what's going on in the world of housing.
Yeah, I think the home builders is going to continue to be an important story. If we think about last week, what we saw out of some of the confidence numbers for home builders, what we saw out of some of the earnings reports, the picture is not bright right now. The cost is heavy. Inflation is a major concern for these home builders. And so we're going to go into this week looking at Home Depot and Lowe's who report midweek. Investors are going to be looking for further readings on the U.S. consumer, how they're feeling in terms of overall spending. We know that we've got, home builders out there that are trying to fill a void of demand because a lot of people are not wanting to leave their homes as they're wanting to hold on to that lower interest rate. To fill that demand, they're trying to build as quickly as possible, but there's a lot of cost to that. And because of the high cost of homes, they've been having to try to kind of entice people to come buy these homes. And they're doing that in the form of, cutting down prices, buying down some of the interest rates, things like that. So we're going to continue to watch that. I think Home Depot and Lowe's are going to be a very important. NVIDIA, of course, will be as well, as we know that DeepSeek story. This is really going to be their first earnings report since then.
Yeah, and just the mortgage rate story, I think, as we're watching
NVIDIA's earnings this week.
Will rates come down a little bit? Affordability overall is still very much an issue for housing, but as you noted, a lot to watch for this week. And then you did talk about the global demand or lack thereof for crude, which we've watched now oil going back to 2024 levels to a certain extent, right?
Yeah, of course. And what's going on here is that, of course, we've got a lot of
$100 scalp on the SPX.
We always do. We've got OPEC, who really decides that
140.
production. They're expected to are currently cutting about 2.2 million barrels a day. They're scheduled to hike the output in April. There's a lot of suggestions that they're considering delaying that hike. That's certainly putting pressure. Then, of course, we're focusing on whether or not we're going to see talks progress in terms of ending, the war with Russia and Ukraine. That can certainly change the demand outlook, especially if Russia is able to pump out more oil. I think the focus, as you pointed out, we don't have much in terms of economic data today, but this week we're going to see more information on new home sales. We're going to see the Case-Shiller Home Price Index. We're going to be looking at durable goods and, of course, the second reading of GDP and pending home sale numbers. So we've got a lot of data home sales and otherwise coming out this week that certainly could move the market. And of course, we've got some big names around earnings. So I think this will be potentially a volatile week, but certainly a week where we're going to see investors really honed in.
Yeah, and this is, you know, we have the S&P now below 6,000. That's notable. You have rates pulling back. Oil and gold are mixed. So thank you, Jeff Pierce. A great setup, and look ahead to this week. We're bracing ourselves for a wild week. We have NVIDIA this week, folks. Now we turn our attention over to Zoom Video, which is down 2.7% right now. And
Zoom's
the
got
company
earnings.
reports its earnings after the bell. We have Caroline Woods here, and she's giving us a preview. Some of your thoughts, Caroline?
Yeah, so NVIDIA, of course, the main event this week, but we do have quite a few names reporting before them, before NVIDIA, and Zoom is one of them, reporting today after the bell. As you said, shares under pressure today. They've really been under pressure all month. If you take a look, they're down almost about 7.5% in February, only down about 1.5% year to date so far, so underperforming the broader market, 13% away from the 52-week highs. But if you zoom out on that chart,
Zoom out.
They traded over $500 a share back in 2020, so it's a long way from those 2020 highs. But the video conferencing platforms expect
Did you get out, Rob?
EPS of $1.31 on revenue of $1.18 billion. That would be nearly 3% year-over-year growth. That's flat with the previous quarter. In terms of customer estimates, enterprise customers are actually expected to fall about 11% year-over-year to 196.9 thousand. That would be sequential growth, though. In Q3, they reported 192,400 enterprise customers. And then those customers with $100,000 or more in trailing 12-month revenue is expected to grow 7% year-over-year to 4,088. We'll also pay close attention to churn, of course. Online average monthly churn in the third quarter came in around 2.7%. Some other key metrics we'll be looking for: remaining performance obligations. The total there is expected to be $3.76 billion, current $2.27 billion, and then non-current $1.3
I jumped in
billion.
on my support.
Zoom also is focused on AI
And I got right
initiatives.
back
They
out
talked about
for
evolving
100 and some
into this
bucks.
AI first work platform. They have the AI companion, so we'll see if the significant growth that they had been posting there continues. They said in the first half of 2025 they'll actually release a
104
premium
shit.
custom AI companion, and then they've also talked about those single-use webinar options for online audiences of up to 1 million people. So we'll see what they have to say about other initiatives there. In terms of the outlook, they actually already boosted their fiscal 2025 outlook. They now expect earnings per share, adjusted earnings per share of $5.41 to $5.43, and then that would be on revenue of about $4.66 billion, about 3% growth. So we'll see if there are any additional adjustments to that fiscal 2025 revenue when they report today. Shares down about 2.6% today ahead of the results.
You'd be left behind if you didn't have some AI initiatives, right? I mean,
Sure.
I'm glad you pointed that out because that's a big one. Also, I'm seeing a lot of the neutral ratings, hold ratings. I know you have the whole list, but the overall, this trades so heavily on its earnings days, too. You can see the big spike in volume on these charts on the earnings days. Some final thoughts here on this name, which over 1 year has been a great performer.
Sure, yeah, it's outperforming the broader market over the past 1 year. Shares are up about 30% over the past 1 year. That said, if you take a look at the analyst breakdown, as you said, more than 60% of analysts are in the hold camp. So they're staying on the sidelines for Zoom. That being said, if you take a look at the median price target, it's actually about $10 higher than where they're currently trading, a little less than that. The median is $90 a share. So on the whole, analysts do see upside for this name, but remaining pretty cautious on it. The street high is $115 a share, so there
now,
are some
shoot.
bulls out there. About 36% of analysts do rate Zoom as a buy. Only 3% sell. So it's not like there are a lot of all-out bears there, but for the most part, it seems like Wall Street staying pretty cautious on this name.
Right. And look, they had increased competition over the years. During the pandemic, everybody was Zooming, right? It almost became a verb, but then Microsoft Teams was big. Google had its version. It became a different landscape, too. So let's see what they have to say in the next report. Thank you, Caroline Woods. Great to see you. And folks, we're going to come right back. We're taking a look at a few things. First of all, SpaceX is still a private company, but there's an ETF that could give you exposure to Elon Musk's SpaceX. So you want to hear about that. Right now, the Dow has turned negative then positive because right now it's up 60. So I guess volatility is here, 1883.
Yeah, it is.
Volatility index. We'll be right back.
We're coming up on the 63 right now. Kind of regret selling them.
Knock, knock. Number one broker here for the number one hitmaker.
Thanks for swinging by, Carl.
No problem. So what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full-service wealth management, advice,
You got the
invest on my
9 right
own,
here.
and trade on Thinkorswim.
You know Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Available anytime, any.
Okay, we're coming back down again. See if that 5970 holds again. We got 3 black crows. Today might be a valuable day.
going to do. There's going to be a lot of headlines. There's going to be a lot of, discussion. There's going to be a lot of politics. But I follow the price. And this fact that we moved above the 25, which is the midpoint of the range, is a very, very positive sign for Intel to get some traction. And you've got a lot of unrealized profits on the short side that those people are going to have to cover their positions if this stock does get on the move.
There's just not a lot of love for Intel. I mean, even the analysts came out. No. I saw price target this morning. You talk about 25. It wasn't even near 25. Mizuho has a new target of 23. I mean, that's below where it is today.
We could have a whole show on analysts and how they price and come out with their earnings estimates and so forth and their price estimates. That's a whole other ballgame. I follow the price of the stock. And I see what I want to see in the
price action trader. That's what I like about him.
A large accumulation on the positions on the long side, and the risk reward on this is amazing. This was this is about 50% off where it was just last March. So I don't think Intel is dead, and I love the risk reward, and I love the chart and this move above this 25 once again. We can take out that recent 28. There's a gap up there between 28 and 30. If you break out above 30, they were at the 35 or 40 level relatively quickly. So it's just about the math. I'm looking at the June option, the June 20 call, which is that bottom base. It's trading for about five and a half or so, and it's $4 or some in the money. So it's like being long from 20. If you can't be long from 20, let's get an option, gives you the right to be long from that level. And I think there's a lot of upside potential here. There's a lot can happen politically, and I'm not a guy that wants to follow that route, but this environment we're in right now, you can get extreme winners and extreme losers just based on policy, and that's much different than the free markets that we had a long time ago.
Yeah, Alan Nuckman, great to see you, Chief Market Strategist, BullseyeOption.com. We appreciate it. Good luck there at Intel and thoughts on tech overall. And we're going to continue talking about tech. It's obviously
I'm going to go get me a coffee real fast, and I'll be right back.
How about SpaceX? This one is still private. There's so much talk about when will the IPO be. Nobody knows if there's going to be an IPO, and maybe you want to be invested. But one ETF has a way to do exactly that. Eva Ados is with us, Chief Investment Strategist at ER Shares. Eva, it's great to see you. I haven't seen you in a long time. Thank you so much for being with us. I look forward to hearing more details on how investors can get into SpaceX. I mean, how have you been feeling about the market overall?
So we created, let's put things into perspective. I'll start with giving a description for your Schwab listeners at home. Let's go back in '97 when Amazon goes public. It went public at about $500 million in valuation. Since then, it came up 4,000 times, now valued at $2.3 trillion. When you look at NVIDIA that you just mentioned, went public in '99, again, $500 million valuation, went up 6,000 times since then, at about $3.2 trillion of market cap right now. When you look at the private market, we have SpaceX right now valued at $350 billion, and that's still private. So for SpaceX, which we believe will be the next great Magnificent Seven, if it ever reaches that level, that means it will go up only 5 to 10 times. And that shows us that now in today's environment and market, many returns happen pre-IPO. And that's why we decided to create an ETF. The ticker symbol is XOVR. It's the crossover ETF that combines private equity and public equity to allow the everyday investor get access to these companies. And SpaceX right now is our biggest weight at about 10% of our portfolio.
That's pretty amazing, because that does give people the opportunity. They want to get into private equity. They don't know exactly how to do it. To have an ETF that has other names in there as well. I know we'll get to some of those, but looking at SpaceX in particular, it's very interesting you talk about the growth that we saw for NVIDIA, for Amazon. And, it's hard to say if and when SpaceX does go public, how many times it can grow. It sounds like you're being conservative on if it were to go public, that you think a lot of the growth is happening here behind the scenes, right?
Exactly, and I think there will be more and more companies like that. Companies right now tend to stay private for longer. So we think, let's say for Elon Musk, he does not want to have nuisance lawsuits when the company goes public. So they
you can keep this girl on.
Entrepreneurs tend to keep company is now private for longer. And then as a result of this, most of the returns or many of the returns happen pre-IPO. Now, historically, only the top 1%, the accredited and institutional investors, were able to get access to these companies. And so that we want to change that. We want to democratize access to private equity and allow the
Okay, we're coming back down now.
anyone out there get access to these companies. So the XOVR ETF has no minimum requirement. You don't need to invest millions of dollars. Has daily liquidity. You can buy and sell the same day.
Get
and
ready.
Market value, which is the only ETF.
We've got 3 black crows. Let's see if it's true to its patterns
We're showing
today.
some of the top holdings. You don't have, and you have a lot of the Mag 7 names in there. I don't see Tesla in the top list there. I guess you have enough of Elon Musk with your SpaceX. Is that one of the reasons why Tesla is not really in the top names here?
So it is in the portfolio, not in the top 10, as you mentioned. We believe Tesla took Musk to the moon, but it's SpaceX.
Damn, this girl's hot.
Him to Mars and us, hopefully. So, and when it comes to SpaceX, it's not just space.
I love
and
you.
Although we do believe that SpaceX will be the winner when it comes to space, because it's competing against NASA, which is and other companies which we don't believe are as efficient as SpaceX. But it also has the combination of Starlink. And Starlink is the cash cow of SpaceX. It has satellites in low orbit, that's low latency satellites that are much more efficient. They provide service not to underserved areas, and they compete against the most bureaucratic and sometimes most hated companies, the AT&Ts and the Comcasts. And so to us, it's an easy game when it comes to Elon Musk competing against these bureaucratic companies.
So I saw you also have, you have Meta, NVIDIA, Google in there, Oracle. Some of the others in there, AppLovin, Salesforce, and CrowdStrike. I guess you still see upside.
We'll get 310.
Mag 7 names. NVIDIA will report this week. If we have time, I'm going to get back to that. You have it in there, so you're a believer. I'll assume that. How about a name like AppLovin? I mean, where does that fit in here in your portfolio?
So we were among the first to discover this name and speak publicly about it
$3.
2 years ago. This is an extraordinary growth story. It's a company that
Put a tight
has,
stop on it.
An amazing growth rate, and it's cutting its SG&A costs. It's widening its margins. It's an example of a company that's using AI to streamline its operations and become very efficient. So when it comes to its sector and space, it's by far the winner. And as we've seen, the company has come up thousands of times in the last 2 years, and we believe that will be a big winner when it comes to the app space. We continue to be bullish. It used to be our top one weight. Because of the valuation overlays that we had to come down when it comes to its weight, but we still believe and we're bullish when it comes to this company for the long term.
Right, and look, it's already up 600% in 1 year. It's been running up, but you still see upside potential. I will ask you about NVIDIA. We're waiting on it this week. Options markets have some big prices put in for some swings. What will you do? What will you watch for? Will you buy more if it swings down?
Right now, we're not buying more. We will maintain our weight. We've been invested in NVIDIA since 2005 when it was a $5 stock. They were making backup cameras for cars. That's the power that our model invests in entrepreneurial companies. And so that was a company that our model identified.
This needs to hold right here.
Back then. So we continue to keep the company. It's a great entrepreneurial story. We're not adjusting its weight for now, but we believe that
What's this girl's name, man?
Companies where we see we're going to get the most returns. Again, SpaceX.
She reminds me of this
that we think from now on will have
girl that I watched at sales on sales ships.
Elon becomes a trillionaire. It's primarily going to be because of SpaceX.
Yeah, and look, you've had some heavy volume on the crossover ETF. I saw a 20 million position in SpaceX in December and added 13 million in SpaceX from you in January. So still 13 million. So that's at least 30 million. So you are a believer on this one. And we thank you, as you said, to the moon, right? And so we appreciate that. We are to the moon for the Tesla and to Mars for SpaceX. That was cute, Eva. I like that. Eva Ados, ER Shares. Nice to see you. Thank you. Look at crossover there. Chartmaster is up next, and we will have the analyst calls for you on Block, Twilio, Conagra. Morning Trade Live. We'll be right back.
No politics, no noise. From bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Trading the trending names every day. It's Fast Market. Ready for you, ready to go. I'm Kevin Hinks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please. But there's a... Carl's Way is the best way.
Is it? At
Is
Schwab,
it?
How I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we? No can do.
I'll get out of here.
No can do.
Where are you going?
Schwab.
Come on, Peach.
Schwab, a modern approach to wealth management.
Could have got out at 350,
Bull or bear, you
but I
want to
didn't.
catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
If I don't hold his support level, I'm getting right out of it. You'll get my coffee and I'll be right back. I really don't want to leave.
Welcome back to Morning Trade Live. I'm Nicole Petalides. It's time for Chartmaster. We're live on the floor of the New York Stock Exchange, and we have a lot of things to look at here. Jenny Horn will take us through the fundamentals.
Bring that girl back
Jenny
on.
takes us through the technicals and some key names to watch. We'll start with Block, BMO upgrading Block, XYZ. Jenny takes us through some of the fundamentals there and some of your thoughts. Jenny.
So, Nicole, a name that's had a pretty blistering move to the downside just this month. I mean, we've
Chick's
seen
got
that
shorts
now
on? Are you nuts?
28% month to date, which is only fueling the underperformance we've seen. Really, I'd say kicked off this year, but definitely last week's earnings sell-off was definitely not helping re-rate things to the upside overwhelmingly.
She
so.
looks like a
So
secretary
straight now,
today.
Seeing still areas of opportunity for Block, I do think that that's important to keep in mind here as BMO
Block.
did upgrade shares to outperform from market perform with a price target that was actually reduced to $89 a share, down from 100. But they do still see an attractive entry point following that fourth quarter repricing and again. They also did say that now street estimates have less downside risk while investor sentiment and positioning are more balanced. They also do believe that expectations for Block's Cash App gross profit growth does now appear more achievable, with higher spending now already being factored into some of these estimates. They do also see the potential for sentiment to improve through about 2025 as Cash App accelerates its profit growth, and did say that valuation now looks attractive just given the fact that estimates have hopefully, in their opinion, indeed bottomed from here. So the street is fairly, I'd say, torn between you have your buy side and pretty much your neutral side. There are still about 3 underperforms in this name. All things considered, though, you have a neutral to bear or bullish lean, on Block here. So last week's repricing could perhaps be an opportunity. And as we said when we looked at this name, actually, we saw a very similar move to the downside in PayPal. So these fintech names just not showing the earnings moves, at least the post-results moves that perhaps we'd want, but still doesn't mean there's not value there.
Right. Look, we saw the big leg down on the earnings, so we see somewhat of a mixed bag.
Right now, this is bearish,
I mean, Barclays has the over.
but we're still in the bull flag.
Outperform, but not all of them are as positive. Let's see what Rick Ducat says about the charts.
Yeah, and when we see this one, it's been a story of slowing momentum, I guess I would say here, because you can see that we hit this high near 99.26. Then we started to trend downward. We had a sharp rally here that kind of drifted away from us, and you can see that we started to move below our moving averages here. Yellow 21-day and orange 63-day. The faster one crossed below the slower
Down
one.
$75 on this.
This earnings event.
I got one contract.
Big decline. Price fell below our purple 252-day exponential moving average. So now we're below all our major moving averages. They're all sloping downward. Price is continuing to break through some key levels here. You can see this old low near 69 was a high point that we reached so far. It's early in the session, but that's about where we got stuck up to the upside today here. So perhaps the next area to watch would be this other set of lows near 63.93, and then here as well near 59. So look at RSI. We are in the oversold area, which in a trending market typically is regarded as a more bearish sign. The move down came on very heavy volume as well. So if we were to look at our volume profile and standard deviation channel studies, we can see that not too many
Go get my coffee.
areas within current kind of the range where we've been trading in recently here. But we do have the 21-day EMA lining up with our volume node here in our linear regression line, our line of best fit. So this could be a resistance area up here around 82 or so. To the downside, we've got our volume profile, point of control, our area of heaviest trading coming in at 65, and that's pretty close to those lows I mentioned near 64.
Yeah, right. I heard you say the lows there, and I think about the other low, the real low last August of 55. But we do have some of the analysts with some really high targets. You have, $89. You have a few of them, 97 from UBS. So let's see what happens. Thank you for that chart. Jenny, let's take a look at Twilio because this one also getting an upgrade, right?
Yes, an upgrade today from Morgan Stanley as they did raise shares to a rate from equal weight while also actually raising their price target to 160 from 144. So slightly different with that block analyst that did actually lower its conviction for price. We're only seeing upside here from Morgan Stanley today. The firm is increasingly confident on crediting Twilio's execution towards double-digit growth.
Come on, baby.
And operating margin outperformance on the back of increased cross-sell supported by some of their recent channel checks. They also do see the recent 20% sell-off in shares as overdone, providing an attractive entry point. And they did highlight that recent checks and Twilio's exit growth rate from fourth quarter do provide now confidence in the company's ability to execute the model laid out on their analyst day, which was somewhat their final thought there. 160 does, though, also imply some pretty substantial upside from actually where we're currently trading, getting a decent pop today, up about 1.2%, but another name that's seen a pretty blistering performance on a month-to-date basis, just fueling some of its year-to-date losses. So these two names definitely are laggards on the year and on the month basis, just of course the broader indices and some of their frankly peers. I mean, Twilio has seen some outstanding performance within the overall tech world. It just hasn't necessarily been brought forth for Twilio as of late.
For sure. Who wouldn't take over 100% gains? I mean, that's pretty great. But the question really now becomes, is the 20% sell-off that we've seen more than, is that really overdone? And so, Rick, could you take a look at the technicals, please?
Well, I can't answer whether it's overdone or not, but I would say that we have retreated back to a notable supportive area. So if we take a look at our chart, we can
I don't like it when I go a little bit below it.
Change in the broader picture.
This 59.90.70 means everything to me right now. I think this is the second time we went down below it. Yeah. And this is really not much of a bull flag. Now we're starting to look a little bit better. As long as I can stay above that pivot point in that flag. If not, we're still bearish as long as we're down below it, that red line. I haven't added on to it yet. But if I do add on, I'm going to probably add 3 of them. Only got 1 right now. That way it don't look too bad on my scorecard. I'm up 360 points right now. Not on this trade. If we don't start respecting it, I'm going to go puts. And I almost sold them right here. But we had a tweezer bottom there, so I held on. If I buy 3 of them, that'll give me a price of $247, $248 if I buy them at $230. Tesla, Nvidia is down to 132.23. AMD, higher low, double bottom. Tesla has a symmetrical flag on the knife. Damn, come on. Come on, you beast.
This set of lows, as well as this small high that made it above that area. So between like 2650 to 2680 or so.
CAG had its earnings, didn't it?
Resistance area, and that's also the site of the 63-day EMA as well. Beyond that, 2810 could be another area to watch as momentum improves as we cross above that 50 midline and take out this longer term red downward sloping trend line on the RSI. So if we were to look for heavy volume areas, there's one right up here near 28 that's roughly around that high point that I mentioned earlier. Then our point of control comes in near 2940, which roughly matches up with our...
Yeah, it had its earnings back here a month ago.
Thank you both so very much. A good look at 3 key names today. Rick Ducat, Jenny Horn, thank you. Appreciate it. Morning Trade Live continues, friends. Is right after the break, we will have our market meetup panel. What you should be watching for this as the S&P 500 has fallen below 6,000. It's at 59.90. Okay, we'll be right back.
Yeah, this ain't doing too hot. So if I had 370. Okay, 170.
Welcome back to Morning Trade Live. It's time for our meeked up panel here, all about the market, and Alex Coffey and Kevin Hanks join me. And it's very interesting because after the big sell-off we saw Thursday and Friday, we all woke up today, we saw futures a little bit higher being the key, only to see the sell-off now continues with the S&P back below the 6,000 mark, and the VIX actually started to creep higher, even getting closer to 20. Alex, I'll start with you. Some volatility here is evident. Some of your
It's evident, that's right. We're still bearish in this flag.
Rare that you have the kind of day like we had to end last week, and then
I got 4 contracts.
in terms of the general movement. It was very quiet, eerily quiet in the Sunday night futures open through the open this morning. Volatility picked up once the regular session here in the U.S. began. But, you know, for the most part, it's been relatively orderly, relatively range-bound. And if you look under the surface, there's still, 299, let's call it 60% of the S&P 500 components that are higher. About half the NASDAQ 100 is higher. There's just weakness in some of those mega cap names. There was some indication that hedge funds have been reducing positioning in some of those different companies. Also, there was
Let's let it go.
Story about perhaps overcapacity concerns. And with all that's going on in the world geopolitically, growth concerns here in the U.S., I think volatility should be expected. Now, that doesn't necessarily mean that we're going to crash, but there's a lot of questions and not a lot of answers at the moment. Makes sense that investors are a little bit more tepid.
And taking some profits, right? I mean, that's what you were saying earlier, Kevin Hanks. It's okay to take some profits. And many of these names that we are talking about, I mean, I just finished talking about a stock that was up 600% in 1 year. I mean, there have certainly been some high flyers. People can't complain, right, Kevin?
Listen, I think there's a lot of these names that Alex was just mentioning that are causing volatility in the market. And yes, of course, up at these high levels, it doesn't take much to shake a stock. Now, take Microsoft, for example. Came out with the article this morning about decreased data center spending. Microsoft came out, denied it, and said they strongly refute it. But the stock is down on that headline. There's a lot of headline news hitting this market ahead of NVIDIA's earnings on Wednesday. But let's face it, when NVIDIA's earnings come out Wednesday, there's a sector of new AI names with all the large cap tech names in them that are going to be affected. How do we know?
How do you know?
Elevated volatilities in the front expiration on a lot of these key names. So I think Alex is spot on when he said you were naive to think the market was just going to open up on a Monday morning and go straight up after what we saw on Thursday. And
Exactly.
Friday. That was the most predictable thing that the market.
Still holding my 959. I'm still holding the pivot point on the SPY.
And dips are getting bought, rallies are getting sold, as you know. So I expect volatility to continue throughout the week, Nicole.
Yeah, it's going to be like whack-a-mole. I mean, all week this week, right? I mean, we'll be getting all kinds of earnings. You'll get PCE, you'll get NVIDIA, like you noted.
Yeah, it's just not doing what I want it to do
That will
today.
continue to follow. What else else stands out to you? I mean, and I also would like to know, Buffett, you know, he doesn't even know where to put his multi-millions of on cash as the stock is
Billions.
closing at record highs now. There's just, you know, questions where to invest. I mean, that's something that they sort of battle with, right? They're turning to Japan. So what are you watching? What else this week, Alex?
Yeah, I think I'm watching kind of the market's breadth. Is it a rotation or is this an actual sell-off? And right now the indication suggests today that it's a little bit more in that rotation camp, out of mega cap, out of winners, into some of that more value-oriented, more cyclically driven domestic names. That said, yeah, watch yields. Yields are continuing to move higher. To me, that suggests growth concerns, not inflation concerns. And then finally, I think you got to watch volatility. Volatility was a tell.
Definitely the market's bearish.
Really creep higher, and when that happened, that's when you saw the market.
That's what I kind of said in the video.
Selling to the downside. That did not happen on
So we had to consolidate it open, or you know, it could be
jury's still out.
brutal.
We don't know yet. I think from what we've seen in volatility, but it's something to watch, and that's where I'm going to have my eyes for the rest of the day.
Yeah, understood. And you, Kevin, final thoughts there?
I really want to watch how the market finishes the day with volatility. I'm waiting for NVIDIA's earnings, and of course, PCE data out on Friday will be the big market mover, other than NVIDIA, of course.
Right, and we shouldn't leave out bond yields. I mean, we saw everybody running to gold. I mean, gold has been up 8 weeks in a row. 29.74 was the high. Right now, it's at the 29.52, not too far off the highs. And bond yields, we've seen people going to the safe havens, Alex. You know, right now we see the 10-year at 4.39. So clearly the pullback there.
Yeah, no doubt, and I think Kevin's exactly right. I mean, there's still so many things this week that are going to ultimately determine where this market goes. So the other thing is, too, is you're not forced to be involved. I mean, most investors, I think, kind of know that over time things smooth out. But if you're a trader and you're looking for opportunities, you can wait. No one says that you have to engage every single move. So there's plenty of things that may present opportunities in both directions this week. Just simply wait for them. They may come to you.
And how much do people care or not care if the Fed moves and cuts 25 basis points? And so that's what everybody's watching for, and the PCE on Friday might give us an indication to what the Fed may or may not do. I feel like, you know, there should be a song, what will the Fed do next? And you're watching that PCE print, right, Kevin?
Yeah, I think what a good PCE print will do. In the core, the expectations are for it to move from 2.8 to 2.6. The market's going to like that, Nicole. And those rate cut dates that were getting pushed out and pushed into 2026 will start to ease back into 2025. And that's what the market's going to like, is at the end of the day, you look at the last couple of weeks, the US dollar's lower, yields are lower, and crude oil's lower. That's really good for inflation. If core PCE comes in lower, market's going to start liking the macro picture here.
Yeah, look, we've had sticky inflation, you know.
Well, that's just the opposite, brother.
The growth picture is that slowing for the U.S. You know, there are some fears about that. So we will see, and we'll get
Everything's red
throughout this week. Thank you both. Alex Coffey, Kevin Higgs.
Flat.
Thanks for being with me here, friends, on Morning Trade Live. I'm Nicole Pedalides. Want you to keep it here. I'll see you at 2 o'clock for the watch list.
Don't leave.
And Trading 360 with Caroline Woods coming up next.
The channel with the babes. Come on, bitch. God, you had the 75s?
Investor checking. The checking account
Jesus.
for investors, named highest in client satisfaction by J.D. Power for 6
Oh,
years.
59.7. I was looking at looking at something else.
Features of our checking account, plus cash management solutions, all designed for investors like you.
I thought I saw him at $9, and I'm going, what?
For cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds
Snow's got
between
earnings.
accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education crafted just for traders. Also, you can trade brilliantly.
Morning movers, be the first to find out what's shaping early market action. Tech Check, Options Corner, Futures Focus, Technical Analysis. Morning movers covers it all.
I'm still in these. We're going to see. I'm way below my support.
8 a.m. Eastern, only on Schwab Network.
I don't think it's going to be much of a day.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can
I used to put my chart in blue like that.
Education coach. It's interactive learning at its finest. Tune in live or on demand.
Where's this?
Head over to schwab.com/coaching and start learning today.
Oh. I'm back at my entry for my second. Break it. Oh, man.
Good morning. Happy Monday. We're 90 minutes into the trading day. Welcome to Trading 360. I'm Caroline Woods filling in for Nicole Petalides. I'm live from the floor of the New York Stock Exchange. We have a busy show to get to kick off the week. Coming up on the show in our 360 Spotlight, we'll look at Apple after announcing a $500 billion investment in the U.S. over the next 4 years.
God.
Today's disruptor is Alibaba after it announced its own
Apple,
investment in AI
$500
and cloud
billion
infrastructure.
investment.
And in our 360 round, we'll talk all things crypto and Bitcoin.
Okay, I'm back to even
Before we get to
almost.
all that, let's take a quick look at the markets. We were hoping for a bounce back after Friday's steep sell-off, and those hopes fizzled. Early gains also fizzled. You can see here the Dow actually flat right now. We're seeing weakness in Walmart, Amazon, Nvidia being offset by gains in Nike, and essentially
How can it draw mixed
making a
reactions?
flat Dow. But the Nasdaq and Russell, the worst performers, down about 1% right now. Meanwhile, the S&P 500 only off about 0.4%, so off earlier lows. Tech, consumer discretionary leading the way lower. Healthcare is a bright spot there this morning, though. Now let's check out some of the futures products. We're looking at gold, dollar, crude, all pretty flat right now. Bitcoin is lower, just trading above 94,000 right now, so well off the highs. Meanwhile, the 10-year yield trading just below 4.4% right now. For a look at some of the top moving stocks in today's market, I'm joined by Jenny Horn, markets correspondent and co-host of Next Gen Investing. Jenny, happy Monday. Great to have you here on the show with us. And you're back on the winner's beat. And I know you have your eyes set on Starbucks after some job cuts this morning, sending shares higher. Fill us in on the latest there, Jenny.
I know I'm on the winner's beat, Caroline, but tentatively, because I always have a hard time looking at like a share price that's rallying on the back of like people losing their jobs. I mean, there's like an ethical, I think, concern there. But Starbucks is laying off just over 1,000 employees as the coffee chain does really try to right now revamp its business and improve those lackluster sales that are hugely a reason that we've seen them obviously poach new CEO Brian Niccol from Chipotle to try to really steal a page, I think, of the chain's success. So we do know that back in January, they announced they were evaluating the role structure and size of their global support teams and looking to remove some of the positions as needed. But in addition to trimming around 1,100 corporate roles, they also did cancel several of the hundreds of their open current positions. So Niccol did say that they are simplifying their structure, removing layers and duplication, and creating smaller, more nimble teams. But their intent is to operate more efficiently and increase their accountability, as well as also reduce the complexities and drive better integration, all of course with the goal of being more right now able to be focused on creating and driving their overall priorities as a company. So that being said, Starbucks did have around 16,000 corporate employees as of the end of September. They did say the layoffs will not be impacting those that are working in individual cafes.
Back to even.
But right now they're focused more on trimming what seems like some more corporate positions. But they've been struggling with sales declining since last year. They've also been unfortunately faced with inflationary costs, the rising and I'd say definitely in flux right now cost of coffee, as well as right now just the increased cost of labor. So all that being said, this is a difficult pricing environment. When you are one of the largest chains in the world, you're going to be feeling a pinch from that. And I would be curious to see if Niccol's able to.
I'm surprised Apple hasn't made this move sooner.
Riding on one man, and as we know, there's some greater macro forces at hand right now.
Yeah, certainly the case. And I will say, though, Starbucks up to a really strong start to 2025. Shares up 24% so far in 2025, up 5% in February, including today's 1.2% gain. So a lot of optimism out there. It doesn't sound like any of those 1,100 jobs, though, will be people working in the cafe, so shouldn't impact how fast we get our orders. Jenny Horn, markets correspondent, thanks so much.
Thanks, Caroline.
Let's get some insights on the news that's shaping the markets, and for that we welcome in Jordan Rizzuto, Managing Partner, Chief Investment Officer at Gamma Road Capital Partners. Jordan, thanks so much for being here.
Sure.
So I was taking a look at your notes, and you say it's a much riskier environment now than at the start of the year. Tell us why that is, how you know that.
Right, that's right. So we view the market through the lens of the Market Vector Gamma Road U.S. Equity Strategy Index. And that index is designed to measure the favorability of the equity market environment at any point in time. The strategy came into the year, as you mentioned, in a very different stance than it is now. So the strategy entered the year with all three measures of market risk bullish for the S&P 500. Since then, the strategy's measure of consumer confidence turned bearish in late January.
Bearish.
And then in mid-February, its measure for fundamental economic strength turned bearish as well. And so now its third measure, which measures the overall price trend of the market, is the sole bearish measure.
Okay.
And through our research, looking over the last several decades, when only one of these three drivers is bullish, it suggests a much riskier market environment that we can expect to be characterized by higher volatility relative to overall averages.
Can we get to the 200? We got a double top right here.
That's right. The consumer confidence measure, which turned bearish.
I'm back at resistance.
Towards the end of January. And
Even.
A measure of fundamental economic strength, where we're measuring how cyclically sensitive assets are performing relative to more risk-averse assets.
We let out with three white soldiers.
Tell us what you think the biggest risks
We got
in this market are right now.
Well,
spinning top doji.
I mean, we have the daily news flow from policy changes at the federal level, international relations, geopolitical risk, related to that. A chief concern we feel, and we certainly see this borne out through the consumer confidence measures, is that of inflation, and whether or not inflation inflation will remain at bay, or even is at bay right now. We're getting a key measure, as your guest in the last segment noted, later this week. But that to us is a true risk in the sense that it increases the challenge for the Fed in terms of the balancing act that they're looking to.
There we go,
walk the fine
230.
line right now, right? So on the one hand, the Fed will look to remain stimulative enough to keep the economy moving, and on the other hand, they need to remain restrictive enough to keep inflation at bay. Inflation, as we've all seen, has come down quite a bit in terms of the pace of increase, but it has stabilized now over the last several months above the Fed's stated comfort zone. And so we think that's a key challenge moving forward. You can also see that priced in through the forward curve as short rates have really flattened out on the curve in terms of rate expectations through the end of this year.
But these are all things we've really been talking about since the beginning of the year when the measures were a bit more favorable. So, and the market's been pretty resilient. So, what do you make of the resiliency and the strength that we've really been seeing up until Friday?
It's a fascinating thing about markets, right? I mean, very often we see things that matter or intuitively should matter, and the market seems to shake them off until it no longer does, right? And so the question is, when do these things start to matter? A lot of the math that goes into the drivers that we just went through in terms of behavioral, fundamental strength, the price trend itself, exactly for the reason that you're pointing, are looking more at quantifying inflection points. So when have we actually hit an inflection point where it should start to matter? And at least on the basis now of consumer confidence and in terms of underlying economic strength, we believe we may indeed have hit those. I should note that these are not predictive measures in nature. So we think of this much more as a nowcast rather than a forecast. And so the current market environment really is characterized in this scenario by somewhat higher volatility.
So that's a nowcast, but what is your forecast? What does the fallout look like?
In our experience, when only one out of these three measures is bullish, it tends to be a very important inflection point for the market. And so this could either prove to be the pause that refreshes before another leg higher. It could also prove to be a major change in direction, right? If all three measures turn bearish, if the price trend turns bearish as well, that would be characterizing a significant risk-off environment through our lens. You also see a lot of the market pricing reflecting the
Well, it's now
so
lunchtime,
the fact that consumer
and I'm not
discretionary
getting
is the only
anywhere. I was
sector
up
that is negative year to date.
45 bucks
does
a
not speak to
contract,
a bullish environment for
47.
equities. The fact that consumer staples are significantly outperforming consumer discretionary.
But now
is
we're
another
bullish.
indicator on a sector basis
As long as
that
we stay above the
preference
flag.
for defensive positioning is increasing. Now, will that flow through and continue? It will be interesting to see, right? And to your point, we're still hovering
Wonder I
right near
sell.
all-time highs.
So what's the best investment strategy then, Jordan? Is now the time to play defense, and how do you hedge yourself against some of
It's
that
a good
risk?
question, Caroline.
Well, through our lens, we certainly believe that if this environment is going to be characterized by higher volatility, now would be the time to be more defensive in nature. The way our strategy does that and expresses that is really by allocating away from S&P 500 exposure and allocating increasingly to T-bills as the default most risk-averse position that you could take.
Okay, we'll leave it there. Jordan Rizzuto, Managing Partner, Chief Investment Officer at Gamma Road Capital Partners. Thank you so much for being here and for your insights.
It's a pleasure to speak with you.
Plenty more to come on Trading 360.
We haven't broke the VWAP at all today on the SPY.
Three trades. Rick Ducat will take us through the technicals, and Scott Bauer will take us through the trades for Palantir, Roku, and Zscaler. That's next on Trading 360.
PLTR.
We'll be right back.
He sold some of his shares last week. And we're now in the gap. So I got 84 bucks for support to get back in this trade. I didn't run it all the way up to the top. That was a big mistake. Come on, baby, break. Give me $6,006.02. And I'll be very happy. That'll be more than $100 a contract. Toot toot. We would appreciate it if you went ahead and broke out. I really do. You can do it.
Coffee. I'm Jenny Horn. Join us for Next Gen Investing.
Jenny
1
Horny.
p.m. Eastern, only on the Schwab Network.
Welcome back to Trading 360. I'm Caroline Woods in for Nicole Petalides. It's time for the big three: 3 stocks, 3 charts, 3 trades. Rick Ducat is here to take us through the charts, and here to take us through the trades is Scott Bauer, CEO of Prosper Trading Academy. Rick and Scott, great to have you both here. Scott, let's start with you, and before we get to your trades, I want to get your thoughts on the market, because the major average is mostly lower. The Dow is attempting to rebound a little bit, but only up about 67 points right now. What do you make of the downside that we've been seeing? Buying opportunities or more weakness in store?
I think longer term, it is going to wind up being a buying opportunity. But right now, Caroline, everything is a sell first or sell the rally. You know, we're no longer in that buy the dip. We're in the sell that rally. And until I think things start to get clarified a little bit, coming out of the administration here, this volatility is going to continue. I do think there are pockets where, you can pick and choose where you want to be right now. But again, I'd caution.
I haven't played pool in years.
Sell the rip than a buy the dip marketplace, and that can change anytime.
Okay, well, we're certainly seeing investors selling the rip in your first trade, and that's Palantir.
Blake.
Shares down about 9%.
I haven't even said hi to YouTube yet.
Still really impressive gains so far, but now down about 26.5% from those all-time highs. Tell us about
Is that true that Omar's married to her brother?
It's one of those stocks that people are, just taking their profit.
Magnificent. Is Omar married to her brother?
Insider selling news is actually better than expected, and I think this is now going to become a valuation play. If you can
Good morning,
say
mannequin.
That, trading at X amount.
Good morning,
of
Chris.
Earnings is a valuation play. So what I'm watching for is down around the 85 range for a big bounce. We're not quite there
Right
yet,
now,
but
I'm
that
up
is a
almost
gap
$100
fill, and also
on this, and I want it to
50-day
break
moving average.
and hit
if you look at the chart, I'm sure Rick is gonna point this out,
$6.02.
That was an area of past major resistance.
I don't think I'm going to
which
get my
now
100 out of them
could
now.
be some really significant support.
Maybe.
So that, to me, is a great pivot level if we get down to that area. Right now, kind of a no.
I got stuck in the first ones this morning. That sucked.
Okay, all right. I know that Palantir is currently trading at 92.29. This is the first time that I've checked the median price target of Palantir and that it's been higher than where Palantir is currently trading. Analysts finally have it at $95 per share. Still only 5 buy ratings on the street, but for the longest time it was basically half of where Palantir was trading.
So I'm going to get
Rick,
my
when
suit
you take a look at
and nuke it.
The chart here for Palantir, $85 target. We have the $95 median price target, the $92 where it's currently trading. What stands out to you?
Yes, the $85 level, roughly that's the major level that I had my eye on as well for many of the reasons that Scott described. So to start out with, you can see here this light green line represents this double top type of price action that we saw here right around 84.85. So that was kind of what Scott was referring to. I don't happen to have the 50-day simple moving average, but I do have the 63-day exponential moving average in orange here that's also quite close. It's just below 84 or so. So there's quite a bit going on in that area that makes it really stick out as a potential source of support there. If we were to keep moving lower,
Go, baby, go.
The price has been traveling within this upward sloping channel ever since our last earnings event, or rather, I should say, the earnings event before our last.
The chartist
in
artist.
October. So mostly we have been sticking within those.
He's got the gap, just like I do too, for support.
125. Now we're back within familiar territory. This old channel that was established here as price tries to find some footing.
What's this moving average?
We can see that RSI, notable interruption after a little bit of bearish divergence there, where price made a new closing high, but RSI did not follow suit. Now we are out of the overbought area and below the 50 midline. If we were to
What's this
look at
one?
our volume profile and standard deviation channel studies here, we can see that there's not quite very much volume at all.
What is
where
it?
we are now, kind of there's a gap right here, a no man's land, I believe was the term that we used before. Volume starts to pick up again near about 70 or so, and then not really much notable activity to the upside, but our +1 channel could be potential resistance near 107, and our old trend line matches up with our volume node near about 70.
Okay.
God.
All right. Scott,
That's
let's move
cheaper
on
than
to
what
your
I
next
want.
Trade. That's Roku.
70
Sharing
bucks.
Roku off to a strong start in 2025. Basically flat today, but up 7% this month, up about
Rick,
20%.
what
so
is
far
that
this
gold
year.
line?
Tell us about your trade for Roku. Are you selling the 20%?
Roku earnings this week.
Well, here's what I'm doing. I'm looking for
Uh-oh.
a similar area as in
I'm back to 250.
It's fallen from its recent spike from earnings, and it's right at the gap fill level from right before earnings. So, that 87-ish area here.
Randy?
We need to watch that for a pivot. It also has some downside protection below that, Caroline, at 86 and 82.
Idiot's going to
this
sell
is
them here at
probably an area, in my opinion, sellers are gonna give up, buyers are gonna jump in.
$6.02.
So this bounce, if there is a bounce, I can see this taking back up to close to 100.
Randy.
Now, the option implied volatility in Roku is actually very low right now. There's not many stocks out there where we're seeing lower implied volatility. So because of that,
There it is, $3. I can get out right here.
Going out to March expiration, looking to buy the 97.5 call spread for about $2.
You think I'm serious?
Okay.
I am.
All right, Rick, what do you see in the chart for Roku? Because to Scott's point, it is about 15% away from the 52-week high, so it's definitely dipped
310.
from the earnings pop.
Would you hold them or sell them?
Still an impressive run-up, at least this year. But
Magnificent. I need to make a business decision right here. 340. I'm out. Too late. I made a business decision. I'm out at 340. I made a business decision. I'm out. I'm out at 340. I mean 440. 340. What the hell's wrong with you? You stupid moron. Hold. Ooh. Oh. I'm out. I'm out. I'm out. Amazing grace, how sweet the sound. Hey, Will, I'm out at 340. The crowd is wild. It surely is. I'm out at 3:40.
I really like the upside, and I like the
That
upside
makes me very
using a
happy.
call spread rather than selling a put spread because
And I was really ruining my reputation this morning when I bought the calls and got stuck here. And I should have went in on the puts with you all, but I just like deer in a headlight. And I just waited for the bottom to come in. Then we had 3 more white soldiers. And I took that trade and got out of it. Brought the 3rd soldier. And then we formed a bull flag. And I added on to my calls here. And I had a resistance level, which would be the double top. And the double top runs into the 200 SMA and the 200 EMA, which creates a wall. Creates a wall. Creates a wall. So now I'm going to go into the kitchen and make some soup. I'm happy. That was $520. You'll hear no crying. I promise you, I'll take it like a man. But I made a business decision. If we do break the 200, I will add. How's that grab you? I will buy back in. What? 59.7 SPX was a big level to hold. We didn't hold it. It dipped below but recovered that level. Unless that level gives up, we may go creep higher or just go higher or just fly higher. That's one of my championship traders in here that I look up to YouTube. His name is Magnificent. His name is Magnificent. Here at the 200 SMA. Damn it. Don't do it. Oh, you son of a bitch. I'll take it like a man. Oh, $160 on the table. $200 left on the table. Shoot. How can that happen? How can it be at 490 already? Am I missing something? Son of a bitch. Oh my God. Have you ever seen me crack a coffee cup on my head and have it break? Oh my. Jimmy's pissed. Just left 300. How could I do that? How can it be up $300? Oh boy. How dare you?
Across all 11 sectors.
Oh yeah?
We deployed a fantastic array of new technology.
The companies that are doing well are almost too big to fail.
You're beautiful.
Set yourself up correctly.
I didn't set myself up correctly.
Guard is saying, away, off with their heads.
AI feels controversial and it's going crazy right now.
It is going crazy.
So what does all of this mean for the market?
As long as people want to buy it, the price can go up. Oh my goodness.
Oh my goodness. Educator Fizz can't do everything.
Instead of taking cues, set the cues.
There's nowhere else I would want my money.
Oh my goodness.
Oh, here's Larry.
One sector. Now there's a market for every single one. There's a market for you.
Market overtime on the Schwab Network. Thanks for tuning in.
Always clean. This is Jim. May I help you? This call is being monitored by the FBI.
Ladies, host of Trading 360 and The Watch List, live on the floor of the New York Stock Exchange, where we bring you breaking news, experts, CEOs, influencers, and analysts. It's all available on Schwab Network.
He hung right up when he heard that FBI stuff. You told me to hold. Yes, you did. But I waited and nobody would answer the question. And I was at my resistance. And I did get out. I could have got back in at 370 after you answered the question. You were 2 minutes late. So I got to make a business decision. I don't want to add here or buy. I'm gonna buy a put. Nancy, we talked about my bell yesterday when I wanted a Valium and a shot of vodka. We're out of vodka. I have some Captain Morgan pineapple rum in the freezer. Would you go ahead and give me a shot of that with a Valium? You've got the good ones, huh? Very good. Because I think I need them. Fuck, I left $300 on the table. I just left $1,200 on the table. No. That would have been a vacation. The plane ticket to the Dominican Republic. Punta Cana. Uh-oh, you're going to give me some work? What? What's FWIW mean? They scared the shit out of everybody. They did me. Yoko, did you get in? Punk, were you in it? God darn. Dang, I can't believe I left $1,500 on the table. Sad thing about it, I could have got these at 120 and added on. And then I'd have bought 10 of them, so that would have been 600 times 10. And I didn't add on like I should have. If I added on there, I could have made another $200, 200 to 300. So I'm gonna go into the kitchen. I mean, it's not a bad day. $760, 700, 800, 860.
That's a holding of ours, by the way, as disclosure. But yeah, I mean, we're going to be building more server farms. The real estate certainly could be that. I think it bodes well in general. Is deep commitment to AI, to not only the Nvidias, which of course reports on Wednesday, but also those more tailored chip makers like Broadcom. So the semi business certainly will be a beneficiary. Potentially companies like Digital Realty that lease space to the server farms. And of course, I think it's very important to think about the energy use, right? We're going to continue to use AI and EVs. One of our themes, and very important for investors, is how do we sort of embrace this need for more energy? And you can do that through companies like Schneider Electric, which we own up today because of the German elections, or Constellation Energy, which really trying to get more energy to use for these all these applications that are coming our way. So we don't have enough energy. Another way to play it.
Okay, James, and just finally,
James.
do you think this paves the way for other announcement from some of Apple's competitors or other big tech firms in terms of more U.S. investments, more U.S. hires?
Yeah, I do. I think this negotiating tool, as we call it, the threat of tariffs, is going to make a lot of people come to the table. Apple maybe being the first real significant one. I think you're going to see others follow. And our view has always been perhaps there won't be money tariffs at all in more negotiating. This is a really good example of it. Maybe we're on that trend now.
Okay, we will see. James Detmer at Main Street Research, thanks so much.
Good to see you.
Coming up next, it's time for The Disruptor. It's George Sillis joins us to take a look at Alibaba, which announced plans to invest over $50 billion in its cloud computing and AI infrastructure over the next 3 years. He'll give us all the details and an example trade next on Trading 360.
Okay, we're getting back down here, brother. See, that's dropped almost 300 bucks right there. Those contracts right there. Let's do it. The crowd's going wild at the sports arena. Washboardjim comes in here. Boop ba boop boop ba ba. Do it again. Do it again. We're at 420. Do 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 do. Do it again. Do it again. 3.70. Yeah. Off the 200 EMA. It's okay.
Cut the cord on the way you get market news. It's Market on Close. Join me
Can
all
do it
over
again.
for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3
Tight
p.m.
stop.
Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
Yes, you can do it again. Do 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 do.
Welcome back to Trading 360. I'm Caroline Woods in for Nicole Petalides.
Caroline Woods, I love you.
For a look at developing stories this morning, I'd like to bring in Diane King Hall, host of Morning Movers here on the network. Diane, thanks so much for joining us. You're taking a look at Tesla.
I want to have your babies.
Reports that it's getting ready to unveil full self-driving in China. Not enough to give shares a boost today. They're off more than 1% right now, adding to pretty steep 2025 losses. But give us the details here.
Well, it did initially move higher off the back of this news, but it seems like the broader market action, this risk-off tone that we're seeing is causing pressure on Tesla, which matched the move that we saw on Friday. When you saw that risk-off move, you saw Tesla move nearly 5% lower on Friday. So in terms of the momentum, it lines up with that. So originally this was seen as a catalyst because, in other words, this is a Bloomberg report.
I'm doing it again.
What we would call full self-driving, and
My friend.
available in China. So according to this report,
China.
there's an update that's coming in the coming days, where customers would have the access to these full self-driving capabilities in China that would allow customers to be able to use this technology on the roads there for exiting ramps, intersections, can recognize traffic signals, make the turns handle, changing lanes, changing speeds, etc. So some of the things that the technology that we have here, it is being marketed here as full self-driving. It's not necessarily being called that there.
China.
We know that this has been a long road for Elon Musk and for Tesla to get some kind of regulatory approval in China. He's faced a lot
540, baby.
there. A lot of that obviously has to do with the data insight
China.
that Tesla would need to be able
580. Okay, I'm going to make a business decision again, if you like it or not.
They will get some kind of approval to operate there. Now there is still supposed to be the human factor there and the supervision of this.
Out at 6:30.
It does, initially, it was seen as a positive, but you did see shares of Tesla pull back along with this broader market action that we've seen today.
I got one left.
The pressure was on Tesla because I think it was earlier this month that BYD in China, a larger competitor, unveiled similar features.
Yeah.
And I was taking a look at U.S. listed shares of some of the Chinese EV makers, and they're all lower today as well. So
God, there's at 7:38.
The news or
Yes.
Overall market weakness.
I think it's overall market weakness, but Tesla has faced a weakness this year in general. So again, although this was initially seen as a catalyst for some movement, year to date the stock is down, was already down about 10% year to date. And you saw it come off of those highs that we saw, we saw towards the end of last year. Again, that was because of Elon Musk and his relationship to the Trump administration, that proximity to power that we have. But now that concern, it's flipped to a concern because of more how his time is divided and how active he is with Doge. How much of his time is taken away from Tesla? That's been a question we've come up with Elon Musk before when it comes to, say, Twitter X and Tesla. So it is still a kind of cautionary flag in terms of how investors are seeing it. And then there is the question about how many vehicles moved in the first quarter. And in some of the early analyst commentary, there is concerns about some weakness there.
Yeah, up against some declining fundamentals there. And I should note, Tesla's still down 1% despite the fact that Dow and S&P have both flipped into positive territory. Not a huge move higher, but we're definitely off the lows at this point. So we'll see if Tesla can recover. Diane King-Hall, thanks so much for breaking down that mover for us. It's time now for the disruptors. George Silla, senior markets correspondent, is here with today's company, which is Alibaba. Shares are sinking today after the company announced plans to spend over $50 billion in AI and cloud infrastructure over the next 3 years. Morgan Stanley upgraded shares in reaction to the news. George, but it doesn't seem like Morgan Stanley might be bullish, but doesn't seem like investors are celebrating this news. What's behind these declines today?
Yeah, I mean, if you look at the stock year to date, it's been a phenomenal runner, and in fact, it's actually exceeded quite a few, or actually not all of the large cap Chinese stocks. So there seems to be something specifically going on here with Alibaba, and what we're seeing today is essentially a give back or a profit taking opportunity, considering the stock has been relatively extended. And there's some positive catalysts, but also some of the negative catalysts we have to consider here with Alibaba. Obviously, this is China's e-commerce giant. They generate around 70% of their sales in e-commerce and logistics, but they have been growing their cloud intelligence business quite a bit to where it's actually almost about 10% of total sales. And the company has made some strategic investments over the past few years, irrespective of the fact that the stock is still down about 35% over the past 5 years. So this is maybe the beginning of a trend reversal in some of the large cap Chinese companies, particularly Alibaba, which did declare also today that they're investing about $52 billion. They expect to in the next 3 years. If you just consider last year, which was the highest R&D expense year, was around $7.8 billion. So cumulative speaking, the 3-year investment that they project is going to be higher than all the last 10 years put together. And this is all about increasing their cloud investment in artificial intelligence, hosting services in the cloud, and not to mention, this investment is also creating some drawback in the stock, because if you look at $52 billion, even compared to last year's sales of around $135 billion, it's almost a third of total sales for last year, and even about 15% of the market cap of $320 billion. So that's why I think the stock is pulling back considerably today. It's basically based on high expenses, but irrespective of that, some of the analysts are still bullish on the name. Morgan Stanley, as you mentioned, did increase their rating to overweight from underweight, and they moved their target from $100 to $180, as well as Nomura, which increased their price target on the stock to $172 from $130. They do maintain a buy rating.
Okay, and good point too about the perspective there. Shares are up still despite today's 9% drop. Shares this month are up more than 30%. So far this year, up more than 50%. I was just taking a look. Analysts basically almost 90% in the buy camp with a median price target of $160, so $30 higher than where it currently trades. So all of that that laid out. Walk us through an example trade for Alibaba.
Yeah, so I mean, just looking at the stock, obviously it seems extended in the short term. Anytime you see these parabolic moves and the slope of the ascent, very, very steep, we're seeing a pullback. And so with the markets, being rather tepid right now as well, we could certainly see Alibaba pull back even further, perhaps even to some of those October high levels, which correspond to around $117. So I'm going to play this as a yield harvesting strategy. So what I'm going to do is I'm actually going to go out to March contracts with about 26 days to expiration, and I'm going to sell the 120 puts. So these are cash secured puts. You could harvest about $3.50 a share, or 350.
George,
So in essence,
would you like to come over and have some chicken soup?
It allows us some flexibility with the stock right around 130 right now. Break even on this trade because you're selling the 120 put for $3.50. Your break even is essentially 116.50, which corresponds to that level in October, which is around 117. But it also, by the way, corresponds to the year-to-date move. It's about a 50% pullback of that full move, which again, from a technical standpoint, is a lot of times levels you see of retracements in larger bull flags. So just keep in mind, if you put this trade on, you have to be willing and able to take ownership of the stock at 120 with a cost basis of 116, but you won't be assigned those shares unless the stock goes to those levels or below.
Okay, all right. Appreciate that trade. Appreciate the breakdown. George Stillis, thanks so much. Coming up next, it's time for our 360 round, discussing the outlook for Bitcoin and the overall crypto space. That's next on Trading 360. We'll be right back.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly.
What a day.
With Schwab.
Can really emotionally bring me down sometimes. I got stuck in this son of a gun, and it's tanked on me, and it bounced back up, and I was able to get out with a lot smaller loss than what it was. Then I just watched it go down, just continuously. And then it broke out, created a bull flag, and then we broke past my resistance level, and I sold it before. And I could have got 370, but I didn't. But I ended up getting 370 on the pullback off the 200 EMA. Now we broke the double top. We have a 1, 2, 3 bits. Right there, triple top, 1, 2 bits, and a freebie. Now we pull back to the 21. So if this thing's really bullish, it'll hold this 21. But I'm going to have lunch. Caroline, I love you. I'd do anything for you. I noticed you weren't wearing a ring the other day. So I called my mom and I said, do you mind if I marry Caroline? I think she's the kind of woman that would listen. I love you. I love you more than my mother. Yoko's bearish, but for now I'm bullish. I will get her. I just got to figure out how. Maybe I can put an application in up there at Schwab. I still have one on the table. I'm thinking about getting rid of it. Magnificent. Should I sell it? You'd expect a small pullback first. To the bottom of the flag. I'm going to go into the kitchen and make love to my chicken soup. Y'all get to watch me do that, YouTube. It's a warming event. We have a rising wedge. We're starting to squeeze. We're getting ready to squeeze again.
And you said it was a stock. It really looks like there's a heavy accumulation under 100,000. It really looks like somebody does not want it to go above 100,000. With President Trump's new administration, with David Sachs, with new regulation, and in the early days of investors understanding that it is a good diversifier of risk in your portfolio, that is Bitcoin, and increases the Sharpe ratio, we're still in the early days.
Juan, what are your thoughts about where Bitcoin goes from here, and what is it that gets it unstuck from this range?
Yeah, I personally think this is the best time in history to invest in Bitcoin. As Jim was mentioning, Washington has gone from being one of crypto's biggest threats to being one of its biggest champions. And in the latest round of 13F filings, we saw that institutional investors are accumulating Bitcoin at a record pace. They're onboarding it at a record pace. We saw the first out in this past 13F, we saw the first allocation to Bitcoin ETFs from the Abu Dhabi Sovereign Wealth Fund, which is the fourth largest sovereign wealth fund in the world. First time we saw an allocation from sovereign wealth funds. We also saw U.S. states like the Wisconsin Investment Board increase their allocation to Bitcoin ETFs. And we saw institutional ownership of Ethereum ETFs go from 5% to 50%, while institutional ownership of Bitcoin ETFs stands at around 25%. So institutions continue to onboard the space and adopt Bitcoin. And we have, as Jim mentioned, the executive order on digital assets, which is going to allow for the growth of stablecoins and other applications as regulatory clarity emerges. So I think the space is being primed for continued growth this year. At Bitwise, our end-of-year prediction for the price of Bitcoin is 200,000. So we think there's plenty of upside to happen this year as things continue to unfold.
Sorry, the producer was talking to me just as you gave your target. What is your target for year-end? 200,000 as well?
Yeah, 200,000 for Bitcoin is what we have for year-end.
Okay, so both pretty bullish price targets there. Jim, going back to you, anything other than Bitcoin you think is good to invest in right now in terms of the crypto space? Would you be buying Ether too?
I prefer Bitcoin over Ether, but it seems as though Wall Street is coalescing around both of them. But when I talk to clients at Wellington, what we do is I suggest Bitcoin should be a core holding in your portfolio along with gold. And I think what you're going to see as we go through the year, Caroline, is people are going to recognize the fact that Bitcoin is the solution to the fiscal crisis, and it's also going to be the solution towards, making the U.S. dollar and U.S. Treasuries neutral again, and going back to a new monetary system, which I think crypto, or specifically Bitcoin and gold, are going to be part of.
Caroline, I'll give you $1 million if you'll be my wife for 2 years.
With our guests here, it could move a lot higher. Juan Leon, Bitwise Asset Management, Jim Thorne, Wellington Altus Private Wealth. Thank you both so much for joining us. And thank you for joining us on Trading 360. Download the free Schwab Network app available in the Apple App Store. Tune in 24/7 on schwabnetwork.com. Stay tuned. Fast Market is next.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account.
I've got my
plus cash management.
I've got my finger on the trigger
designed
here.
For investors like you.
Make another business decision.
Fee rebates for cash withdrawals worldwide. No overdraft fees and enhanced.
You ready? Make another business decision. If this thing's really bullish, it'll hold right here. We got the 60. We got the 63 cross the 200, and the 63 is at the 200 EMA. This is the SMA, and these are EMAs. So I'm getting ready to buy the 60-30 strike again. If I can just get a knife right to here. The crowd's going wild here at the Sports Arena. We got a tweezer bottom, so I could buy 2 and then add if it does dip. Is that a good wise business decision? My lesbian friend at the IRS is going to retire in September. The plumber has not got a hold of me yet. Well, let's just be the plumber. Always clean as Jim. Yeah, is this the plumber?
No, actually, this is not a telemarketing call. I am not here to sell you anything. To reach out because a new subsidy has released in your state in this special enrollment period, and it's super easy to qualify. I just need to confirm if you already have any government coverage like Medicaid or Medicare.
No, I do not.
Perfect, and are you under the age of 65?
Barely.
I was asking if you are under the age of 65.
That's personal, but yes.
I don't need any confidential information. All I am asking are basic questions that will help me get you the best benefits from Special Enrollment 2025. I just don't want you to miss out on some of the new benefits, which include free mental health care, pediatric and maternity care, and even free hospitalization. So you are under the age of 65, right?
Yes, I am.
Perfect. So you're qualified for the subsidy. Let me bring in our benefits specialist to tailor the best plan for you.
Oh,
Please
no.
hold on for a moment, okay?
No.
You know you do seem eligible for more subsidy and free essential benefits. It's a very narrow window for 2025 enrollment, and I recommend you update your benefits. So can I connect you with an agent now?
I'm busy at work.
It will hardly take a few minutes. You know you do seem eligible for more subsidy and free essential benefits. It's a very narrow window for 2025 enrollment, and I recommend you update your benefits. So can I connect you with an agent now?
If I get fired, will you make up for the pay cut?
On maybe a weaker than expected consumer guiding for this fiscal year. But let's expand this conversation on the markets. Bring in Alex Coffey, senior equities contributor here on the network. Alex, when you take a look at the chop, as Kevin mentioned, it seems really thin as far as the depth or liquidity of the market at this point. Because
I will if I'm Mary Caroline.
Hey, we were at all-time highs on Wednesday for the S&P 500 and the NASDAQ 100. On Wednesday, we finished the week down in the red on Friday, and
that was a smart AI right there. They're getting better at it. Play higher level. Back to 630 again. I did not buy the dip. I got so rudely interrupted. So I have one contract. Man, that's the best soup I've ever made. This soup went to a higher level. So, I don't know what it is, man. Tastes so much like curry. Well, that's very unprofessional, very rude. I had a German girl ask me for dinner one night, and I went over there and I belched at the table, and I said, "Honey, is it true in Germany that if you burp, it's a compliment? She said, yes. Let's go to the bedroom.
Do you play along with, as Alex mentioned, gold here at this point? Is that something that investors should keep an eye on?
You got yields lower, you got crude oil lower, a key.
Oh, we did hit. Look at that.
Inflation talk. If this core PCE goes down
Dadgummit, I missed it.
2.8 to 2.6, like the expectation.
Oh, I was wanting it to come down here. Freak out. I just freaked out.
Stocks are going to like that too, Tom. So I think the macro picture is setting up pretty well in terms of the big. Now that PMI number, the services part dipping below 50, that was concerning. Remember, the stocks were already lower because of UNH and its problems on Friday. So
I was rudely interrupted by an AI machine.
The overall the landscape of macroeconomics is starting to look pretty solid here, and you've got a lot of names significantly off their recent highs.
I should have took her up on the bargain. She said mental health. I need all the help I can get.
Yeah, Palantir is another one, Kevin. You forgot to mention that. I mean, that stock's what? I don't know, 25, 30, $34 off of its all-time highs that it hit just a few sessions ago. It's now down 26% from those all-time highs. That's
still
crazy.
10% higher than where it closed before that earnings announcement, just to go to show how big that move was.
Right, yeah, down another 9% today.
Hey, don't be pumping PLTR right now.
Investor Steve Cohen, 0.72, hedge fund manager, he's actually saying, hey, these tariffs are going to be a problem. Tough stance on immigration are going to be problems. He's doubled down in his negative view of the U.S. economy due to all these headline risks at this point. And he's pretty prominent, but highly followed. He doesn't mean that we're going to go down, but we're starting to show cracks.
Yeah, I think, all the points raised are fine, right? I mean, those are the opinions of this particular investor, but my question is always going to be to anyone who has any of those opinions, one way or another, is where are you going to put your money instead then? Like, you're only giving me half the answer, right? You're telling me you're taking money out of stocks in the U.S. perhaps, but where's that money going to go? Because that's really what the question should be, and that's, I think, the thing for investors is, yeah, maybe there are risks, but are the risks elsewhere bigger? And if there are risks, how big are those risks for what you perceive as the potential reward? It always comes down to trying to take calculated risk, meet your investment horizon, your goals, and as a trader, which some assets are tradable assets, you can do whatever you want at any point. So I look at this as, hey, this is an investor conversation. And then it goes to, okay, if you're going to take your money out of risk assets here in the U.S., where are you going to put them?
Yep, and that's always been the question, right? We're still best in breed. A lot of the Chinese stocks had been getting, bid up recently. Alibaba now down 9% today, and off about 10% from those highs that we saw just a couple days ago. Here, Kevin, it's looking forward, Kevin, you mentioned the PCE data that comes out on Friday, the core year over year is supposed to come down to 2.6%. I'm hearing rumblings at 2.5% after that hotter than expected CPI, PPI data. I know the Fed looks at that stuff too, but some of those inputs to PCE, everybody's saying, hey, this number is going to come down or come in below expectations, and that's going to be good for equities. Is that what the Fed's thinking?
I think so, because remember, when CPI and PPI came out, we didn't sell off. Those were hot reads on both those inflation data, and we didn't sell off because extrapolating the data, some of the parts that go into PCE and core PCE.
Okay,
were coming
I've
in
had my
weaker.
lunch.
So if that's the case, if you can connect the dots to those inputs to lower numbers, this could be like a downside shock on Friday.
We're coming down for the last support.
Listen,
This
the
is the
main
this is
worries for this economy, right?
this is do or die. Do you understand? Do or die situation right here. Mr. Hickey. Don't ever talk to me that way again. I'm not a hickey. I've had my soup, and I'm ready to take another trade. I'm watching this closely. Can't believe she's leaving. One thing about my job is I get attached to people. Then once they leave, I hardly ever see them ever again. On a personal basis, you know what I mean? We've all been there. And I remember probably my last real girlfriend, her and I had a little fling during high school. And once we got out of high school, I never saw her again. I moved to Memphis. And so I come back to Springfield and stopped in at this bar, play some pool and have a beer. Here we go. And she comes over and taps me on the shoulder. She says, "Jim." I said, "Laura." So she sits down, and then we start talking, and I buy her a beer. And probably wasn't 3 minutes into our conversation, she spills a beer on me. And I bought her another one. And she spilt that beer on me. And I should have known right then that I didn't want to see her anymore because she was a klutz. We end up, 15 years later, we end up dating and living together. And she was like the total opposite of what I was. If I wanted the heat on, she'd want it off. If I wanted to go outside, it was too hot, or if I ordered her a sandwich, she'd want to take the lettuce out, and I'd want the lettuce in. Here we go. I said it was do or die situation. I meant what I said. I said, I got to drive home and I smell like beer. Nike. $7.10. I'm up $200. Boom, baby. 8:30. Are we going to break resistance? Are we going to break resistance? Crowd's going wild at the sports arena. Jim says do or die. Randy, we're at 950. Do or die. I said it. You can't say I didn't. Yes. At a higher level. At higher level. Do. Bang it. yeah. Oh, yeah. Crazy. You can do it. Oh, yeah. Yeah. It's running out of gas. At a higher level. George.
First monthly cycle, so 25 days to expiration. Buy that 260 call, sell that same 260 call in the March 7th options that expire in 11 days. 2-week wide call calendar to the upside, paying $1 debit. There's your risk, $100 per spread. Alex mentioned, hey, if it grinds up towards 260, that's probably going to expand the price of this calendar. As time decay takes hold also on that short option, positive time decay, because it expires in just 11 days. But also, Kev, when you look at a trade like this, I mean, you might have an $8
Make sure you stay hydrated.
60 that you can become profitable on this type of position just due to...
I'm going to go into the kitchen and then go into my other office. I'll be back.
260, they seem aspirational, except the fact that the stock's already been there, Tom.
Yeah.
And if this market starts to recover, Apple can easily get back to 260, especially if they keep, remember, that news flow that I talk about all the time. If the news flow is positive on Apple, like it is today, extremely positive, 260, and I'm under the opinion, you don't have to get to 260 for this trade to be profitable. I think you get anywhere near 255, and so I think you'll be plenty profitable on this trade. So this is one of those forgiving, wide width spreads that gives you a light, a more range-bound but bullish look at Apple. And so yeah, anything above, in the mid 250s, and you're profitable on this trade, guys.
Yeah, gives you that upside exposure for a pretty low debit of just $1 on a 2-week wide calendar on that one. But Alex, when you look at this, if it does continue to rally, you get time decay that works in your favor. Do you roll it? Do you just close the trade if the market's open? I mean, there's still some trade management within this position.
Yeah, I think if you're anywhere near 260 when those short options are nearing expiration, you're probably going to want to consider doing something. Just you don't want to come in on that following Monday and have short stock because you were assigned. And that really changes the dynamics of the position in terms of how it's margined and may not even be allowed if you're doing it in some sort of account that is, limited margin. So what I would say with this is the big key thing here is we just talked about a market where there's prominent investors who are waiting. Warren Buffett, big cash pile, record cash pile. they're waiting for a reason. They think that there's going to be opportunities at some other point. This allows you to be involved, but in a small way, so that you can also do the same thing, which is wait with maybe a larger percentage of your assets for other opportunities.
Yep, and there was some commentary out of the administration about that. Kevin and I always talk about that tax bill that comes due from the EU all the time. I know Representative Jim Jordan was out there stating, hey, why do they keep on taxing and putting fines on our big tech companies? That's probably a positive for this sector, especially a name like Apple that has some regulatory concerns over there also. You do have some assignment risk on that short option going into expiration over the next 11 days, but some upside exposure for a small debit on this $100 in risk on that trade. All right. Thanks to Alex Coffey, senior equities contributor here on the network, helping us break down markets and Apple. But coming up after the break, we're going to be joined by Landon Swan from Likefolio for a look at sentiment data in Home Depot. The home improvement stock's up a modest.
SPY's at my resistance level.
Over the last year into earnings tomorrow morning. We're going to look at the consumer.
SPY made it to my resistance level at 601.51. Are we going to break it, or are we going to pull back to the VWAP to the 200 again? We do have one resistance line here to look at. Right there. That's it. If we don't hold that, we're going to drop down and hit the 200. I guarantee it. Jeremy, Randy, say yes. Trusted my levels. Victory. ICTORY is Punk's victory battle cry.
Folio. Welcome back to the show, Landon. Do we have... Oh, I do not believe we have Landon at this point. Hopefully we get...
Hey guys, sorry about that.
Oh, no worries.
You with me?
Now we've got you. All right.
All right.
We got
you do. Happy Monday, guys. Good to see you.
Good to see you too, Landon. So Home Depot, I mean, it's, relatively flat year over year, up about 3.5% or so. It's kind of, fallen from highs that we saw just a couple months ago. When listening to Walmart last week and, maybe the guidance moving forward kind of hit that stock even though it was at all-time highs, is there some concern? Are you guys seeing any concerns on consumer spending? And
there's knife.
Home Depot here.
Yeah, I mean, there's definitely concerns. I mean, when we look at Home Depot, this is, they've dropped, 36 points in the last 10 calendar days. I mean, it's, everything's kind of sold off, I guess. But, they've moved down, they've moved the wrong way. And a lot of the data is kind of pointing at that. I mean, when we look at web traffic, app usage, both of those are down. And that's kind of, web traffic is sort of, what we look for when it comes to their do-it-yourself type consumers, and then of course the pro app usage is what we look for on the pro side. They're doing better than Lowe's. That's the good news, but they're still negative. You don't want to see negative, of course. And their pro app usage is also down significantly, about 15% on a year-over-year basis, and that's obviously concerning because they've got that healthy split of pros versus do-it-yourselfers. And of course, you can see the cyclical nature. This month is not as important as summer months, generally speaking, but still down year over year is bad. So this is corrected for that cyclicality, but down 15% is a concern. I think a lot of it just has to do with things that they can't control. The housing market is tough right now. You got high rates, you got low inventory, high home prices. There's just not a lot of turnover, and they need that turnover. Every time somebody buys a new house, the first thing they do is they go to Home Depot and start thinking about projects and hiring contractors to do things. And the less home sales, it's worse for Home Depot. So that, I think, is a big problem, and it's expected to remain stagnant for 2025. Also, a lot of people are putting off those big ticket items and just the large projects. The purchases that are over $1,000 at Home Depot are down almost 7% on a year-over-year basis. I think you can contribute that to high borrowing costs. If you're going to get a HELOC to do one of these projects, it's a very high rate. So maybe you're going to wait on that. And there's also some economic uncertainty that we're getting from consumers just in the data that we see. So overall, I think there's just tough macro conditions. I don't think it's Home Depot doing anything necessarily wrong. They completed that SRS acquisition that added, that will add about $6.5 billion in annual revenue. It will tighten up their margins a little bit, but still, it's going to solidify them in the pro market. They've done things to increase efficiency, but overall, I think a lot of it just has to do with just the macro conditions being kind of wrong for Home Depot and Lowe's right now. But Home Depot, as we're seeing, is doing slightly better. But tell that to investors over the last 10 days, they're not happy. So this is a tough time right now. The data for us is fairly bearish, but the stock move is moved so sharply recently that it kind of balances our score out. So we're kind of neutral going into this one with the data or a lot of the bad news sort of priced in.
That's exactly my point that I was going to get at, Landon. And if you're watching stocks like Home Depot, you understand where you are. You understand the housing market. You understand stingy, high interest rates, and maybe the projections going forward. Is this a name, Landon? Here's what I need from you today is this. We know what the data is on Home Depot. They've got lower ticket size, lower comp sales, lower operating margins. But here's the thing, Landon. If interest rates were to come down significantly and the 10-year yield and mortgage rates were to come down significantly, does that immediately make Home Depot a buy here? Because if interest rates come down, a lot of this is going to free up. Housing has been under pressure, and Home Depot is a second derivative of housing, let's face it, and the higher interest rates have hurt that. Is Home Depot a buy the minute mortgage rates start to drop?
Yeah, I think there's an absolute inverse relationship between mortgage rates and Home Depot stock value. And once you see that, everything that I talked about, the downside to Home Depot was basically either the housing market or high interest rates to borrow costs to, put off large projects, economic uncertainty. If you see that come down and houses start moving again, then this is a bargain at 385 or 383, whatever it is right now. So yeah, absolutely. And now, we need to see a dip over, I'd love to see it, get down into the low sixes and forward from there. But yeah, I think absolutely if rates come down, houses start moving, people get a little bit more comfortable borrowing, doing those projects, then you got both of those coming back. So I think that is so much of their business is new purchases and large projects that we have to see that come. And, again, it's just a tough business to be in because a lot of what you depend on as a Home Depot, investor is out of your control. It's out of the company's control. It's all about interest rates in the housing market. So yes, absolutely, I agree. And I think that investors are tired of seeing these comp sales decrease. I think the last report was the 8th quarter in a row where comp sales were down. Now October, the last quarter there was up, a lot of that, I think, speculation is that was hurricane related, and we're not sure if that's going to continue. So, they've got to break this streak of 8 quarters in a row of comp sales down. But I think a lot of it is out of their control, and unfortunately, we just have to wait. I think, you guys can give me your opinion. I do think interest rates are probably going to come down, and couldn't be soon enough for Home Depot investors.
So I'm going to give you my scenario here that if interest rates start to come down in the environment that we are economically, that means something's breaking at this point, Landon, just because, hey, the jobs market's robust, people are working, wages are going up, but if interest rates start coming down in this environment, inflation starts coming down, does that mean something's broke where, hey, this consumer that's already been under pressure and the prices aren't coming down at the store, that traffic's going to dry up a little bit, and maybe inflation's still going to be sticky? Is that a concern? If you've seen that with anything else, I mean, consumer sentiment data is a little bit weaker than expected. We get some more consumer numbers tomorrow with consumer confidence. I mean, there's still some, overhang there, right? At this point, Landon?
Yeah, I think obviously any kind of move like that is going to be dissected and analyzed from multiple angles. Yes, I would agree. You don't want to see weakness in the general economy, and if that's what it signals, that's generally bad, obviously. However, if I'm a Home Depot investor, I'll take that chance because I need houses moving. Right. I need that turnover. I need people moving into a new house, looking to remodel the bathroom, kitchen, whatever, and start hiring pros again because, buying new refrigerators and new appliances over $1,000, all that's, again, down 7% year over year.
Always clean the
They've
gym.
got to see those kind of purchases, and I think for Home Depot specifically,
yeah, doing fine. Who's this again?
I take that trade. I take the consumer's a little weaker, but houses are going to start moving. As an investor, I'd be like, sure, that sounds good to me. Now, for the rest of my portfolio, maybe not, but just for Home Depot, I take that trade.
All right, great breakdown for us. Relatively neutral going into this report. Appreciate it, Landon.
All right, thanks, guys.
Yep, that's Landon's portfolio.
Yeah, I do. Give me a second.
Depot for us. Kev, if you think about it, yeah, the
You got
stock's
a
only
number?
up 3.5% over the last year, but this stock hit that all-time high of 439 just less than a month ago. Or about a month and a half ago.
For the plumber?
In 2024, we're off about 12.5% from those highs.
Yeah.
We're right
Just
at
give
the
me 1 second
200-day
here.
moving average. This might be, at
Exactly.
381 is a
Blackout
200-day
on the
moving
name
average.
for some reason. I'm busy and stuff.
Exactly, and we broke it today, and then
That's all right.
if you notice.
No,
And so,
no.
I think that is
It's called
the
Mojo
genesis
USA
of
LLC.
My paper money trade.
MOJO
Look at it holding near
USA
their 200-day moving average. Tom.
LLC.
The expected move, $15 in either direction, and it, like I said, it's already sold off pretty violently in the last 2 weeks since maybe February 1st. So I guess it's 4 weeks then, but. Tom, I think you got to look at this as any break in interest rates, any break in inflation. I think, Tom, your discussion on what's happening if rates go down, I think there's a natural disinflationary pressure on the United States market. And if that starts to just happen organically, Jerome Powell's going to want to stay ahead of it and move interest rates. And that'll move mortgage rates, and I think that energizes a company like Home Depot. So the paper money trade I did, Tom, I took where it's trading right now, very close to the 382, 383 level, and I looked at the expected move by $15. I went in a little on the aggressive side and sold the 370, 360 put vertical in just this week, Tom. So 4 days till expiration inside the expected move, although right now it's because the stock has rallied slightly, it's right at it. And so I put it in around $2.05. It's trading a little less than that now, trading closer to 180, 185 range. But this is a high probability short put vertical that 3 of the 4 scenarios, when I look at the 365, it's a 79%.
I thought you liked that.
Probability of finishing out of the money, Tom. So this is just a high probability short put vertical that is risk defined, collects theta, and of course high probability, Tom.
All right, yeah, let's break this one down. Feb 28th, as Kevin mentioned, it's just 4 days to expiration. You're going to capture that earnings event tomorrow morning. So you have some duration, even if it maybe falls after earnings. You've got some duration on this to the end of the week. Sell the at 370 put, buy the 360 put short. $10 wide neutral to bullish, put vertical collected. Yep, we've got 205 up there. If you collect 205 credit, you've got $795 in risk on that one. As Kevin mentioned, it's off about 20 cents from those levels because the stock has rebounded along with the overall market here over the last half hour or so. That break even 370 or 367.95, as Kevin mentioned, you've got that higher probability, over 70% that it's going to remain above that break even point at expiration. As Kevin mentioned, 3 out of 4 scenarios you profit on this one, right? Stock goes higher, stock stays where it is, stock goes lower, but remains above that break even, just below 368. It's going to be profitable on this high probability short put vertical. So good look at that. Home Depot looking for this 200-day moving average to possibly hold here at 381 as it did earlier in the session. All right, Kevin and I are going to take a quick break here. We come back, we're going to look at Zoom Communications. The video platform stock is up nearly 30% over the last year. They report earnings after the close. Stick around.
Binge watch the market with Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com on all your streaming devices. Schwab Network is available anytime, anywhere, on any device for free. No place better than the Schwab Network.
Welcome back to Fast Market here on the Schwab Network. Before we take a look at Zoom had earnings, let's take a look at the markets, which are bouncing. We were relatively flat at the start of the show. Now we've got the S&P 500, the benchmark, up over 0.2% at this point. So making up some ground, up 0.3% now. The Dow Industrial's up nearly 240 points. NASDAQ still slightly red. Some of those big cap tech names weighing down: Netflix, Amazon, Microsoft.
Become a scalper.
Platforms in the red at this point. And then the Russell 2000 was negative, now popped into the green. So lots of movement, lots of volatility.
Lots of volatility.
The market can hang on to these gains. All right, let's get into a discussion about Zoom Communications. It's not Zoom Video anymore, it's Zoom Communications. Let's bring in George Tillis, Senior Markets Correspondent here. George, it seems like, post-pandemic, this was a big pandemic winter. It struggled for a couple of years, but now it's a little bit of a resurgence. We're up over 30% over the last 12 months. What's going on here with Zoom Video or Zoom Communications?
Well, definitely, I think it's I think it's quite meaningful. I mean, you're right. If you look at the last year, the stock has recovered. It's up about 30 or so percent. The last 3 years, the stock is still down about 30%. So, for what it's worth, it seems to have found at least an intermediate term inflection bottom. With the stock again really demonstrating some resilience despite the fact that we know that this was a pandemic darling name. It's still highly utilized in terms of uniform communications as a service-based platform, but they're facing some challenges in competition. We know that Microsoft is actually encroached on their business quite aggressively. And it really comes down to, Zoom, as we know, is highly popular and ubiquitous across the enterprise space, but also, for people who want to communicate, let's say, with family members as a group, it's actually very useful. But one of the things about Zoom that's been challenging is its growth rates. Its growth rates have really compressed significantly to the point where it's now really just growing its earnings right around the mid-single digits, around 5%. And its sales are now really low at around 2 to 3%. So it's become really a slow growth company. But like you said, if you look at the last year, the stock price has recovered because I think this is potentially now a value-based name that people may not necessarily realize is the case. I'll explain in a sec, but if you look at the earnings per share for the quarter they're about to report, now they're expected to report a slightly decline in earnings at $1.35 versus the $1.42 they published last year. So that's down about 4.9%, with sales expected to be higher by about 3.5% for the quarter at $1.19 billion. Now, one of the things I noticed about Zoom, this is maybe where there's some value in this name, is if you look at the growth rates of the underlying business on a forward basis, they're expecting on a full year fiscal 2025's EPS growth only around 5%, and sales are expected to be between 2.5% and 3%. So it's not a high growth company anymore, but right now it's trading in the mid-teens at around 15 times next year's earnings, which we're in right now in terms of the fiscal year. Now, historically, it's around 45 times. Reason being is obviously the growth rates for on the 5-year average were significantly higher for Zoom. What we've actually seen is a multi-year multiple compression in this name. Now, if you do consider the mid-teens valuation,
we're at 790.
A P ratio around 15. That does fall in line with stocks that are growing in the mid-single digits, both in sales and earnings, which Zoom is. But the kicker is, for this name, is the balance sheet. They actually have about $7.7 billion in cash.
The plumber called and asked me for the name of your business. She's trying to set up an account.
This stock has about 30% of their total market cap in cash. So that to me suggests flexibility, and that flexibility could come through perhaps with share buyback, a dividend, strategic acquisition, or perhaps some.
She said she left a message with you.
Capital expenditures, which they can certainly afford considering that big cash position on the books.
George, you look at a 1-year chart and it looks fairly solid. You look at a 3-year chart and it doesn't look bad. You look at that 5-year chart and you realize what's happened to this company over the last several years. $588 to $80. Now, that's in the past. We have to look at this as the stock that it is now, which is a more mature, slower growing, financially healthy, like you mentioned, company whose margins are improving. The cash balance is impressive. The metrics look a bit undervalued. They are still making changes, George. So maybe if we look at it a different way than the crazy
I gave her that
flyer that it was during the pandemic, maybe you just have to look at Zoom through a different lens now.
I like that analysis or that view, Kevin. That's how you really have to consider this stock. It's most likely, and it certainly could, but I'm saying most likely not going to be a high flyer once is. It doesn't, or once was. It doesn't necessarily mean it can't be a slow grind stock to the upside, because we talked about, the growth rates are really in the single digits, and with that said, it doesn't necessarily mean the stock can't just inch slowly to the upside. So the whole days of those huge gaps and huge parabolic run-ups are probably done unless there's a major transformation of the business or some other catalyst. And I think considering the cash on the balance sheet, that's quite robust. And so therefore, with that multiple that's trading at very low levels, the growth rates in the mid-single digits, and the cash on the balance sheet, I think these institutional investors who look for growth at a reasonable price, kinds of companies, Zoom, is no longer that growth company, but it is growing at a reasonable price, considering all else equal the conditions that it's in. And I think that cash balance is quite valuable, and that's probably why. I'm not saying it is exactly, but most likely why there's been some bid from an institutional standpoint in this name, irrespective of the fact that it's no longer the growth story it once was.
Yeah, enterprise customers paying more than $100,000 annually. That increased 62 last quarter, nearly 4,000 of those. So yeah, there's still, people are still using this, and companies are still paying for it. Even though it's fallen out of favor, and Kevin mentioned that 5-year chart. That's pretty ugly. All right, great stuff. Thanks to George Tillis, Senior Markets Correspondent here, helping us break down Zoom video. All right, Kev. This stock, as you mentioned, a pretty good looking 1-year chart on it. The option market's pricing in a plus or minus $7 move either way in the shares. So that's how I set up my trade. Alex Coffey talked about on Apple, the upside call calendar in Apple. I'm looking that same way, but I'm going to do a double calendar here, Kev, to take advantage of maybe that $7 move. I don't have to pick a direction, whether to the upside 1 standard deviation or to the downside. Double calendar position, really short term. Going out to the March 7th weekly options that expire in 11 days. I'm going to buy the 87 strike call, and I'm going to buy the 73 strike put, both out of the money. And then I'm going to sell those same strikes in the February 28th weekly cycle that expires in just 4 days. Sell that 87 call, sell the 73 put. Double calendar position, 1 week wide. Paying a debit of roughly 40 cents.
We're back at support.
$40 per spread that you do on this one, with the apex of profitability at or near 73 on the downside, at or near 87 on the upside. But Kev, you want it to go to either one of those strikes, about that 1 standard deviation move. But I looked at this when the stock was trading about $80. It has risen with the overall market. But you still have a range probably just below, $70 a share and just above 93, 94 to be profitable on this trade.
Yeah, this is a trade that takes advantage of the 109 level of implied volatility in the front expiration and a 73 in the second. And that's why you can do a double calendar for 40 cents. Now, you still need some movement towards the range, but you don't have a lot of money at risk, Tom. It's a relatively inexpensive way to play a name. And the question you ask yourself, is there a chance for a $7 move in either direction? If you think there is, then this is a trade that you should look at. But you don't have to know which direction. You can do the call if you're just bullish. Yeah. You can do the put if you're just bearish. Or you can do both, Tom.
Yeah, Kev, when you look at this one, you look at
okay, we're off to 63 here.
Without any changes in implied volatility. The long options that you...
all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account.
Well, the new support is going to be the 200 right here.
Every morning, our analysis is your blueprint for the day. Bonds, stocks, across all asset classes on Morning Trade Live on the Schwab Network. Weekdays at 9 a.m. Eastern.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education, crafted just for traders. Also, you can trade brilliantly.
Whether you're a bull or a bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Welcome to Next Gen Investing. I'm Jenny Horn, joined by Alex Coffey, and we are seeing some moderate strength to kick off this session. I will say that the strength is led by the Dow here, weakness in the NASDAQ, but all things considered, a pretty quiet session today to kick off what was ended up actually being a pretty interesting session last week, especially following Friday's selling and, of course, closing out a losing week last week.
Yeah, mega cap tech is heavy today. That's really why you see a market that has any red on it, to be quite frank with you. About 70% of the S&P 500 components are higher on the session, and actually 55% of the NASDAQ 100 are higher, Jenny. So to me that says you actually have a fair amount of stocks that are doing quite well, but you have some pockets of isolated weakness, and it just happens to be in all the right places. Microsoft, Broadcom, Palantir, CrowdStrike, Meta. What a fall for Meta the last few days. It's on its own little streak now to the downside, except the moves are a lot bigger.
Yeah, that is a substantial mover to the downside. We'll also actually be talking about another name that's seeing a pretty significant repricing, that being Palantir, but that's when we'll dive more into these individual stories. As we know, there is some more economic data to be released this week. We're pretty earnings light, with the exception being NVIDIA, which we do get this week on Wednesday. So there's still some major tech names to watch, but like I mentioned, the repricing in a lot of these pretty big names, Palantir being one of them. So as always on this show, we will kick things off here looking at some of the biggest movers and really the biggest analyst calls we're seeing to kick off the trading session. We'll also dive into Palantir, as it now
is down for its fourth consecutive session, which is down about 26% from its recent highs. We'll also be looking at the future of AI. We've got a special guest really here to discuss more about what that looks like and the ways in which AI could potentially shape so many of our lives for the better, of course. And we'll close things out with a name that is also in the AI world, but retreating along with the broader market weakness we've seen in tech after gaining about 40% over its 4-day winning stretch last week. But now we have the deadline for the Nasdaq listing, that's Supermicro Computer, which has a lot of news, and tomorrow is a big day for Supermicro.
Yeah, and semiconductors weak today doesn't surprise me that Supermicro is a little bit weaker. But yeah, with that kind of looming uncertainty in the balance. Let's do upvote, downvote, though, not endorsements, not recommendations. Starting with Tesla. Tesla's basically unchanged, I would call it, down $1 on a $300 and some stock that trades with pretty, premium volatility compared to the overall market when you're talking about 60%, and the market, if you just look at VIX, is sub 20. So let's call it, a pretty steep premium in volatility. To be down 25 basis points, that's unchanged to me.
Yeah, I would agree with that as well, especially given some of the pressure. Talk about another name that's seen a pretty substantial retracing from highs. We're down about 31% from its recent highs, while remaining off of lows by about 144%. We did get some news from Bloomberg with the first initial report I saw that we could see a software update regarding their self-driving features in China in just the next couple of days. Tesla is expected to deploy their FSD features in China, in the coming weeks, so this could be now obviously coming to that key region as soon as really this sometime in the next coming days. So that's a pretty substantial deal. Also, I was reading a note from Wedbush that really highlighted the question of whether we're seeing right now for Tesla that absence of Elon Musk and a lot of the nature of the high profile trading that has come along with it. The short answer is that they think is actually no, Elon Musk is not distracted. This is not weighing on Tesla shares, and they do think that there's plenty of catalysts still pushing the stock higher, including the fact that we can see that Tesla still really defying some of the challenges with its Model Y.
Okay, I got NVIDIA's earnings coming out Wednesday evening. We had a little pullback. I called back here at 131. We've up $3. Go back and watch that video if you like. Sound came back and almost hit my 904 that I called out in the video. We hit 908. This one's a little iffy. It says it's trading lower on overall market weakness. Then we got Fubo. Fubo's had some volatility today. Elizabeth Warren slams Disney. Wonder why. Fubo deal with DOJ letter. Disney Fubo deal raises antitrust concerns. So Disney and Fubo's got something going on here. I wish she'd just stay out of our life. Hims almost hit my first support there and had a nice bounce up. This one here I'd be watching real closely. We got Home Depot coming out. Earnings on it. Let's see what they got to say about it.
Consumers have put off some of their larger and fairly discretionary type purchases. However, we did see they were able to actually top their comp sales and expectations.
Did pull back to my first support.
A smaller drop in annual same-store sales in November, which was a sign of improvement. So I do think
it's like a
that
quad bottom.
Continued signs of improvement. It's been more of a comeback story for Home Depot, but I've always said this is, to me, one of the ultimate reads on the macro here, because you're basically exposed to inflationary costs. You see the consumers that have discretionary spending, but also you have a read on truly raw materials, labor, but also then some of the unfortunate natural disasters that have also faced the country over the last quarter, like the wildfires in LA, which I'm sure actually tend to bode well for a name like Home Depot.
Yeah, you'd hope that they're, I guess, taking advantage of the situation in the sense that they're there to help, but not, kind of price gouging. A company this size isn't going to be doing that kind of thing more than likely. But I like your point about professionals, do it yourself. It's about a 1-to-1 relationship for Home Depot. It's closer to 3-to-1 for Lowe's. So if the professional side of the business is the strength, that will favor Home Depot relative to Lowe's. If it's the other way around, outsized exposure for Lowe's. So that's always a fascinating piece and always something that I think analysts and investors and traders are always trying to figure out whenever we hear from one before the other.
Yeah, and I think that's a good point. I always remember the key distinction of this suit. I mix it up, so I think good to differentiate that. But our next name today is Nike, and an amazing fact I always try to bring up whenever we look at Nike is, for as much flack as this name has gotten, falling out of favor with some of the younger consumers and just really actually even the market, as this name has underperformed for the better part of the last 12 months, Nike is still larger than Adidas, Lululemon, Alo, On, and Puma combined.
Yeah, we've talked about this a lot, but my question is, has Nike really fallen out of favor, or have just these other names really caught fire? I mean, the numbers suggest you're right, but I still think of Nike as maybe I'm just out of touch.
Yeah, okay, maybe I am too. No, and more in the sense of falling out of favor of hey, we're still down 24% on a 12-month basis. I guess I can't speak to what is in it or isn't in favor.
Nike revenue is down 11%. Just the Nike brand, and that's what's expected to be. It was down 7% last quarter, 10% the quarter before. But footwear was down 11% last quarter, 11% the quarter before that, and expected to be down 13%. So I know that this is an optimistic analyst, but they're calling a rebound before the market's really pricing that in.
That is correct. Yeah, this note is as optimistic as it gets. I mean, Jefferies today upgrading to buy from hold, price target of 115 from 75. Saying that their new CEO is really now tackling a lot of their distribution issues, as well as taking on this head on and really positioning the brand to grow and gain back this lost market share. But they also did highlight that the brand remains very strong despite some of these issues that they believe were self-inflicted. And they see this V-shaped earnings and margin recovery story now happening by fiscal 2027, well ahead of consensus, which they believe should drive its valuation only further from current levels. And they did also call Nike a new top pick. One thing I also think that is important to mention, I actually saw outside of my financial news really circle of news I follow, is actually that Nike will be partnering with Skims now, which of course is Kim Kardashian's own athleisure shapewear type of brand. So that's also huge. So this is an effort to get actually more women onto the Nike brand, which this will definitely do, because Skims, to me, is so hot right now.
Yeah, that is not my wheelhouse, so I don't know. I really am out of touch, I guess. But what I will say is Nike, though, the fact that you're starting to see some optimism out of China has to bode well for them. And so you're starting to see the stock of Nike almost look like the Alibaba type recovery, where you're starting to see that breakout attempt. Now, we're going to get earnings from this company on the 20th of March, so about a month away. Not quite to that awkward time frame yet, but we're creeping up on it. It always bookmarks the end, or bookends the end of earnings season, kind of unofficially. So bear that in mind. Third week in March, we'll get earnings from Nike. Speaking of, let's talk Alibaba. That's the next one on our list. Now, this stock has been a force. Now, it hasn't been today. It's down almost 10% today. Other than that, though, it's been a force.
It has been a force. Okay, and even with today's almost 10% move to the downside, we're still up 55% this year. So that really speaks to the force in which we've seen upside in this name, or 54% now, excuse me.
It's still up over the last 5 trading days, which is incredible. How can you go down 10% and still be up over the last 5 trading days? Not very many stocks can say that.
It's still up 31% this month, even with a 10% pullback. I mean, it's just a truly amazing story to watch. Morgan Stanley today, though, upgrading shares to overweight from equal weight. Price target raised to 180 from 100.
God.
So some substantial upside even from where we are currently trading just below $130 a share. But they did say that they underestimated the surge in the company's AI, and that they do think the resiliency of its core Taobao and Tmall group businesses will continue to really resonate well with consumers. And they also did say that cloud revenue will double in the coming 3 years, as they now view this as more of a high case scenario. But they do think that right now there's some pretty strong consumption trends for Alibaba. So all this paints a positive tone This is not the only name that is seeing this weakness today, though, as we're seeing a pretty substantial sell-off in a lot of these Chinese exposed names.
Yeah, and I'm not the technician. I'm not the the chart master. But we looked at this one. Obviously, it was in the midst of a breakout. That would still be intact even if this stock fell like another $10. So not uncommon for a stock to break out and then kind of pull back to that breakout point, use that as support, and then carry on. So if you're bullish this name, nothing out of the ordinary just yet, other than the fact that this stock is moving with some velocity in both directions. If you're swinging around 9-10% a day, not for those who have the weak hands, as they say.
Yeah, the only name that's even making as close of a move to the downside is JD.com, which is down about 7% on the session. So yeah, some weakness today in a lot of these Chinese exposed stocks, but we'll be looking more at our names with earnings ahead. We will be talking Home Depot ahead of their earnings tomorrow, as well as Nike ahead of their earnings later in March, of course. We'll dive into those names. Stick around. We'll be right back.
Wrap up the trading day with me, Oliver Rennick, for the biggest earnings coverage, 3 p.m. Eastern. It's Market on Close. No place better than the Schwab Network.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
No politics, no noise, from bell to bell and beyond. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Next Gen Investing. It's now time for our Chart Master segment. And joining us, of course, is our lead markets technician, Rick Ducat, to help us break down the technicals. And we'll start off with Home Depot here, as we have two names, both ahead of earnings, but Home Depots are definitely the one that is imminent here. So when we pulled back from highs, we are still remaining well off lows by about 19% here, Rick.
You know, I'm a dad. I live in the suburbs. I own a home. I spend way too much time at Home Depot.
Time
way
and money,
more than
I'm
I'd
sure.
like. Yeah, exactly. So this is one I'm personally very well acquainted with in terms of the actual facility. Now, when we look at the chart here, we can see, though, that we have been trending downward off of these highs near 439. That was our 52-week high. Since then, we've kind of trailed off here. For the most part, though, we were staying above this longer-term trend line connecting these lows. Most recently here during the end of last year. Now we can see, though, we have broken through our trend line. We are testing this repeated low point that matches up with that other low that I just circled there for our trend line. So it's kind of a double area of interest there. So around 382 or so is where the repeated low comes in. We also have our 252-day exponential moving average, our purple line there, quite close. So 380, 381, 382, around that general area could be a key supportive area to keep an eye on here as trading progresses. For also, notice that momentum, RSI, our measure of momentum here, has fallen below the 50 midline, getting quite close to that oversold area, Jenny.
Okay, so now when we sort of assess some levels now moving forward, we are looking for, like support and resistance, and as well as some key things to keep on our radar as we go into earnings. Not a huge earnings volatility play, but I guess anything can happen, of course, on the back of these earnings catalysts.
Yeah, there's always opportunities, and you never know what's going to happen. If we do start to break below this repeated low point here, that also happens to match up, as I said, with our 252-day EMA, as well as our -1 standard deviation channel. A breakdown below that level could be energetic, So the volume node that's closest is right here around 375 or so, this area of heavier trading, relatively speaking. We've got another one down here near like 363 or so. To the upside, we've got the confluence of our yellow 21-day and orange 63-day exponential moving averages near about 403, then our volume profile point of control near about 410.
Okay, so a lot to consider here, and Home Depot making a modest move to the downside today ahead of those earnings, but now we will focus in on the example trade. And Alex, when we look at trading this name, again, for example purposes, what do you think about when you consider Home Depot here?
Yeah, I think
always
some of the
clean as
trends that
Jim.
we've talked about in recent years have just not been favorable to Home Depot. The chart was...
Hello? Always clean this Jim.
put buying next Friday's 370 put. So this could be structured for a smaller debit if it was just a calendar spread on the same strike. But Rick kind of talked about that stair step of support levels below around 370 and as well as 360. So when I looked at this one, $3 debit, $300 at risk, it allowed for kind of escalating degrees of profit if you got a big flush to the downside, still risk defined if it doesn't. And of course, it eliminates that theoretical downside risk altogether in case this one really got moving to the downside in the midst of some disappointing earnings.
Yeah, and we'll have to see how the earnings are able to shape up, of course, for this company, as it's one of our behemoths that's yet to report here in the retail world. Another name, though, that is considerably large, as I pointed out, larger than most of its closely related peers, that being Nike. We get earnings March 20th, so we have some time there. But another name that's trying to break out, trying to actually have a pretty strong year, and we're doing at least better than we did last year, because we're up about 6% on the year, Rick.
Yes, and today's price action does look somewhat encouraging relative to our year here. The reason I say that is because if you were to go all the way back here, our labels there are cutting it off a little bit. That was our high point during the past 52 weeks, connecting here and here, and now you can see that we are breaking above this longer term blue trend line here. So an interesting situation to be sure, also taking out the older highs from January there. However, stopping short at this relative high right here near 81.18, this spike up that we saw earlier, or rather, excuse me, later at the end of last November or so. So a bit of a question mark here, because on one hand, we broke through a longer term trend line. We've pushed above our moving averages recently. Our moving averages are starting to slope upward. Our faster 21-day is probably going to cross above our slower 63-day if price action were to continue this trajectory here very shortly. So there are signs that the trend is improving, but just don't jump the gun. Don't assume it's changing and get yourself caught in a bad situation. Wait for some kind of confirmation, whatever you decide to use, but wait for the signal to be clear.
Okay, so now when we assess key price levels, again, we saw lower lows, lower highs in Nike. While we're trying to recover, it's been a long-waited one. So what do we watch for now as far as key support and resistance?
So another thing that's interesting about this breakout that's potentially happening today is it's also cleared us above our volume profile point of control. When you have a chart that's seen a rather severe decline and you have the heaviest trading activity at the low end of the chart, many people would typically interpret this as the potential for some kind of significant price bottom there. So I'm not saying that's going to happen. I'm not saying saying, that's how the situation is. But this is a thing people often look for here, and that situation is kind of what's developing now. So if we were to keep moving upward, another volume node near about 83, and the extreme price levels to keep an eye on are 81.18, and then here we had a high point after a gap down near about 85.23. If we were to keep moving lower, look for this gap to potentially be filled, our light green line near 73.50.
Okay, yeah, so a lot to consider here. And Nike actually making a pretty nice jump on the back of some bullish analyst commentary. So no earnings imminent for this name, but a nice 5% pop to start this week off. So with this being in mind, and of course some more bullish activity for the day, Alex, walk us through then a more bullish leaning example strategy.
Yeah, starting to build a base, it looks like technically, obviously, super optimistic analysts. So I looked at a bullish strategy, staying ahead of that earnings event though still. So kind of looking for a rally to continue into that event, but not necessarily using that event as the catalyst. Now, this was an out-of-the-money spread, and so what you'll see is it's the 81.84 in the March 14th cycle, which is the week prior to that earnings. It's a $3 wide spread, but only spending $1. So it actually sets up a situation where you risk 100, chance to make 200, but you got to get to 82 over the next couple weeks just to break even. So you need some help in the market. But if you get
Cart came down and hit support
2x on the risk
today.
But of course, again, you got to be right for this one to work out.
Cart did, and he got earnings coming out on it too. We bounced off this 200 3 times in 20 days.
Investing themes. 40 customizable themes, up to 25 stocks in just a few clicks.
Get each and every angle, the whole picture, everything.
A lot of these are coming back to my support level.
360. Catch us right here at the New York Stock Exchange on Trading 360, only on Schwab Network.
This one broke below it.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
There's some bargains out there.
I've seen something from Schwab.
The way today's acting, we might just start rebounding back to the upside. It's now 12:27.
Usually the company will come out and actually announce that because it's a material adjustment to any type of forward guidance. Not saying that they have to, but that's just something to keep on the radar. If you are seeing those type of trends, maybe we do get some commentary from the company before the next earnings announcement, which is going to be another couple of months from now.
KG, how do you make sense of this one from a technical standpoint? I mean, I look at a stock that's 25% off its highs, yet it's like over 10% away from where it gapped up still. Obviously, that highlights the volatility that this name can garner, but I think that there's nothing that's really changed, right? Like, it's still the same bullish construction, right?
Yeah, it's still bullish. I mean, it stops being bullish really if you kind of break below $63, which is still a long way from here, right? Around $30. But you basically want to come back and really try to retest that $80 to $85 level, see if some buyers actually step in. Now, what makes this very difficult, once again, is you usually don't stop and see a turnaround within the middle of a gap. Sometimes you do, most of the times you do not. But the candle structure for today, if we kind of end where we are at right now, the bears definitely have it on their side with the stock being down about 8%. But if you look at it on an intraday basis, some buyers are actually stepping in. What you want to see from a technical standpoint is red candle days, but lower volume each and every consecutive day after that. And that really gives you the sense that maybe sellers are exhausted right now and maybe a turnaround is actually taking place. We're not seeing that quite yet, but the candle setup for today's session actually does look kind of interesting, that maybe some people are trying to maybe take a shot here.
Okay, so Kevin, what do you say to those that argue this name had become way overvalued? And right now, that's the nature of some of this pressure we're seeing, is that this is what happens when you have so many of the biggest names in tech in the market now priced at, valuations that are astronomical.
Yeah, I mean, it was very overpriced when you're looking at the traditional metrics. What I will say, though, is the growth rate when it comes to EPS growth as well as revenue growth, the EPS growth really kind of shows you that profitability side of the equation. And their ability to bring in new customers, very large customers at a very healthy clip. At some point, last quarter, I believe, is like, 20% quarter-over-quarter increase in customer growth there. Those are really, decent growth metrics. So you can understand that maybe a premium was assigned to this company here. And we're just kind of seeing a pullback. I just get a little bit cautious, though, Jetty, right? Because we've seen companies that have been traditionally overvalued and continue to run up, and then they grow into their valuations. NVIDIA is one, Tesla is another one, right? Apple at one point was the same. So sometimes you kind of play these trends until they actually break, because if you go off valuations alone, sometimes that gets you out of potentially bullish trades, especially when you're looking at the broader market as a whole. So a pullback may be warranted right now. You need a day.
We got earnings coming out on PLTR or what?
By any means of,
they keep talking about it.
Do you look to the broader market then for clues if what you're describing is happening? I mean, you see Meta after that historic run making a pretty steep pullback. You see things like MicroStrategy and Bitcoin turning around after its big run. It does seem like some of the areas that had been huge successes for investors and traders is the areas of weakness that we've seen in the recent sessions.
Yeah, for sure. And we see those type of cycles, right? We kind of see these narratives when it comes to stocks. Everybody's bidding them up, and we continue to see them rise to the upside. You see very stretched valuations. And once again, it's very hard to come to terms with some of those stretched valuations as the stocks continue to move up. But now we're seeing a little bit of a pullback. And you're right. I mean, Meta's seeing that pullback too. But on the other side of that, 19 consecutive trading sessions up is kind of an anomaly for any stock, especially one of that size. So a pullback is probably warranted. And actually, Hens is another stock that has been catching that same type of bid, and now you're seeing a little bit of a pullback. I think right now this is kind of a reset. I would not look at the broader market as a risk-on, risk-off gauge when it comes to Palantir or some of these AI names, because they have secular trends. What you want to be looking for is the narratives, the news items that actually hit the wire that could be beneficial and or detrimental to their business. And right now, they just had a bad week when it came to news flow. You had an unwinding when it came to long equity holders, as well as an unwinding when it came to options holders in this name. It'll find an area of support. It'll regroup itself and maybe move forward here. But once again, it's a secular trend that I find it very hard to believe that the U.S. government's not going to continue to try to improve their technology if they're looking for efficiencies. That's usually the easiest way to do so, and I would be very, very shocked if that's something that really materially impacts Palantir over the long term.
Yeah, and I can think of no better entity that needs to improve their efficiencies other than the U.S. government. So I think a great point and great way to leave it. Appreciate that as always, and the insight into Palantir and some of the U.S. government spending trends. Kevin Green, of course, senior correspondent here for the network. And so now, when we look at trading this name, I think difficult considering we're in a 4-day slide. But I mean, also, this is the fun of Palantir. I mean, this is the upside to looking at a name with this kind of volatility is you see these swings to the upside, but then with that comes a 7% swing to the downside.
No doubt. I think you put it well. And so what I looked at here was basically buying the dip, but doing so in a risk-defined way. What I looked at was this Friday, super short term. This is just looking for a pop in reaction to this sell-off that we've seen. 91.95 call vertical. So one strike in the money, one strike out of the money. Looking to spend half the width of the strikes. $4 wide spread. Spend $2. If you can do that, you basically risk $200 to make $200. If it falls below 91, full risk is on the table. Above 95, full profit on the table. Probably one of those two outcomes is going to happen by the end of the week. It's unlikely, in my mind, to say that Palantir will somehow land in this $4 window when it's moving, $7, $8 at a clip, it seems. So bear that in mind. Keep that in mind if you're looking at an example trade like this in a name like Palantir with this short amount of time. But with that, break even would be 93. So get above 93, stay there, a chance to make some money theoretically by the end of the week.
Yeah, and I think an interesting way to look at, of course, the name that sounded was 8% on the session, but Palantir has definitely been one that's been able to reward its patient and stubborn bulls, because this name has still been able to hang on to a 21% year-to-date gain, as well as a 13.5% month-to-date gain, while also remaining off of lows by about 360%. But now we've, of course, retreated from highs by about 25 and some change percent. But we will leave it there for
it's up a lot more than that, honey.
Straying too far away from this conversation regarding all of the investments into AI and government spending, because we are talking Microsoft coming up next, as well as the future of AI and some of the implications as well as benefits that could be now coming to our daily lives. We'll discuss more the outlook for all things artificial intelligence coming up next.
SPX is back at the 63. What do we got there? This is about a 50-50, right? Rob? Golly!
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Trading at Schwab is powered by Ameritrade, bringing you futures and Forex for round-the-clock market access, even when equities markets are closed. All on our award-winning Thinkorswim platforms. So no matter what or when you want to trade, Schwab has cutting-edge tools, curated education and insights, and trading specialists ready to help, however complex the strategy. With a wider range of opportunities, you can trade brilliantly with Schwab.
No politics, no noise, from bell to bell and beyond. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Next Gen Investing. It's now time to talk all things Microsoft. So now to tell us more about Microsoft and the ways in which right now the street is perceiving the same, the ways in which they're spending in AI and how they're navigating some of the tech turbulence we've seen. Now I'd like to welcome in Diane King Hall, the host of Morning Movers here for the network. So Diane, walk us through the latest developments with Microsoft here as we're down about 1% on the session.
Yeah, it is. There's some competing narratives around it from the analyst community. It seems like more of the negative headwind is taken into account given how Microsoft is performing. Right now it's down about 1%. This pressure can be tied to TD Cowen's channel checks. It's done some channel checks. It says from their channel checks, it looks like Microsoft has canceled leases with at least a couple data centers, 2 private data centers, and then they've also pulled back on something they call SOQs to leases, meaning what that stands for is Statement of Qualification. So that's kind of the precursor to signing a data center lease. It's kind of like, I guess the analogy would be like building permits to housing starts, if we're making an analogy to kind of the macro picture. And so they say, additionally, Microsoft has reallocated a considerable portion of its international spend to the U.S. I don't think that's the piece that's worrisome, but the canceling of the leases makes investors, I guess, question what does this mean for Microsoft and its allocation of capital as it relates to its AI infrastructure. At the same time, on the other hand, you have Jeffries out with a note today saying that Microsoft executives are rebutting that this is happening, that there's any change to their data center plan, that adjustments that come into play are just kind of par for the course when it accounts for their investment in the space, and it's just optimization is how they're characterizing it in Jeffrey's channel checks, but it looks like the street is paying more attention to TD Cowen's view.
You know, Diane, I almost see this as like the market's just a little negative right now when it comes to this particular idea of AI build out. And the reason I say that is the story breaks from TD Cowen, I think, on Friday. And all we hear is, Microsoft's basically confirming the DeepSeek stuff of this over capacity within data centers. Now they come out and they push back on it, and it's almost like, oh my gosh, now they're going to be at overcapacity. It's like there's no chance that maybe Microsoft knows what it's doing, and we should just basically give a little bit of credence to that. Final thoughts on Microsoft before we say goodbye.
Yeah, I think you got your finger on the pulse of things, and there's a little bit of nervousness and jitteriness, so it's more of like the penchant to focus on the negative here, especially when it comes to the AI infrastructure spin, and that, still kind of hanging in the back of investors' minds, DeepSeek and what this all means. Now, Mizuho saying that, this could be a course correction versus, just an overall broader issue. But again, it seems like right now it's the shoot first, ask questions later response.
Well said. Diane King Hall with the update on Microsoft, one of the movers to the downside here, weighing on this market, particularly the NASDAQ. Let's shift gears, though, but not too far, as we discuss the future of AI, safety, and more with our next guest, which is Alexandra Ebert, the Chief AI and Data Democratization Officer at Mostly AI. Happy Monday. Thanks for joining us here. Let's start with kind of your thoughts on the future of AI and where things are going. It's moved so quickly over the last 2 years. I don't even know where to start, so I'm hoping that you can help us out.
Of course, I have my crystal ball right on hand and I can give you all the answers. No, it's really fascinating times. We just had the AI Action Summit in Paris, Europe 2 weeks ago, where there was this big shift from the more collaborative open source move towards more nationalistic, winner takes it all dynamics. So the entire ecosystem is currently at this waiting point to see what will other nations do. The US, the UK, currently going more in the nationalistic direction. So really interesting times ahead. For the idea of responsible AI and AI safety, what we do see is that there's less emphasis on more regulation and more focus on taking action. The UK recently unleashed their AI Action Opportunity Plan with a clear statement to reap the benefits of AI, and we're seeing similar moves in other parts of the world.
Okay, so that's actually what my question was going to be, and the ways in which right now, the future expectations are obviously very difficult to pinpoint, yes, but specifically here in the U.S., how are we faring versus then the rest of the world?
I mean, it's still the case that the United States is the clear leader in artificial intelligence, at least in many different measures. The question will be, what is the long-term game? Because in the US, we see less focus on responsibility and trustworthiness of AI technology, which is the bet that many other nations and economic units are taking to say the more the general public trusts in AI, the more the employees trust in AI, the more open they will be to actually adopt the new technologies and bring them into economic benefits. So the verdict is still out.
Alexander, talk to us about the kind of safety aspect of this. I think there's some uneasiness kind of around how quickly things are going, that there needs to be some guardrails and regulation, but the issue always with that is it doesn't seem there's ever going to be one set of rules that the whole world kind of abides by. So if one country doesn't have guardrails, maybe they're going to move quicker. One that does maybe does so in a more responsible way, but they lose that race. So how do you see that whole topic of AI safety and how that's going to influence things?
I think you already made a phenomenal point. Not everybody is going to adhere to the same set of rules. And what is more, we're currently at a very early stage of AI. So we haven't even figured out all the solutions to the challenges of, let's say, fairness, explainability. Therefore, think back to car safety. One of the first car safety mechanisms was actually a person walking in front of a car, waving a red flag to warn pedestrians to not get hit by the car. Today, we have advanced car safety and have
So we're still kind of swerving, using that 2063 as a support level. Now the tape just keeps telling me 50-50 here. I'm not in anything right now. How do I feel about the NVIDIA earnings? I feel they're going to be good, but I also feel that there's been a lot more competition out there spreading around, that people might have bought all they needed. And I'd almost wait for a lower support, for another big knife, and then take it. NVIDIA.
Someone at home feels about this technology. It's here, and it's only advancing as time goes on. What are some things that you would, maybe be this the next generation of investors and people entering the workforce that might be our viewers, or even those who are maybe transitioning to other areas of their career or retirement? What are things that we can do to use this technology, harness this technology to better prepare for what this future might be?
So, as mentioned, I'm a tech optimist. I'm confident that AI will be net positive for society in the midterm. What we already see today with the advancements we've had in AI technology is that it's democratizing access. So, for example, with the capabilities in natural language processing, AI assistance, or even the translation services, we see elderly people, for example, my 90-year-old granddad, much easier to use the benefits of technology, or even people from non-English-speaking countries benefiting from the wealth of the internet. When you ask me about the future, there are two things I'm particularly excited about. One is healthcare, and the other one is personalized finance and investment advice. We are at the brink of collecting relevant data from wearables that helps us to shift medicine from reactive, curing illnesses, to proactive and giving people personalized advice on how they should behave, how they should adjust their lifestyle to ensure health. And the same is becoming possible in the financial space, where the collection and
Okay,
the
we just
analysis
broke
of
support.
data allows us to give not only general financial advice, or for banking institutions to offer their financial advice to only the wealthiest of clients, but to actually have much more personalized individual financial advice, which I hope will lead to more people investing in an earlier age and therefore also benefiting from the sheer time span of being in the financial market.
Okay, I think a great place to leave it, and I entirely agree. I think the more and more widespread this can become is the more that we can see education surrounded by it, and hopefully we can continue to expand. I like that, and I like that you're also a tech optimist. So great place to leave it, and appreciate you so much for joining us today and offering those insights. That's Alexandra Ebert, of course, of Mostly AI. Thank you so much for coming on the show today. Now, coming up next, we will actually be sticking with our AI-focused conversation. We'll be talking one of the dominant players in the space, or at one point it once was, Super Microcomputer, which has a lot to prove between now and, of course, tomorrow as we face the NASDAQ delisting deadline tomorrow.
With Schwab investing themes, it's easy
Buyers
to
keep
invest
wanting to
in
mess
ideas
with
you
this.
need. Spot a trend in electric vehicles? For online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customize to align with your goals. All at your fingertips. Schwab investing themes, 40 customizable themes, up to 25 stocks in just a few clicks.
Whether you're a bull or a bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
Trading the trending names every day. It's Fast Market. Ready for you, ready to go. I'm Kevin Hinks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Welcome back to Next Gen Investing. It's time for Under 30, looking at Super Micro. Joining us now, George Tillis, Senior Markets Correspondent for the Schwab Network here on this Monday.
200
George,
EMA.
SMCI. We talked about this one a lot over the last, let's call it year and a half. It's been a name that has highlighted the highs of this AI boom and perhaps the lows at the same time. Jury's still out on ultimately what camp it's going to fall into.
Yeah.
How important is this event tomorrow, this deadline?
George.
I think it's really important. I think it really will help establish confidence in the stock. I think it'll
Okay,
prevent
get ready.
liquidity crisis in the underlying name. And, this is certainly an interesting story or a case of a company that's really in the midst of the AI boom, but obviously, looking at how the stock is basically trading around half of where it was going back to March of last year. It was a darling, and it's traded, I believe, all the way down below $20 a share. And this company still has, strategic partnerships as being a premier server rack technology, networking, and storage company, but its partnerships with NVIDIA are quite profound. NVIDIA has also mentioned this company as a strategic partner in their conference call. But the whole problem with Supermicro really goes back to July of last year, where the company failed to complete reporting its June fiscal quarter earnings, as well as the last two quarters. If you look at September as well as December, the company has failed to report those as well. So tomorrow, in anticipation of what's going to be happening, the company is expected to report its full year fiscal 2024 annual report, or publish that, as well as Q3 and Q4 of last year's calendar year, which happens to be their fiscal Q1 and Q2 for 2025's EPS and top line sales. Now, if you just go back a few weeks ago, the stock started to make a nice move to the upside. On the 11th of February, the company actually provided some updated guidance for the quarter that they're going to be reporting, where they actually decreased their total top line sales estimates from around $30 billion for fiscal year 2025. These are again estimates for this fiscal year. They reduced it down to $25 billion. But one of the things that the company did that a lot of people may not recognize is they actually increased their fiscal 2026 revenue guidance to $40 billion. And so if you look
That's a lot of money.
The last quarter reported top line sales growth, it was higher by about 54%. But
George.
what's interesting about this story is that if you just do the math, 25 billion estimates for fiscal year 25, 40 billion for 26. That's about a 60% estimated growth rate in sales. So they're providing some upbeat guidance. This goes back to the 11th, and I think that's the primary catalyst we've actually seen with the stock inching higher and higher over the past few weeks. But tomorrow's report's going to be very telling, because right now it really comes down to confidence. And if they do provide all the paperwork and guidance for what is needed to maintain their listing on the NASDAQ, that will spell, I think, a pretty good confidence boost for investors, but also analysts who cover the company.
Yeah, and I agree with that entirely. And I also think that tomorrow will be hugely important. I think that we're even understating the need in which this company has to be able to accomplish this. I mean, I feel like we've given the leash enough grace at this point. But also curious your thoughts. I know you monitor this as well. The short interest is like 18 and some change percent. That's high, and that's also higher than we've seen for Supermicro. I mean, right now, short sellers, is this becoming more of like a short squeeze at any point?
Well, I think it has been in the past few weeks, to be honest with you. But I think the price action might be a combination of both the short squeeze as well as potential value. Now, the reason I say this and the reason I'm emphasizing the top line sales numbers, you look at the market cap, and I'm just looking at Friday's close, irrespective of what's happening today because it's quite volatile. Market capitalization is around $35 billion. Looking at fiscal year 2026 sales at $40 billion, the company is actually trading at less than 1x sales. And so sales are extremely important, if not the most important factor in any financial statement. And their sales growth is expected to be 60%. And so we have to, at the very least, consider that there's a push to the upside in the stock because they're expected to continue to grow their business. And that should, of course, manifest into better earnings. But we also have to make an assumption. This stock could continue higher just from a price to sales valuation, which is still, like I said, less than 1x.
Yeah, and that's also a great point. The valuation is also one point of concern that has been definitely mentioned by the analysts that cover this name and some of the notes I've been reading. But appreciate it. We'll leave it there. George Still has great insight on all things Supermicros. We'll be watching that, of course, very pivotal date, the 25th tomorrow for the NASDAQ delisting deadline. And Alex, before we go, just to check in on these overall markets, we are pretty much a lot of where we started the session. That's right now strength still led by the Dow.
Yeah, this is like really, really close to where the market was at 5 p.m. Central last night. And so a lot of movement to ultimately kind of end up where we closed on Friday so far. So we'll see where things go to end the rest of the day. Weakness in mega cap tech is a drag on the market, but everything else looks okay.
Yeah, and most of our pretty split across the board in some of our Mag 7 names, but yeah, definitely some weakness in tech moving today. That'll do it for Next Gen Investing. Of course, for this Monday, we have the watch list coming up next.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide.
Oh, we had a nice
no
little drop here.
overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location.
We're going to
Moving
hit the
funds
200.
between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks.
Yep, here we come. Right at 1 o'clock. SPX. Up $100 here on the 60/30s, but I didn't take them. They were at 250. I tried to jump in, but it was too late. Wouldn't let me have it. Now they're at 350 on the SPX.
On United Healthcare, and that's in the Dow. That's why the Dow was heavier than most of the other indices all day Friday. But then we got some PMI data, services dipping below 50, and that kind of fed on it. And the market just didn't get a bid. It got more nervous as the day went on. VIX started out relatively calm, finished up around 19. It hit over 20 very briefly this morning as a green open in the market just turned into a very violent sell-off. But now the markets have stabilized. You know, traders knew that a day like Friday usually brings some selling after the open on Monday. And so that was
They
not
knew
really
that.
shocking. But how does the market settle? And it did settle after, you know, a 0.5% higher than a full percentage point down on the day, but now, you know, pretty close to unchanged. And you've got an S&P that I see, you know, 7 of the 11 sectors in the S&P higher. So even though a couple of them are close to unchanged, this is still a market that is looking at a lower U.S. dollar than it was a couple weeks ago, lower yields, lower crude oil than it was a couple weeks ago. Crude oil's up a slight bit today, but overall, we're getting ready for a big week of earnings with NVIDIA and all the companies that will be affected by NVIDIA's earnings, and then data at the end of the week that is vital in terms of looking at what's happening with inflation as we get PCE
Nice recovery on the
and core
SPX.
PCE data on Friday morning, Nicole.
And it's interesting to watch market breadth because there are times where you have all 13 sectors to the downside and you see them coming back one by one, even today. For example, right, market breadth has improved throughout the day, more of a broad-based buying and I'll say rally, you know, at least somewhat of a buy back after the sell-off that we saw. That being said, how about Rivian now? I mean, forget Nikola. That's another story in the world of electric vehicles. And Tesla has full self-driving coming in China. But now let's talk about Rivian. Underperform over at Bank of America. Tell us about this story and the downgrade that you saw.
Yeah, you know, Rivian's had some good news over the last several months, like the investment from Volkswagen and their overall picture getting a little better, but they get a big downgrade today from Bank of America. They downgraded Rivian to underperform from neutral with a price target of $10. That's $2 lower than it is now, and it's already down about $1 today. So down from $13. They say it remains one of the most viable among the startup electric vehicle original equipment manufacturers and is making progress towards sustainably positive gross margins. So, but the 2025 outlook was softer than expected, and the Volkswagen partnership is complicating earnings forecasts. So there's the other side of a partnership with Volkswagen. So yeah, Rivian, not as clear of a picture. Lucid, some of these other companies are struggling, as you know. So yeah, the electric vehicle market in a state of turmoil right now, with even a company like Tesla down 30% off its recent highs. Rivian, a big downgrade today.
All right, thank you, Kevin Hanks. Great to see you. And as you noted, we still have NVIDIA, we have PCE, we still have more earnings. And
Yeah, we
other
do.
jobs reports. So it's going to be a busy week, folks. Keep it here on Schwab Network. We have you covered. Kevin Hanks every day. Thank you. Now let's get a look at the bigger picture. Darius Dale, founder, CEO of 42 Macro. What were you thinking on Friday? I mean, people started to get a little nervous when they saw selling upon selling. And then you have folks who are saying 20 and 30% sell-off is coming. Others who say, hey, S&P 7,000 by the end of the year. Where do you stand?
Well, thanks again for having me, Nicole. It's always a pleasure to be here. I think investors get way too caught up in the emotions of day-to-day, week-to-week fluctuations. We're going to be in this. We're going to break out of it to the upside. We have liquidity accelerating globally right now. It's very likely to begin accelerating on a trend basis from a U.S. liquidity perspective as well, when you factor in the likely TGA spin down we're going to see over the next few months, as well as the fact that, you know, the Treasury is not in the market tapping us for new debt. Those two things are quite positive, and when you couple the backdrop with global liquidity,
It's
already
a scalping
accelerating,
time right
we
now.
should see a general uptrend in asset markets from a risk asset perspective.
I think there's also optimism on businesses, deal making, M&A activity, IPOs, and that kind of thing. When you talk about liquidity, it seems that a lot of the business folks are feeling a little better about what the potential is for this year. Better corporate tax rate, perhaps, coupled with I couldn't believe
60,
it. 'Cause I didn't expect
51.
you to say it right then, but Jamie Dimon just recently was talking about consumers and that they're
I'd like to see this at double bottom myself,
almost going
and then
to
take it.
normal. Really? Good. I like
Right now, you're at a head and shoulders, inverse head and shoulders.
On the consumer side of things, I would say the consumers.
60, 51. You really think so? No, not today. Not today. So we're coming back down to the 200 again. But man, this double bottom off the 200 down here looks very, very delicious. I'm getting ready. $3. We're getting close. Okay, there's your first support right here at 275. Get ready. Give it to me for $2. 230. Okay, it looks like it wants to do it now. Come on, don't do it now. Damn it. Just one more knife. It's at 2:10 Eastern time right now. The 60-30s are at 280, 275. This is a good spot. 235. Okay, get ready. Jimmy's going to do it. Put a tight stop, trailing or stop on it. Right about now. $235. $220. I want to get right to the penny. Whoop. Went below it. Let's see if I'm right. 210. Showing a little bit of weakness. We got a triple bottom here. Come on, you beach. Ah. Well. 'It's almost too big of a run. This ain't doing it. $125, $130. You got to bounce.
Nike. That is next here on the watch list.
Nike.
$89 from
XYZ.
an attractive entry point following fourth quarter earnings. BMO believes Cash App gross profit growth expectations appear more achievable, while investor sentiment and positioning are more balanced. And Twilio shares are higher after receiving an upgrade to overweight over at Morgan Stanley. Analysts raising the price target there
Blocking
to
company.
160 from 144. Increasingly confident in Twilio's execution toward double-digit growth and operating margin outperformance. Morgan Stanley sees the recent 20% sell-off as overdone and believes it provides an attractive entry point. All right, let's get to Nike. We saw Jeffries with an upgrade, and we want to know what Morningstar has to say about Nike, because we did see a lot of positive comments pertaining to a potential comeback for Nike. The deal really expanding into more back to the athleisure, working with the Kim Kardashian Skims. And don't forget about Nike. It seems to be the theme. David Swartz is with us, equity analyst over at Morningstar. Tell us your thoughts.
Hi, Nicole. Yeah, I think Nike is undervalued at the current price. It is up from its lows, but my fair value estimate on it is $112. Nike's had a very tough year over the past year. Its
More than
last
that.
fiscal year, sales were flat, which is unusual for Nike. And then this current fiscal year, the sales numbers have been quite weak. But I do think that Nike is undervalued right here. And I think that the company has a strong future and it will get back to what it used to be due to some of the things that you mentioned, including this latest announcement of an agreement with Skims.
So it's interesting. Is that enough? You know, it's the latest announcements with Skims to take on Lulu and Alo Yoga and some of the other athleisure names that have been sort of nipping at Nike as far as athleisure and exercise and things like that. But it's also the new management, new leadership, because you're saying to go from $80 up to $112 is your fair value, right? What are some of the catalysts?
Yeah, so Nike did make a CEO change about 6 months ago. John Donahoe was out, and Elliott Hill was brought back after a few years of retirement. Hill is a longtime executive at Nike. He's very well liked by investors and by Nike employees alike, and I think that he has what it takes to get Nike back on track. Nike still has a lot of advantages over everybody else in this industry. It has the highest marketing budget, the highest R&D budget. Right now, it's in a state where it has a lot of products that are, coming out, but they're not out on the market yet. And it is pulling back on a lot of its key franchises, including Dunk and Air Force One, that really got oversaturated over the past few years. So I think we're going to look for some more difficult quarters from Nike. Probably we won't see much of a turnaround until later this calendar year and probably into 2026. But I do think that Nike has a lot of new products coming out that are going to be able to drive sales back to Nike's normal sales growth rate.
So we also talked about how Nike sells, whether it was through stores or more direct to consumer. And I don't know what it is that you recommend. What do you think works best for Nike in order to make more sales? And the other thing I think about are sometimes there's catalysts, whether it's a sporting event or something like that, because what's going to be the best seller for Nike?
Nike really needs to be successful in all channels. This is a company that does almost $50 billion a year in sales, and so it needs to be successful in wholesale. It needs to be successful in selling DTC. Under Donahoe, Nike got too far away from the wholesale market and really pulled back too much, and that has hurt Nike sales, and it's hurt Nike's relationships with a lot of the key vendors out there and a lot of the channel partners. And so that's one of the main things that Elliott Hill is working on right now, is to repair some of those damaged relationships, because Nike does need to succeed everywhere. The company has broad-based consumers. They appeal to all demographics, and so Nike does have a lot of strengths. Its marketing is top notch. Nike ran a Super Bowl ad this year for the first time in many years. So Nike
look rough,
still
buddy.
putting a lot of money behind its brand, and I think its brand is as strong as ever. It's just that the products right now are not selling at the same kind of volume as in the past.
There's too much competition, okay? Frankenstein.
Too much, in your opinion, right? They move too far away from wholesale, too far away.
Yeah, he looks rough.
You also have the brands
He might be
that
sick,
people know and love.
so I better not make fun of him.
Or Converse, you have a famous person, a famous spokesperson, those kinds
She
of
looks
things
hot.
too. You have added Nike to your best ideas list of January 2025. So it's not just you think there's upside potential, but this one you're really going in, digging deep on this name, right?
Yes.
Yeah, I am, because if you look at Nike historically, there have been down periods before, including about 10 years ago, around 2014, 2015, and people who invested then and held it for 5+ years did really, really well. And I see no reason why it can't happen again, because Nike still has a huge advantage in that it is the #1 sports brand, and global athletics continues to grow. We're seeing the growth of the middle class in countries like China and India, and as more people move into the middle class, they buy more and more sportswear, and they get more and more interested in international athletics. And Nike is still the #1 brand there, and so I still think it has all the advantages despite some problems over the last couple of years.
Yeah, and look, you've liked this. You were talking about this since at least December. I saw a note of yours from December, and year to date, it's already up 6.5%. So if anybody were listening or watching to what you were saying, they would have
Okay,
already
we're running into some resistance.
9%. So it's already been on an upward trajectory. So that's good news there. What else do you like these days? I mean, what else do you have buy ratings on or think is undervalued here today?
Well, one that's close to Nike would be Under Armour. So Under Armour has had many years of problems, but I think the stock is quite undervalued. My fair value estimate is about double the current stock price, and people have pretty much given up on it. And there's reasons for that. But Under Armour did bring back Kevin Plank as CEO after some years we had stepped away as the leader. And sort of like Nike, Under Armour is in turnaround mode right now. Things are probably going to be bad for a while, but I do think that Under Armour can come back and that it is a very cheap stock right now.
Yeah, when I look at Under Armour UAA right now, it's up 2.5%. It's interesting that you're picking these names because you have on, you know, and some Deckers and so many other names that are sort of competitive and could really take market share.
Yeah, there's no doubt that this market has become more competitive, but there's still cheap stocks out there. You know, Deckers I have is overvalued, and it recently fell quite hard after its quarterly announcement just because the valuation.
He doesn't trust the market.
Level. But, you know, Deckers is doing really well, and so is On, as you mentioned. And so this market has become
I'm
more
going to look it
competitive,
up
but
because
it
I
is
don't know
a
what that
very
word
large
means.
market. You know, sportswear is still an extremely popular category and a very attractive category, and there's room for many winners in this business. And I think that Under Armour could be one, and I definitely think that Nike will be one as well.
It's funny because I see
Involves becoming sexually aroused by watching an unsuspecting person who is disturbing, naked, or engaged in sexual activity.
No sign of positive inflection. You said that you think this right now it's at $7 and change. So you see this as a $14 stock?
Yeah, I do.
Under Armour, folks.
Yeah.
UAA. Go ahead.
Yeah, that's right. I do think that Under Armour is quite undervalued. You know, the company has a strong balance sheet. It's in no danger of financial distress. They're making a lot of changes in the marketing. They have a new designer, John.
That's funny.
Who was a pretty well-known fashion designer at one time. So, you know, Under Armour is doing a lot. It definitely has not shown up in the numbers. And to be honest, people don't have a lot of confidence in Kevin Plank because he kind of got the company into trouble in the first place. But, you know, he is very devoted to trying to build this business. It's his entire life. And, you know, I do think that Under Armour has advantages and that the stock is just too cheap to ignore right now. But a lot of people just don't want to touch it.
David Swartz, thank you, equity analyst over at Morningstar. Thanks for joining us here on the show. We appreciate it. So you like Under Armour, you like Nike, and Deckers a little overvalued. Thank you.
Well, I'm not attracted to him.
Standing by, I'll take a look at the metals markets.
Maybe her.
Also a couple of sectors that he does like. Maybe the metals are overdone. He'll explain. Watch this. We'll be right back.
It's not a winning game.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Rennick.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Welcome back to the Watch List. I'm Nicole Petalides. Chris Remulin's with us, founder and chief investment officer of the Technical Traders. Thank you so much for being with us. It's good to see you. How are you feeling about the market? What's the mentality for investors at this point?
Yeah, good to see you.
What is the mentality?
I think investors are a little nervous. I think we saw a big bout of selling last Friday, some distribution selling, and I think we're starting to see some big funds starting to move away from maybe the Magnificent Seven. They don't seem all that shiny. Nvidia seems to be fairly quiet. So I think we have investors feeling nervous, and they're rotating out of those big tech. And we saw the VIX, the volatility index, spike up. We saw some panic selling on the New York Stock Exchange, which, if you look at the volume ratios, we saw people dumping shares on Friday. I believe the bull market is trying to buck people out. I still think the equities market wants to push a little bit higher, but overall, people are nervous. But as you know, Nicole, the market climbs all the worry. So I am bearish longer term this year, but right now, I still think this market is clawing its way higher.
Bearish longer term this year. So the S&P 500 was trying to hold 6,000 today.
Okay, we're back down to support again on the 1, 2, 3.
Where do you see the S&P by the end of the year then?
I think it could be down double digits. I'm not exactly sure where, but I do think we're going to have a pretty big haircut at some point.
If I'd have stayed in them calls this morning, I'd probably be up about $7,000 today. That's how much I left on the table. But I've scalped a few, so it's made up some of that. I'm getting ready to add to this one here in a second. It's getting a little bit too far down now. Yeah, magnificent. Why would you say something like that? The only girl that I had a crush on today was two of them. Nicole and that foreign chick, whatever her name was. She was hot. Okay, here's the double bottom. Oh. Always cleanest, Jim.
Hey, Jim, it's Ashley. Did the plumber make it out there?
They're going to do it tomorrow.
Tomorrow? Okay, good deal.
That's what
And
they.
there's no-
That's what she told me. They'll get to it tomorrow. She's had to get the paperwork right.
Gotcha, okay. Did you check that break room, make sure the water line was still okay?
Yep.
Nothing was froze up or anything?
Nothing froze up.
Okay,
It was
deal.
fine.
And then also, have you checked on the vacant space recently?
Not really. I haven't touched it since them guys messed it up.
Yeah, I still want you to go in there and check it out. And
See if there's any leaks.
yeah, I'd like that to happen at least once a week, you know?
Okay.
Especially
Yeah.
after
Well.
snow, rain.
Yeah, I haven't been in there for a couple weeks. Do you want me to try to put some of them tiles back up, or?
For now, just hold off. Just make sure there's no water leaks, and then I'm going to talk to the ownership and see how we're going to handle that.
Okay, because they pulled out insulation too, and I'd have to figure out how to get all that back up in there. And I'm not too good with heights.
For now.
Okay.
Leave that alone for now, and I'll let you know once they decide. They've got a few other things they're working on, and then.
I'll go in there tomorrow morning and leave you a message. But so far, I keep looking at the caps on top of the roof, and they don't look too bad.
Good.
And I've been in and out of there a couple of times, but we've not really had a hard rain yet. Just that big snow, but I think I probably should test. Go in there and look at it.
Yeah, definitely, because when that melts, has it melted already? Is it warm today?
It's warming up. It's 63 degrees today.
Yeah, that's similar to here.
Yep.
Very refreshing, huh?
Oh, very much.
Well, good. Glad you guys are thawing out.
Well,
Keep me posted.
my heart's with you today.
Thank you so much. I appreciate that.
Yes, ma'am.
You have a good day.
Yep. Bye-bye.
Bye-bye.
Are we going to bounce? We got 15 minutes to power hour.
And then right now we're still in a rising tide environment. And so right now it's still kind of look to buy the dip mentality for the next potential month or two. The stock market has dipped into oversold territory in the past today and our last trading session.
Okay, well the next one's 606-600-602, the one I had earlier.
Bottom. And today's volatility where we saw a low in the price of the SP 500, it broke a low from a week ago, flushing out the stops. We saw the orders get run on the intraday charts, and now the market's trying to recover and kind of shake people up. It's just a buck within this bull market still. And I think we're going to go higher for another couple of weeks.
Right, but long term you are bearish. In the meantime, we're waiting on NVIDIA this week, and that could be a catalyst one way or the other. It sounds like on the big up days, you're implying that people should probably take some profit, but on the big swings to the downside, do you recommend buying? I don't know. I mean, NVIDIA really could be a catalyst for tech in particular. There's a lot lined up on NVIDIA. Any advice for this week in particular, Chris?
Yeah, I think you need to have a game plan. I mean, we follow the trends. I'm a pure technical trader, so if the trend is up on multiple,
he's a technical trader.
An asset like
that caught my ears.
NVIDIA or whatever it may be. If the trends are down, we don't want to hold it. So we really need to see how this is going to unfold. The SP 500 from a long-term perspective is still in a bull market. On a short-term perspective, it's neutral to bullish, so it is still trending higher. But it's running out of steam here. It is struggling. It needs to find some power here to pop and push higher. So overall, you need to have an exit strategy. If things start to roll over and we get some more big selling, if it is a broad market sell-off, we see a lot go down, trimming profits, having a stop in place, getting out of the markets is not a bad idea. Because if this market does start to fall, I think it could fall fairly quickly. And you need to protect your capital, number one. We're in a difficult market environment. Add in the new president and Elon adds a lot of volatility. So you're better to protect your capital than you are to try and swing for the fences and think there's easy money. This market is not an easy money market right now. It is all over the place. What's hot one week is not hot the next week. And you really have to be, have your head on a swivel and manage those positions.
Yeah. Chris Vermeulen, great to see you. Thank you very much, Founder and Chief Investment Officer of the Technical Traders. Thank you, Chris. Still ahead, we bring in our panel to discuss hims and hers ahead of the company's earnings. I mean, it has had a wild ride. It could have a 20% swing, but over a year, it's up 400%. So what's going on with this name? Our panel is ready.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim,
well.
based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
watch list. It's time to bring in our panel to discuss hims and hers ahead of the earnings. Hillary Kramer is with us here, founder, CIO at Kramer Capital Research. And Vance Howard, CEO, Portfolio Manager, Howard Capital Management. Thank you both for being with us. So we're waiting on hims and hers, and the earnings are due post-market. Of course, when there was an abundance of GLP-1 drugs, that was one story. But then when there was a shortage, that was good for hims and hers and alternatives and composites. And this name has run up over 400%. Now what? Today is earnings. Hillary, I'll start with you. Do you expect some big swings, and are there opportunities here?
Well, with HIMS coming out with earnings, I expect earnings to be just dynamite off the, just, parabolic. However, the bottom line, because of the cost of Super Bowl commercials and the cost of advertising and the cost of litigation, that certainly might be
a little bit too high, I think.
But there was an inefficiency in the market. Hims and hers took care of that. And what we really want to pay attention to is what the messaging is going to be moving forward. And we might want to be moving on to other opportunities.
I will say this name has certainly run up, and you're looking at that, Vance. Over 1 month, it's up over 60%. Year to date, 100%. These are not small moves. What do you say about the opportunities here when you look at this earnings, and what do you expect?
I feel the same way as Hillary does. I think that what we're looking at here is a really good stock. She was mentioning a minute ago about how much they spent on Super Bowl ads, but Hims and Hers has done a very, very effective job with
Yes, it has.
TV marketing, with social media marketing. It's been very, very effective. But you talk about a peptide, and that's what Ozempic is a peptide. And I think that there's a lot of things that Hims and Hers can continue to advance with. Did you know there's over 60 peptides out there? Ozempic's just one. And they also do it by way of a compounding factory so that they can make a peptide for an individual that's sort of tailored towards their needs. So you look at the...
I don't understand that Hims has got earnings this week.
And it's probably a $60 stock, so they're selling at $49.50 now. So they're probably not too very far from what the actual value is. But net, I'd be pretty positive on the stock. The pullback that we've seen is nothing more than a technical pullback.
So right now it's at $49.56 today, Vance. And so when you have a full availability of the weight loss drugs, people don't need to go to the alternative of Hims and Hers, but you're noting
Okay, here's another knife.
Composite drugs that they can make of so many different things.
Now we're retesting. This is it or do or die.
So you think there is more to
So should I try it again? The 60-20s at 235. Ooh, it dipped down below. 240. Let's go for it. What the hell? You can do it. Give it to me. Do it. Well, we got 6 more minutes to power hour. Yep, selling rips. That's what they said earlier today. It's not a buy the dip no more, it's sell the rips. So the 60-20s at 215, you got a double bottom. Yep. It's not a healthy market right now. I'd say we consolidated today. Is that what you're saying, risky? I was getting ready to jump in and I said, no, I ain't going to hold it. When you say that's consolidated, we had a little bounce up. If we hold this, it's more or less an inverse head and shoulders, right? Magnificent. Right where we are right now. I know somebody's going to swing the SPX, but I don't know if I want to. And the video is going to be... These fat cats are kind of feeling a little bit of fear. They changed the hypothesis to sell the rips and not buy the dips. Though today was a good dip buy. And I sold the rip too soon. But I was proud of staying in it and doing it. About my average day. A little under $1,000. Do boo. We're now 1 minute in power hour.
5 of the Mag 7 are lower. Meta is actually the worst performer today. The NASDAQ, as you can see here, off about 0.6%, the worst performer on the day right now. Let's take a look at a few of the futures products. We're actually looking at Bitcoin, which is taking a turn, now trading below 94,000. As you can see, crude oil is higher modestly, trading above $70 a barrel right now. Gold also seeing some modest strength, whereas the dollar is essentially flat. Let's kick off the show with Jenny Horn, markets correspondent here on the network. And Jenny, you have 2 stocks on your radar today, a winner and a loser. Let's start with the loser because Palantir down another 10.5% right now down about, 25% from those all-time highs hit just last week. Is this still about the potential defense spending cuts or something else here?
I do think it is still, frankly, about the potential spending cuts, to be honest with you, because I do think that the main factor behind this pretty notable retracing in price with the stock now down for its 4th consecutive session is that President Donald Trump's administration is seen as one that could be cutting the defense budget by around $50 billion annually, or about 8% of the total right now budget. So that's substantial. Palantir does derive just over half its sales from the government, which creates then the potential for total revenue to drop by several percentage points, frankly, in a worst case scenario. So earnings are at risk, even though a reduction in government demand for Palantir software could actually allow the company some ability to cover its costs. It's not really, though, a surprise to see the stock now, frankly, react as harshly as it has. The budget issue is really a perfect reason, unfortunately, for many of these investors who have loaded up in shares to lock in some profits by selling. So I think that this is the nature of a climb that we've seen that has been as meteoric as it has. I mean, we're still positive for, the year, pretty substantially so, and still positive on a 12-month basis. I mean, this just shows how meteoric this run really has been. But right now, we know the results that have really followed Palantir has been actually its ability to navigate through turbulence and its stickiness with some of its more resilient government contracts. So all things considered, we've seen now since really the start of this year, this name outperform all of the major tech names. I mean, right now, Supermicro is, I believe, the only one giving it a run for its money, but it's been a Palantir story and nothing really close. AI right now has been put up for question. The ability to build, is it going to be cheaper? I think DeepSeek threw a wrench into that narrative, but regardless, it does feel like, with the exception of Meta, all of these stocks have seen a massive repricing in the last couple of weeks, except for Palantir. So maybe you could argue that right now we were due for a bit of a correction just because everything else but this name had been hit, frankly, Caroline, prior to this week and prior to the now somewhat of a sell-off we're starting to see in Palantir shares.
Yeah, and to your point, Meta shares actually lower today, down about 2%, and Supermicro also under pressure ahead of that the 25th deadline tomorrow. Shares down about 6% right now. Palantir shares now 28% away from those all-time highs. But yes, as you said, still actually up 10% this month alone, despite those, some of the selling there. You also have your eyes on Apple shares, which are up about 1% today. We heard of this $500 billion investment here in the U.S. What else do we know about that, Jenny, aside from the fact that investors seem to be happy about it?
So investors do seem to be happy about it, and actually, thankfully, Apple could be our name that's been more resilient today. So we're up still about 1%, about 0.9% rather, to put it more precisely. But Apple has now outlined plans, of course, to spend that $500 billion to boost its manufacturing capabilities here in the U.S. just days after CEO Tim Cook met with President Donald Trump. So the company did say that Monday they will be investing around, $500 billion, which is ridiculous, in around 20,000 people over the next 4 years. So it is more of a long-term target, but they do plan to really start building this factory in Houston to support their Apple Intelligence build, as well as some operating now efficiencies, like they want to have this manufacturing academy in Detroit that then could support the streamline of those employees, hopefully to then funnel into their Houston plant. Apple's U.S. operations do already support, though, about 3 million American jobs. So an additional 20,000 workers would actually only mean around a 0.7% rise, but nonetheless, I do think that this is going to be huge. They're looking for these specialized engineers in R&D and silicon engineering, software development, as well as just further AI and machine learning. But Cook, who did meet with Trump at the White House on Thursday, said spending would right now be this really extraordinary new chapter as far as the history of American innovation is concerned. Trump also did say in a post that they are seeing the investment because of the faith in what they're doing, without which they wouldn't be investing 10 cents, they said. So they seem to right now be somewhat applauding each other. I think that this is sort of the move we've seen from all of the heads of various companies this year, is you have to basically be a friend to the Trump administration, and it seems like it's lucrative in return. And I think that's just the nature and the operating environment we see right now. Apple shares were initially lower slightly this morning, but looking to close out the session positive here, Caroline. So I think that this is definitely seen as at least a win, and perhaps the ability to then maybe skate by without some more tariff concerns. Because I think there's also the friendliness to Donald Trump is something you want when you're in a tariff situation.
Yeah, it seems like maybe the optimism isn't so much around how much money Apple is spending, because investors don't always love to hear that from the companies they're investing in, but more so about that maybe this means a carve out in terms of those tariffs on China, because Apple still, manufactures the majority of its products and assembles them in China. I was talking to James Demmert earlier today over at Main Street Research. He certainly thinks that that's the case. Is that sort of how this is being looked at, more so that it's a potential way to avoid tariffs?
I think so, and I think that it's also a good point. The relationship between China and Apple is one that's been, I think, actually able to somewhat stay, at least in as positive as terms as you can really say for right now an entity in the U.S. as well as China. But it seems like that's been a focus of Tim Cook. He's been traveling more overseas. I mean, I think he's been trying to keep relations as well ordered as possible. But that is still, I think, the ongoing concern is how tariffs could impact the largest right now U.S. the electronics maker because of that relationship in China. I do think that, again, the more and more he can cozy up to Trump, the more we can hopefully avoid these tariffs down the road. But I do think there's still a lot of unknowns. I think that to say with certainty they're going to be fine because of this latest move is absolutely incorrect. And as we know, there's not a massive degree of unknown and uncertainty still regarding the Trump administration, what that means for a name like Apple. So I think that don't necessarily say this is a shoo-in or we're fine, because I think there's still volatility that we could expect ahead for any name in tech, frankly, Caroline.
Yeah, we certainly have seen that, especially the headlines coming out of the White House can change on a dime. All right, Jenny Horn, thanks so much for breaking down both of those names for us.
Thanks, Caroline.
Now for a look at the larger picture, I'm joined by Neil Dutta, head of U.S. economics at Renaissance Macro. Neil, thanks so much for joining the show.
Thanks for having me on.
So switching from stock talk to economic talk to macro talk here, I was talking about, I mentioned the sell-off that we saw on Friday. It seems like a lot of that had to do with these concerns that the economy might be weakening. We had a sign that the services sector contracted. We had the consumer sentiment falling more than expected. What is your view on the economy right now?
My view on the economy is that the economy is slowing. It's something that's been in train for some time now. And a lot of the rationalizations or sort of things that we hear about lately in the financial media, uncertainty, tariffs. I mean, really, these are just ex post kind of rationalizations over something that was already happening. The truth is that real incomes were already slowing. The truth is that the housing market's been weak. State and local governments have already been starting to slow down the rate of growth in their spending. And I think the key difference now is that, a couple of years ago, everyone was sort of on the recession train. But right now, everyone is kind of very optimistic about growth. And, that just runs the risk that you might be surprised on the downside. Because one of the ways you get bad things happening is when you get that element of surprise, right? So if everyone's thinking things will be fine, and then for whatever reason they're not, that might prompt further slowing in, inventories, investment, and hiring.
How concerned are you actually, though, that the economy is slowing? Because we knew it couldn't just grow rampantly forever, so some of the slowing is to be expected. But I think also the fact that this is happening irregardless of tariffs at this point, it's really just the expectation or the potential threat of tariffs, and we're already seeing a slowing economy. So how concerned are you?
I'm concerned.
I'm concerned not so much about tariffs, but more about what the Fed has done. I mean, remember, despite the slow-moving train of growth momentum getting weaker, the Fed pivoted in December anyway, right? So, they went from being proactive, looking, to kind of backstop the economy and the labor markets, to being reactive, right? So now they're waiting for the economic data to basically give them permission before they do something again. And that to me is tempting fate. I mean, if you're waiting for something bad to happen before you actually go out and do something, then the odds are that something bad will happen. The last thing I'd say is that, look, I mean, in
don't always ask what you wish for.
Grew about 3%. Last year, the economy grew about 2.5%. In both of those years, the unemployment rate still rose, right? So if growth continues to slow from here, what do we think that means for the outlook for the unemployment rate? I would say it probably means it's going higher. There's not really a lot to like about the economy right now. Last year we had very strong growth in consumption. We had very strong growth in public sector spending and investment. I don't think
these guys are just so bearish.
Will be as strong this year. And to add sort of insult to injury, you have, ongoing housing, ongoing weakness in the global economy.
Interest rates are too damn high. And it didn't bother him for 2 years to buy the dip. But we've had, like you said, 2 outstanding years, 50%, 40 to 50% bounce in the market. And that's just, when the average year is 7%, so you're talking 14%, and then you run up market to 40, 50%. I mean, that's just it right there. Everything's just way overbought. And they're not printing the money. Even, watch Stephanie Link. Well, there's no, what do they call it? Money coming into the government. Stimulus. The stimulus has been cut off. The printing of the money has been cut off. She's that kind of trader. She's bullish as long as that stimulus is being printed.
Right, we know rental inflation is easing. A lot of the non-housing services that the Fed cares about, that's likely to moderate as well. But the primary reason for the shortfall relative to the 2% target is housing rents. And housing rents are growing at a more normal rate now, and that's likely to continue for the foreseeable future. So that's going to, I think, help accelerate the path to 2% inflation. So, I think the Fed has kind of put itself, in a bind here because they pivoted in December, and they probably want to wait to see what happens, with the administration and Congress. It feels eerily similar to the period June 2024. The Fed kind of went really hawkish back then, and 3 months later, what were they doing? They were cutting 50 basis points. So, I think that's something. Go ahead. Sorry.
But Neil, to your point about inflation coming down, it's still not at target and is still proven to be quite sticky. So do you think the Fed should cut rates because the economy is weak or because inflation is coming down to target?
Well, both. But if the economy is slowing, look, I think the inflation is going to moderate really at this point, almost irrespective of whatever happens in the economy, because housing rents will continue to moderate. And labor markets have been cooling off already. So if you think about compensation growth, that's running about 3.5%, 4%. If productivity is running about 1.5 to 2, you're basically right in the strike zone for the Fed's longer run inflation objective. Now, if the economy is slowing, that adds additional risk to the downside risk to inflation. I think, my view is that if the economy is already slowing, that'll take care of the inflation problem. And the fact that the Fed is not willing to step in will probably introduce even more downside to the inflation outlook.
What about tariffs, though? How should we be thinking about tariffs as it relates to inflationary pressure?
I mean, one interesting thing that Powell said in the December, or I believe it was the January press conference, is that he's hearing from a lot of the Fed's own business contacts that consumers have had it with price increases. So if consumers aren't willing to tolerate higher prices, the tariff may it doesn't mean that it's costless, right? But it may not be as inflationary as people think because companies would be eating it on their margin. Now, that'll introduce other risks, right? I mean, maybe that means that they have to kind of offset employment. They may have to cut back on investment because their margins are slimmer. But it wouldn't necessarily show up in consumer prices. Ultimately, the inflation story comes down to a household's budget constraint. And that budget constraint is shifting inward because the labor markets have been cooling off. And unless you think that the government's going to go out and spend more money or the Fed is going to offset that right away, if the nominal anchor isn't changing, then, I don't really think we should be worried that much about tariffs. And remember, so far, it's been a lot more bark than bite.
You talked about the recession that never ended up coming. I think that surprised quite a few economists I know that I have certainly talked to in the past. Do you think that there is a real recession risk at this point? I mean, obviously there's going to be a recession at some point, but I mean in the nearer term, based on the economic data that you're seeing, based on the Fed potentially staying on hold longer than it seems like you would want them to?
I mean, I don't think a recession is the base case, but I definitely think that the odds are likely to be higher, or the market will assume the risks are rising than falling. I mean, I guess you could put it that way. Right now, I don't think the financial markets writ large have appropriately priced the left tail kind of scenario. I don't think a recession will happen, and it's really hard to pencil that kind of forecast in because the Fed has so much ammunition. But it does mean that the Fed has a role to play. So I think you sort of get the growth scare, the Fed will pivot again, and then that'll help allow risk appetite to kind of find a floor.
So Neil, just quickly, if the market hasn't appropriately priced that
I'll be right back.
what does pricing it in look like?
Pricing it in looks like interest rates falling. I mean, I wouldn't be surprised to see 10-year yields between 4.25%, and you probably see defensive areas of the equity markets rally. I mean that's something like utilities, parts of healthcare. I mean those are this kind of industries. Consumer staple stocks. Those are the sort of industries that I would probably want to be exposed to in this kind of an environment.
All right, we have to leave it there. Neil Dutta, head of U.S. Economics, Renaissance Macro. Thank you so much for sharing your insights.
Thank you.
Coming up, NVIDIA and Salesforce are two of the biggest names reporting earnings this week. Gareth Soloway will join us next to break down the technicals of this week's biggest earnings names. Market on close, we'll be right back.
Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network.
Number one broker here for the number one hit maker.
Thanks for swinging by, Carl.
Well, they didn't hold up very well.
This lets me adjust the base, add more
We've got
guitar, maybe
maybe some drums.
40 minutes left.
Yeah, like Schwab. I can get full service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Have a choice in how you invest with Schwab.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Welcome back to Market on Close. I'm Caroline Woods in for Oliver Rennick. Let's get some technical analysis of this week's big earnings names and welcome in Gareth Soloway, Chief Market Strategist at Verified Investing. Gareth, great to see you. Thanks so much for joining us.
Thanks for having me. Great to see you as well.
Thank you. All right, before we get to some of these big names on tap this week, I want to get your technical take on the overall market. The S&P 500 going a whole lot of nowhere right now, not continuing Friday's sell-off, but also not necessarily charging.
Time to
ahead.
shine.
What do you make of it?
Yeah, so I think it's very interesting to see that it does appear that the
I think we need to
buyers
break
are
the
starting to meet
63.
resistance, and I do think that's more institutional resistance starting to recognize.
But there's just
that
too much
economic
fear in here
data
right
is
now.
starting to turn
I think
south
tomorrow
here.
will be the day.
Whether it's fears of tariffs or Michigan sentiment, lots of different factors starting to put pressure.
Told it held
on
up
the
my
sell side. It's like the individual investors
$6,006.02, and I've said that probably
and we can see that even
from
December. I mean, basically
early morning
here's
today
the
to
December
now.
highs on the S&P, but we've barely gotten above them, and now we're back below them, and that shows to me a weak attempt at a
And we hit it
breakout that ultimately
solid.
could head back lower and actually
It
start to
bounced
see a
up.
major sell-off. So I'd be very, very kind of conservative here in the near term until we see a defined
Just
breakout
should-
above those December highs.
I'm just hearing a lot of bears today. These fat cats. They're all saying, be patient, be patient, be patient, be patient, be patient. Don't. Money management. I'm happy what I got today, actually, but I could have had, man, if I just held them calls this morning, that had me a $6,000 day. And I called the bottom. I mean, I'm tickled to death.
All signals of risk off. So in terms of downside, we could be looking at one of those elusive 10% corrections in the not too distant future.
See, I said 6, he said
You
10.
mentioned NVIDIA meeting some resistance today.
They want a correction. And they wanted it a long time ago, but didn't get it. Earnings were good, in my opinion. Earnings still showed me that they were still good. So far, what I've seen. But it's kind of like what this one guy said earlier. Don't wish what you ask for. They've been tariff. And they don't like Trump. They've loved all that free money they got for, last 4 years, just ungodly amount of trillions. And they're getting cut off. They don't like it. They don't like it one bit. So I'm just going to be very, very cautious and careful. And here we are at a double bottom. So this is it. I'm going for it. We've come down and hit it again. Randy, watch me. Watch and learn. We're at 80 cents. Oh, I don't want these. Yeah, let's go for it. Let's go for the 60/20s. This is my risk. $0.75. My risk. Risky, 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 risky. Big words, risky. Risky, 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 risk. Please hold the double bottom, break out of this nest. I'm at 600,602. You better break out. I don't know what to do. Blanket. No, ain't gonna do it. Okay, I'm just gonna a few more seconds. Risky, risky. That's the name of the game. I'm the only one to blame. Come on, bitch. Yep. Ain't gonna do it. Come on, baby. Bounce. What is that? I don't think it's going to do it.
Good inkling on the directional move. So for me, anytime it's between like 50, 55%, 45%, what it tells me as a technical trader is to just sit on the sidelines and look to trade the result, right? So the best trades I get sometimes are just sitting on the sidelines because we know that earnings can be a wild card. It can be like they can just say one thing in the conference call and it rips higher, a la Celsius last week, where initially the stock traded down and then they say, hey, we're going to buy out this company, we're going to grow again, and all of a sudden the stock goes up 50% almost on the day.
Blanket.
So with Salesforce, it's no bias, but then look to trade these levels, buy at 281 and short at 381.
Okay. Meanwhile, Kava shares under a lot of pressure this month, down about 23%.
Back to
I
even.
didn't realize the move in Kava in February, down about 23% this month, still up over 100%.
Still up over 100%.
What are your expectations for that report tomorrow afternoon?
Yes, I expect a good report from these guys. I think, again,
Nobody understands what I'm saying, I don't think.
The last earnings report, the stock gapped up to $172, and it's now trading basically at $100. So, again, a big drop from the last earnings gap up and reversal down to this $100 even number. I love even numbers in technical trading because they're levels where people...
You got to look back 3 years on these stocks and see, oh my God, this thing's up 300%.
On buyers, which means, again, the bias to me flips back to the upside, and you can see the gap fill right there at 100 as well. And so
They don't do that.
I'm a bullish into earnings on Kava. I think they're going to give a good report, and I think it's just sold off so much here that expectations, the bar has been lowered where we can actually see a good report.
So he says it's sold off so much. Or at 85.
Shares down 3.5%.
Oh, here we go. 95.
Down 20+% this month. Would you be a buyer on today's weakness ahead of earnings?
I would be.
I'm going to take profit because I don't trust this. We're at the 63 again.
Again, a major gap here at 100, the even number. I'm a buyer into earnings going into the next couple days.
Okay, I also want to ask you about Bitcoin, which you mentioned is also coming off today, now trading below 94,000.
Made $100.
Or actually, no, back above 94,000, around 94,400, but still quite a bit off the earlier all-time highs. I had two guests on Trading 360 earlier today who both had $200,000 price targets for Bitcoin by year end. Does the chart imply that to you? What specific levels are you looking at on the chart for Bitcoin?
Yeah, so Bitcoin's been in this sideways consolidation phase, and usually sideways consolidation can be bullish, right? But the problem is it's waiting for that next breakout. So we have a 180,000 high. That's that top dotted line across your chart right there. That's short-term major resistance, and then we have 92,000 below that, where we're now hammering on currently. And for me, it's looking at the chart.
He said Kava's sold out. So I want to go to the 3-year. I want to look at the 3-year. And I go, what? You're telling me this thing's up 300% and it's sold out? 250%, and it's what? $29, and we're now at 104, so that's 253, 260, 70% up. More than that, 300%. No, I mean, this thing can drop more to 67 and still be overbought. It'd be up 100% if it pulled back to 67. Citigroup maintains a target of 140. I mean, if the market conditions were better, I would swing it, but I ain't swinging this shit. Not till it hits 67. My opinion, it's overbought. But their opinion, they look at it as the year, well, we're down. If we talk about being a technical trader, I mean, it's down $70, $68 from the high, but it's up $29 from the, I mean, it's up $60 from the low. It's $70 from the low.
Meet resistance as it's on the verge of a pullback. What levels are you watching on the S&P 500 into the close, and then we can talk about some of the longer term levels.
Yeah, definitely. I mean, going into the close, we've got to be able to at least try to close at or above 6,000. And unfortunately, we had a nice little ramp up during the middle of the day, but we are starting to fade a little bit more, and you're starting to see buying flows actually creep back into the market, which is once again a little bit more bearish for now. And unfortunately, this is fading a little bit. So going into the close here, looking at 6,000, key area for us to be able to hold. If we break below 6,000, we do see accelerated selling taking place, 59.75, which obviously was an area for this morning that we were kind of looking at as well. Got fairly close, around 3 points away from it, 2 points away from it. Saw a nice little bounce here. So some buyers quickly stepped in. That's what those candles are showing early on in the session. We went, we flushed down, buyers came in, stepped in, tried to push the market higher, came back, retested. You don't really want to retest it again. That's not a really good sign here. So trying to maintain above 6,000 is going to be key. The technical level actually is 6,000, say 6,009. You can stay above the 50-day moving average. Technically, it's still going to put the bulls in favor for right now.
So 6,009. Meanwhile, S&P 500 at 6,009 right now. All right, longer term, what are the levels that are standing out to you?
Yeah, so longer term, what's actually very interesting is this candle. We have this, once again, that purple line to the downside here. That was kind of our resistance line that actually did show up to be a big force today, where it came as an area of resistance, unfortunately. And so we have this kind of squeezing, or this kind of very compressed candle for today. Let's see how it's going to be able to end up here. Is it going to end up as some form of a doji candle, meaning that the market had a little bit of a battle, but we pretty much closed at the same area that we opened at today? Or do we actually see any type of ramp into the close, or even a breakdown into the close? I really don't like this structure going into tomorrow, though, Caroline, because we have consumer confidence numbers coming out, and we know that a lot of the sentiment of the soft data has gotten a lot weaker over the last couple of weeks.
Correct.
And that trend's going to continue. Unfortunately, that could be a little bit more bearish when it comes to the market overall. We also have some other economic data tomorrow as well. You would really try to get above that range, get above that purple line, which is pretty much sitting at around 60, 40 or so. Getting a little bit more of that recovery, getting closer to the 20-day moving average if you're a bull, in order for us to sustain. And unfortunately, those indicators at the bottom, stochastics, which is in the middle there, still once again in its bearish formation. Even though we are getting close to the oversold portion there, maybe that's going to be a reset. But MACD is actually, you're seeing basically a divergence, a bigger divergence within the MACD, which is also bearish. So I would say it's kind of mixed right now. Bulls still holding the 50-day, but I don't really like the setup going into tomorrow or even just the rest of the week because the economic data is kind of skewed bearish, maybe outside of PCE.
All right, Kevin Green sounding a little bit cautious. Meanwhile, Hims and Hers out this afternoon with earnings. I know we're going to hit on that one in the panel, but just from a technical perspective, because shares are up about 3.5–4% today, but it's been a really wild ride with huge swings to both the upside and the downside for this name. What stands out in the chart ahead of earnings?
Yeah, it's very erratic, and obviously we had this kind of blow-off top type of candle last week where the stock hit $72.98 before kind of pulling back, and that's pretty much what we're seeing right now. As you said, it's up around 3.5% today, but it seems like 3.5%.
So I called a big pullback on Hims when earnings come out because of the run. I mean, this is a 90-day chart. It was at $25, $24. And run all the way to 72. And we had a big sell-off of it on Friday. I think we could come down one more time and be a very strong buy at 34.30. But this has been pumped. I mean, hard. Just up too much for my taste. 300%, 350% in 90 days. Hello?
Time trying to price the stock as far as implied move over the last 2 weeks or so. And once again, if you get enough enthusiasm from retail traders, especially on the bull side, this thing can run.
No, not the retail.
Kevin Green, we'll chat with you in a bit for earnings panel. Thanks so much.
Don't insult my integrity, Kevin.
Next, we'll take a closer look at the downward trends in the U.S. dollar and Treasury yields as the threat of tariffs continue to hang over commodity markets. More Market on Close on Schwab Network after this.
I love you. I love you a lot. I went and played pool with my nephew yesterday. It was horrible to watch. And I wasn't the best. I mean, that's been like 20 years since I played pool, and longer than that. I mean, I used to go every single day after high school. We'd go out of school, we'd load up in the car, go down to the pool room and rent a table, and couple dollars, be down there for an hour. So I went in there yesterday, and it was $5 a piece for an hour, or maybe 5 or 10. It was $5, and I ordered a couple beers, and I got him a Sprite. Then I went to go pay my ticket. And I gave the waitress a tip of $5. You know, good tip. And I go up there and I get ready to pay out, and I'm signing my card and all this shit. And he said the total's going to be $33. And I said, that sounds good. And I signed it, and I signed for $43. It left 30% tip on the son of a gun. And I said, what's this? Oh, you got to go on down the line here. I said, well, I didn't hit nothing where I wanted to have any tip. It automatically gave me a 30% tip. And I said, what the? I said, you people. So I ended up paying $43. He was going to fix it, and I said, just don't worry about it. I'm pissed off.
Are you a long-term investor? Our investing webcast series breaks down different investing styles
So they end up getting a 35% tip and doing crap shit, just bringing me 2 beers.
You can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Here's the 1, 2, 3 on the SPX. Oh, it is right there, boy.
Empower your portfolio with the Schwab Network. Schwab Network is available.
I ain't got much time to trade it.
Anywhere on any device for free.
There it is. 1, 2, 3.
Welcome back to Market on Close. I'm Caroline Woods and for Oliver Rennick. Let's bring in
I'll sit it out.
managing partner of KCAM Financial, to take a look at the markets and some commodities as well. Dan, thanks so much for joining.
Hey, Caroline. Thanks. Yeah, no problem. Thanks for having me.
Great to have you. All right, so let's talk about your view on this market right now. Looks like the NASDAQ sell-off is picking up some steam here, but overall, Russell off the lows of the session, S&P only down about 0.2%, and Dow holding on to some gains, actually, up about 0.3%. That's about 116 points. How are you looking at this market right now?
You know, it's, to me, you still see this rotation that's taking place underneath the surface, Caroline, and that's something that has really begun, you know, it started to unfold at the end of December and continues in the first 2 months of this year. And I think that's going to be a theme throughout this year. I do think that we're going to see mean reversion in some of the areas that have experienced significant outperformance the last couple of years. And that appears to be what's unfolding once again today, as the Dow is holding up. You're seeing those defensive sectors holding up relative to some of the other areas, particularly the tech sector and the semiconductor sector, to be parse it out even further. Yeah, disappointing, I think, in the fact that we were unable to hold the gains outside of the Dow today, and we are now drifting back down towards the lower end of the range here after yesterday's Friday sell-off. Doesn't feel like a good setup for the rest of the week.
Okay, so if that's kind of what we've been seeing anyway, would you be comfortable putting money to work right now, or are you just sort of sitting out and waiting to see how this unfolds?
I mean, we are looking for opportunities, and from a defensive standpoint, looking for opportunities, and we're seeing relative strength. You know, that's kind of what we base a lot of our decision making on, and you're seeing it shift towards areas that have been underperforming the last couple of years. So that's our focus right now. That we do feel that there's going to be this continued mean reversion. I think you and I spoke about this last week. Equal weight is one of our themes as well. So there are some opportunities here. But I think when you look at some of the high flyers, we're kind of staying on the sidelines with some of them and actually reducing some of our exposure.
Okay, all right. Meanwhile, 10-year yield moving lower once again today, now trading below 440. What does that imply to you? What's your outlook for bonds?
Concerned about the economy is what it implies, and I do think that we're going to continue to see yields moving lower as some of the data shows that the consumer is continuing to be challenged at the current time, given the uncertainties and also just some of the other dynamics within the economic structure. And there's going to be a reorganization based on some of the initiatives by the new administration that is yet to be determined on how that's going to impact price action moving forward. So, I think that when you look at what's happening here, that we're seeing yields now moving down to the lowest level in 2 months. The 2-year now is moving to the lowest level since early December, and I think that's going to continue. We're going to see yields move lower as the markets expect that the economy is going to slow some as we move through the first half of this year.
So what did bond investors need to know then?
Well, I think that you're going to see the short end of the curve. I do think you're going to see those yields on the short end of the curve continue to move lower. The back end of the curve is coming down. I know that the new administration is very focused on that 10-year. They're going to try to influence that. That's much more difficult to try to control. We're seeing it drift lower, but I do think that you're going to see the yield curve steepen, and I think you're going to see shorter dated yields coming lower in the next few months, given the fact that the Fed will start to possibly even consider cutting this summer if we do see economic weakness over the next couple of months.
Okay. Also want to get in your view on the dollar right now, because it was under pressure, actually turning a little bit higher right now, but still off the highs. What's your outlook there?
The outlook is that we're going to go lower, Caroline. So I think that 106 seems to be the line in the sand right now. That was the recent low. We're holding at 106.5. Any breach below 106, I see us going to 104.5 before
On what?
it finds some meaningful
The US dollar.
support. And it just feels like if we're going to continue to see yields moving lower, the economy potentially slowing here as we move into the first half of this year, consumer losing a little bit of confidence, that does not necessarily bode well for the dollar. Couple that with, again, the debate about the debt structure. And that's why I think gold continues to shine, even, as we see other things moving in, other metals coming under some selling pressure. Gold still holding up and going to new all-time highs today.
Yeah, I was going to ask you about this new all-time high for gold, but gold was hitting new all-time highs when the stock market was hitting all-time highs as well. So is this a safety play or what?
Well, it's a little bit of both. I mean, gold can, morph into different things. And the bigger catalyst here, Caroline, is the fact that the central banks across the globe, we know they're accumulating gold. There's even talk about them flying gold back into the U.S. in the last couple of weeks. So, the idea is that the dollar is going to face some heavy headwinds in the next couple of years, possibly, until we get this debt structure under control some way, shape, or form. And if that's going to be the theme, then I would expect that gold's going to continue to show outperformance. And if yields come lower, then that's even going to make gold even more attractive.
All right, we'll leave it there. Dan Deming, Managing Partner, KKM Financial. Thanks so much.
All right, thank you.
Coming up, let's close out the market session and get the big picture from the team at Charles Schwab. We'll be right back.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power.
Well, ooh, look at that.
Investor Checking, you get the award-winning features of our checking account.
This is not good.
Plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds
They call them dumps, big, massive
Cash
dumps.
move to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern, Morning Movers, only on Schwab Network.
Opportunities don't stop when the market day ends, so neither do we. Schwab gives you round-the-clock access to over 800 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
No politics, no noise. From bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Market on Close. I'm Caroline Woods and for Oliver Rennick. Just a few minutes left.
You got your 6,000, Randy.
Precise. It's time for the big picture. Let's welcome in Lizanne Saunders, Chief Investment Strategist at Charles Schwab. Lizanne, thanks so much for joining
Damn
the show.
throat's tickling me.
Hi, Caroline. Thanks for having me.
So, Lizanne, the rebound attempts not working out.
The Bears are in charge.
Holding on to about an 80-point gain right now, but
We
the other
gotta
majors
play it that
in
way.
negative territory. At least the losses are a little bit more modest, though, than Friday's.
I'm gonna do a video after I get done tonight.
Still intact, because at the end of the day, the S&P is still only 2.5% away from all-time highs.
It is.
I gotta get some more water. Something tickle my throat. I'm gonna do a video tonight on the SPY and the SPX and try to show you where my supports are gonna be. You know, I don't use too many indicators. I just use chart patterns and moving averages. For example, well, we don't want that chart. SPX. That's a SPY. So this is the SPY. This is 21 hour. You see we're almost down to my low support down there. I'm going to go to the weekly. And we've got the 21 right here. So the SPY could easily stop here at 590.58. Have one more black crow. This is on the weekly. One more week of red, or maybe one big fat candle down to the 21. And then if it doesn't hold, we got a big, $50 dip to the 63. And here's the daily. And I still think this is way overbought. So on the daily now, we did hit the 63. And we hit the 63 here. We almost hit the 63 here. We hit the 63, the 63, the 63, the 63, the 63, the 63. So for now, that's a solid support. We could come in tomorrow and we could have us a nice little bounce to the upside, back to the 21. Just looking at the daily. And the same thing with the SPX. The SPX is at support here. We're at the 63, and that could be a solid support. That's a triple bottom off the 63. We had a bull flag here, and we had a real nice bounce. The only thing we got here is a bunch of candles, 3 red candles for 3 days in a row. So the 63 here could be your support level. If that doesn't hold, then we could easily drop down to a head and shoulders, a pivot point area right in here, right around 558.7426. Now on the weekly, we could hit the 21, and that'd be a solid support. We hit the 21, we hit the 21, inverse head and shoulders, we hit the 21. So all year long, and last year, we kept bouncing off the 21. So if they want a serious pullback, we could easily come down and hit the 63, if that's what they're looking for. And we've had one hell of a run on this stock. From 34.91 all the way up to 61.47, and it's still way overbought. Then we have a 1, 2, 3 right here. Just draw a trend line. It's real simple. From that previous high on that body right there to that right there. And that would be almost a solid support there at 5,800. So that's another 180 points down. And we could do that here this week. That could happen this week. And be a very strong buy back to the upside. And that'd be a double bottom here at 58.78.67. So that looks, tight. That looks pretty tight. And that'd be a 1, 2, 3. Also, so you got a double bottom. You got a 1, 2, 3. And you got a yin yang. Previous high, previous low, previous low. See how it retested? And we could come down and retest that again. And it can bounce up. So that's it. I got to go do a couple errands. I had a good day today. I could have had a real killer day today, even on a shitty day. My big mistake is I seen them always clean. Bye.
Hello?
Yeah, what's up, baby?
Hey, good afternoon, Gloria here. So I'm
Gloria.
here to help you with some exciting new benefits recently announced in your state, which can reduce your financial burden. Just to confirm your eligibility, are you under the age of 65?
Yes, but I gotta go. I'm talking live on YouTube. You there?
I'm a real person. Maybe it's
I,
the noise behind
I didn't ask you.
the annual enrollment period.
I didn't ask you if you was a person.
Care, and everyone is busy in checking their eligibility.
She says I'm a real person. I said I didn't ask her if she was a real person or not. I knew she wasn't. A friend of mine got 100 calls like this the other day, he said. Driving him nuts. I don't know if I'm taking too much of a liking to this AI or not. So yeah, I mean, that's a solid support right there. And then you got the 21. So, you know, I've been waiting until we hit the 21 to maybe have a real good $2,000 contract day. Today they run from 250 all the way up to 900 and something. So I'm going to get out of here and do my thing, and everybody have a good day. I'm going to do a video when I get back, so be sure to watch it and say you watched it and hit that like button. I'm just going to do what I kind of talked about right now and just kind of teach a little lesson here about support levels, how I look for them. And I don't have any indicator, just the moving averages and bodies of candles. And they're pretty accurate most of the time. I called all these dips here. So I'm saying we could come back and do it again, and that'd be a triple bottom, yin yang. I mean, there's a lot holding that up if it pulls back and hits that mark. And they want 10%. I heard 10% today. I've been saying 6 from the top. And they'll start buying into it. That's what the fat cats look at. And they're not, they don't appreciate, I mean, you gotta, what freaks me out doesn't freak Wall Street out. The open borders freaked me out. The 14 trillion that was spent in the last 4 years freaks me out. But they call it stimulus. Why do you need stimulus if the market's so, if the economy's so great? And it can turn on the dime on you. But I'm just hearing so much negativity off the fat cats. They know it. They know the market's been up 45% in 2 years. That's just when an average year is 7. I've been saying it for 2 years. I said, this is crazy. This is nuts. Markets don't run like this, but they printed $14 trillion. And it took Obama 8 years to do that. And he only printed, his budget wasn't 2 trillion over every year. His was like 1.5 plus the 6 trillion, 5 trillion that he printed in the 8-year period. Biden did that in half and plus more. But that's where and that don't bother them, it bothers me. The wars bother me, but it doesn't bother them. They don't care about the death, as long as that money's being printed. And then I disagree with them about the human trafficking for the last 4 years. They say it's going to hurt the economy, you know. And there's labor out there, that's for sure. I mean, but I guarantee most of the bunch will never work in their entire life. They'll be on the welfare system. Maybe 1 or 2 million out of the 12 to 15 million that crossed over. Maybe, I don't know. I'm just saying that. Bill Clinton, when he was in office, he had what you call welfare reform. And if you didn't go out and look for a job after your benefits were up, you'd be cut off. But that's changed. You know, we went into this share the wealth. And if we weren't going to do it, and then they used color of one's skin or gender to push their proposals up. So it's really weird, but we have to live with it. I'm going to get out of here and do my thing. I got to go clean some blinds and check out some tiles. I want to get that off my chest so I don't have to worry about it. I got about an hour and a half to do that in. So we'll see you later. Thanks a lot, everybody. Thank you, YouTubers. Thank you for sticking around and not 9-ball, 8-ball. I did play. I've played some 9-ball, but not much. I'm an 8-ball guy. And the tables look so big. My accuracy was down. I had probably 20 good shots out of 7 games. Good shots, I mean, to the bank shots. I had to teach my nephew how to rack. I had to teach him how to peel potatoes too. I'll teach him everything. So we'll catch y'all later.